So when you talk about the most important chapter of your entire indirect taxation and interest, ITC. ITC is basically is very simple. If you see the provisions, you'll have section 16 which talks about when to take credit, 17 when not to take credit, block credit, proportionate credit concept is not applicable at your interlevel. So your proportionate ITC will not be seen at interlevel. Then section 18 special cases of ITC. Very rare cases, very rare cases. When you are selling your capital goods, what will happen? When you are switching over from regular scheme to composition scheme or composition scheme to regular scheme, what will happen? When you are taking new registration, what will happen? When you are cancelling your registration, what will happen? Etc. 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 That is section 18. So 16, when you take the credit. 17, when you cannot take the credit, block credit. 17 also talks about proportionate credit, which is not there for you. And 18, special cases. 18 is special cases. ITC in special cases. Now, directly we'll see the conditions for you to take the credit. Basically, prima facie conditions for you to take the credit. This entire chapter, the focus is on purchases. ITC and RCM are the chapters where you focus only on your inward supplies. Where you focus only on your, so focus is entirely on your inward supplies. On your inward supplies. So do not forget the fact that entire focus shifts only and only to your inward supplies. Now, there are conditions for you to take the credit which will be there in your question paper, and you have to see the question and analyze whether I can take the credit or not. First, you should be a registered person. Only a registered person can take the credit. Second, you should be using those goods or services in course or furtherance of business. Used or intended to be used in course or furtherance of business. Written, first is registered. Second, those in goods and services should be used or intended to be used in course or furtherance of business. Business connection. The items that you are purchasing should have business use in core or furtherance of business. Third, you can get your credit in your electronic credit ledger only when you file your return. In your books, you have 1 crore credit, but that credit will be taken to your return, taken to your portal, electronic credit ledger only when you file your returns. Only when you. So if you have 1 crore credit in your books of accounts, but you have not filed your GST or 3B, you will not get the credit in electronic credit ledger. You should file your returns. You should file your returns. Registered, business, return, and one more important condition, you should pay your output tax. Only if there is output tax, you will get the credit. Only if there is output tax, you will get the credit. If you are paying output tax on your outward supply, 18% supposing, then you can get the corresponding input tax credit. So if you are paying output tax, you will enjoy input tax credit. If on your outward supply, one of the outward supplies say 0%, you are not paying output tax, you will not get input tax credit. But there is an exception for your exports and supplies to special economic zone. Though the rate of tax on that item may be 18%, but when you are exporting or supplying to SEZ, you will not pay output tax. If you are exporting or supplying to SEZ under letter of undertaking, though the item rate is 18%, but you are not going to pay output tax, still you will have the credit. And what are you going to do with the credit? You will get the refund of credit. It is called a zero rating. Zero is different from nil in GST. Nil means item rate itself is 0%. Second example. Second example is a case of nil rating. The product itself is having 0%. Third example is zero rating. Exports and supply to SEZ. Exports and supply to SEZ. You don't pay output tax, but still you will get the credit. Though the item rate is 18%, but still you will not pay output tax and you will get the credit. Not only that, that credit you will get the refund. So your output, you don't pay anything. Your input, you get the credit, also get the refund. So net effect, there's no tax on output. The tax on input is refunded back. The tax on input is zero tax in India. That is the reason it is called as zero rating. That is the reason it is called as zero rating. So second was the classic example where you're talking about nil rate. Third is a classic example where you're talking about zero rated. For max, nil and zero means the same. For GST, nil is different, zero rating is different. In case your product itself is having nil rate, no output tax, no credit. Cascading effect will be there. No output tax, no credit. Your purchase may have tax, but you cannot take the credit. You cannot take the credit. When you're talking about export SEZ, the product may have a tax 5, 18, 28, etc. 12, etc. But still you will not pay output tax under LUT. You can still take the credit. Not only you can take the credit, you will also get the refund. You will also get the refund. So your output tax you never paid. Input tax you had, you took the credit, you get the refund. So net effect, input also becomes zero. Zero rating. Zero rating. Entire transaction right from the beginning becomes zero. So tax in India becomes zero. Why? The product is going outside India. So India to USA, which country has got the right to collect tax? India to USA, which country has got the right to collect tax? So India should not retain any tax. So output tax zero, input tax it was there. You take the credit, get the refund. Net effect input tax also becomes zero. So output zero, input zero, zero tax in India. Zero tax in zero rating. Zero rating. Clear? So this is one of the condition, though not specifically mentioned. Condition number 1, registered. 2, business. 3, file written. Only then you will get the credit in credit ledger. 4, pay output tax, get credit. No output tax, no credit. But zero rating, don't pay output tax, still you will get the credit. So that is one of the criteria. Now, that for the time being we'll ignore it. Now condition number 4, receive the document. 5, receive the good service. Receive the document, receive the good services. 4, document. 5, good services. What are the document on the basis of which you will get the credit? Tax invoice, debit note otherwise called as supplementary invoice, self invoice in a very rare case where you are talking about RCM and the supplier is unregistered and the supplier is unregistered. ISD invoice, head office giving the credit to branch office. Discuss in final level. So I'm not going to discuss more in detail. Bill of entry, customs document when you import the goods. When you import the, so 4th and 5th not so relevant. You will not get questions more because these items are discussed at final level. So main documents, tax invoice, debit note or supplementary invoice, self invoice in case of RCM where the supplier is unregistered, ISD invoice, head office giving the credit to branch office, input service distributor invoice, bill of entry when the goods are imported. When the goods are, now when you get the credit, when you get the document, you should see all the contents. If I tell that there is an invoice, ICA has given this question, there was an invoice received by you, but it had no signature. Can you take the credit? Can you take the credit? Yes. Emotion. So when you talk about an invoice which is not having signature, can you take the credit? Yes. When as a customer you are getting the invoice, supplier is required to put signature. If he has not done something, that is his mistake. You get an invoice where he has not put quantity. Can you get the credit? Yes. You have got an invoice where he has not put the HSN, Harmonized System Nomenclature of the goods or services. Can you get the credit? Yes. As a recipient, all you have to check is 5 important ingredients. GST number of supplier, GST number of recipient, description of goods services, what is the item, value, tax, place of supply if it is interstate supply. 5 things. GST number, both supplier and recipient. Then description, what is the item? HSN not relevant. Value, tax, and place of supply. If it is interstate, if it is intrastate supply, that is also not required. If it is interstate supply, if these 5 elements are there, sufficient for you to take the credit. So emotion will shout, signature not there, no credit. Answer is take credit. So I has given all these points. In few questions, signature not there. Out of 5 lakh rupees credit on invoices, one invoice where tax was 1 lakh rupees, signature was not there. So will you take credit of 5 lakh rupees or 4 lakh rupees? Entire 5 lakhs. Entire 5 lakhs. Document. Then receive the goods and services. Receive the goods and services. Now receive the goods and services. Please understand that when you're receiving the goods and services, you should receive. Only then you can take the credit. You have to satisfy both the conditions together. Supposing invoice is received in 30th April, but you get the goods services on 3rd May. You have to satisfy all the conditions together. So when you can take the credit? Only in May. Only in May. Sir, April return I will be filing only on 20th May. Can I take the credit? No. Your eligibility comes only in May. So you can take the credit only in May return. You can take the credit only in May return. So invoice was received on 30th April, but goods services on 3rd May. You have to look at the question carefully. If the question is from April month's point of view, you cannot get this credit. Because credit will be taken only in May month. But if the question is May month, then you will include it. Because you get the right to take credit only in May, and the question is from May month's point of view. Question is from? So be very careful when you're reading all these points. May month or April month. Eligibility is only in May, whichever is later, because you have to satisfy all the conditions. Now, there is one plus point, one is negative point. Supposing, throughout this chapter, I will be the recipient. I ask you guys to send the goods to me, bill the goods to me. But I tell that don't send the goods to me, send it to someone else. So send it at X place to someone else. Bill to me, invoice it to me, but ship to my job worker, my customer, someone else. Who can take the credit? Whether I can take the credit or that third person can take the credit. Only I can take the credit. But did I receive the goods or services? No. Receipt of goods or services by third person is equal to receipt of goods or services by me. Receipt of goods or services by third person is equal to receipt of goods or services by me. I can take the credit. I can take the credit when they receive it. When third person receives it. Clear? That is one advantage. This is applicable for both goods and services. One disadvantage, one negative point. When I get the goods in installment, this is repeatedly asked question by ICA. When I get the goods in installment, I have purchased a big plant and machinery for 10 crores plus GST. I get the invoice in, so I'll change the example, 100 crores plus GST. I get the invoice in April, but I get the items in lots, April month, May, June, July, August till December. So I get the last lot when, government is government. Government tells supplier, you have removed the first goods in April. So you pay entire output tax. You pay entire output tax in April month because for supply, time of supply will be April. Entire output tax on entire 100 crores, which is 18 crores, you pay in your April return. You pay in your April. This is based on what? Time of supply for supplier. On or before removal. On or before removal. This is for supplier. To me. No. You have received the goods in installment or lots or CKD or SKD format, semi-knockdown or completely knockdown format. You can receive it only when you receive the last lot or installment. Entire 18 crores rupees credit I'll get only in December. Supplier will pay entire 18 crore tax, output tax in April return, but recipient will get entire input tax credit 18 crore rupees only in December month return. Only in? Clear? This is negative. This is negative. So I have addressed not only for recipient, I have also addressed for your supplier. That was about output tax. That was all about output tax. Clear? So what are the 5 conditions as of now we have discussed? First, registered business return. Forget about that output and all. That is also important condition, but that is not there in the list. That is given otherwise. Document good services. Document. And 6th condition, no depreciation on GST portion. No depreciation on GST portion. If you have taken the depreciation even on GST portion, no credit. So this is again one of the ICA checks all these conditions. Here and there they check all the conditions. Right? So here if you are purchasing a plant and machinery for 100 crores plus 18 crores, I am continuing this example. 100 crores plus 18 crores. If at all you're claiming depreciation only on 100 crores, income tax depreciation only on 100 crores, which means you're claiming on basic price. You claim on basic price, not a problem. You'll get the credit on 18 crores because you have claimed depreciation only on price, not on tax. But if you claim depreciation on entire value, including GST, so depreciation you can claim, but if you claim on tax portion, then you yourself have said that it is my cost. You yourself indirectly are telling that it is your cost. You will not get the credit. You will not get the credit. Don't think that you cannot claim depreciation. You can claim depreciation on 100 crores. The question is not about 100 crores. The question is about 18 crores. If you don't claim depreciation on 18 crores, you claim only on 100 crores. Then 18 crores input tax credit you will get. But if you claim depreciation on 100 crores plus 18 crores, including GST element, then you will not get any ITC. So that is this particular condition. So what are the 6 conditions that you have seen? 1. Registered, business, return, document, goods services, depreciation on tax, then fraud. If supplier has done fraud and he is trying to pass you the credit. If supplier has done fraud, supposing supplier and you had an understanding where he was only paying 5% output tax, you were taking 5% input tax credit, but real rate was 18. So now supplier is caught and he is paying differential 13%. He is paying differential 13% output tax, and he tells that anyways you can enjoy the credit. I am passing you the invoice, supplementary invoice, debit note. No, you cannot take the credit. If supplier has done fraud, fraud means officer has found it out. Then he is passing that 13%. Then he is passing that, recipient cannot take credit. If there is no fraud, recipient can take the credit even of 13%. Genuine mistake. They really thought it is 5. Later on, they understood that it is not 5, it is 18. Supplier paid differential 13 and gave a debit note to customer. Can customer take the credit? Yes. But if supplier has committed fraud, then paying the differential 13%. Output tax. Supplier will pay output tax. Can recipient take the credit of the 13%? No. Fraud cases, supplier cannot pass on the credit. So what are the conditions that we have discussed till now? Registered, business, return, documents, goods services, depreciation on tax. Supplier has committed fraud. And he is trying to pass on. He cannot pass on the credit. Next is time limit. What is the last date for you to take the credit? It is 30th November of next financial year or actual date of filing of annual return of that financial year, whichever is earlier. So when you talk about whichever is earlier, supposing you're talking about a timeline. This is given here. Supposing we are talking about invoices of April 25. And debit notice of Feb 26. Debit note will be against invoice. So that debit note is against invoice of financial year 24-25. When you are seeing debit note, see debit note independently. Do not see when the original invoice was given. See debit note. So don't see the corresponding. So don't see that. That year will be, because this debit note is for financial year 20, but invoice was given in. Forget about that. Only see the debit notes month. Now I have taken one example of beginning of the financial year, April 25. Another example of end of the financial year, Feb 26. Now understand, starting time limit for them to take the credit, eligibility will be different, but the last date is same. When you talk about financial year 25-26, you have not taken the credit on April 25 invoice or Feb 26 debit note. You have missed the credit. What is the last date? First date was different. You have missed the invoice. You have missed the credit. What is the last date? That is, what is the last date? 30th November of next financial year. What is 30th November of next financial year? 30th November of 2026. Because 25-26 means 26-27. So 30th November 2026. Or actual date of filing of annual return for that financial year, which is 25-26. Assume that in one case, you have filed your annual return on 20th December 26. So you compare 20th December 26 or 30th November 26. Which is earlier? Which is earlier? So you can take on or before 30th November. And in the other case, supposing I tell that annual return was filed on 10th October. Annual return was filed on 10th October. You compare with 30th November. Now which is earlier? Which is earlier? 10th October is earlier. So depends. In the first example, 30th November is freezed. In first example, we assume that annual return was filed on 20th December. So 30th November or 20th December, which is earlier? 30th November. Here you got 30th November as the earlier. In the second case, I assume that annual return was filed on 10th October. So 10th October or 30th November, which is earlier? So in this case, 10th October is the answer. And in this case, 30th November is the answer. Both are two separate questions. Both are two separate. This is how you have to find it out. But. Now, important point. When I tell that 10th October 2026 is the last date for you to take the credit, it doesn't mean I can take the credit in October return. When I tell this is the last date for you to take the credit, I should get my credit in credit ledger on or before 10th October, which is not possible in October return, which is possible by way of September return, also not possible, because September 3B I can file only after 14th October, once the 2B is generated. So it is possible only when I am filing August return. My August 2026 return filed on or before 10th October. So why, sir? Repeat it again. When I tell last date is 10th October, it doesn't mean October return. It means credit should be there on portal before 10th October. How credit will come on portal before 10th October? By filing the return. So it is not possible by October return. So previous month is September is also not possible, because September month 3B I can file only after 14th. And I am standing on 10th. Not possible. So which is the return? August return filed on or before 10th October. And when I tell that last date to take the credit in second case is 30th November, it doesn't mean November return. It means October return filed on or before 30th November. October 2026 return filed on or before 30th November. Clear? ICA only stops at last date, but I have to explain the real meaning. ICA will only either take the answer as 10th October 26 or 30th November 26 in the first and second case respectively. But I am telling the real meaning of this last date. Are you guys clear with this understanding? There's one special time limit which is related to your suspension. So that registration chapter will take care of it. Normal time limit is over. So what are the points that we have discussed till now? What are the conditions that we have discussed till now? Registration, business, return, document, goods, services, fraud by supplier. You cannot take no fraud should be done by supplier. No depreciation on GST, time limit. Now, for me to take the credit, I should get the credit in my 2B. Okay, first I'll see condition number 9. Rather, I'll not take condition number 9. I'll take condition number 10 for the first time. I'll explain why. Right. I should get the credit in my 2B. Supplier will file GSTR1 or IFF. Immediately GSTR1 or very rarely IFF. Invoice furnishing facility, which is nothing but GSTR1 only, sales details. Customer will automatically get in GSTR 2B. In GSTR, I will get in my GSTR 2B, and 2B keeps changing. I can take the credit only if it is reflecting in my GSTR 2B. Otherwise, I will not get the credit. Now, to understand 2A and 2B, I am the supplier, I am the recipient, you guys are my supplier. Supplier 1 has supplied me for April month. And April month, supplier 1 has filed GSTR 1 IFF on 10th May. That is on time. And for April month, supplier 2 has filed GSTR 1 or IFF on 20th July. That is after due date. The last date is 11th of next month, GSTR 1, or 13th of next month, IFF. So April month, GSTR1 means 11th May, IFF means 13th May. So in one case it is on time, one case it is after time. Now you guys as supplier will file GSTR1 or IFF. I will get that on my 2A as well as 2B. As a recipient, I'll get in my 2A as well as 2A keeps changing, dynamic. 2B is static. Now, when I download my 2A and 2B, assume that I'm downloading 2A and 2B on 11th of May, on where my supplier 1 has filed GSTR 1 or IFF, I will get both in my 2A and 2B of April month, supplier 1's transaction. In my 2A also, supplier 1 purchase will be there. In my 2B also, supplier 1 purchase will be there. Right. Now, after supplier 2 has filed his GSTR 1 on 20th July. So, if I download my 2A and 2B on 21st July, I will get supplier 2 information in my April month's 2A. 2A keeps updating. The moment supplier 2 files his GSTR 1 IFF, it will get updated in 2A. It will get updated in. So when I download my April month's 2A on 11th of May, I got only supplier 1 transaction. When I download on my GSTR 2A on 21st of July, I got both supplier 1 and supplier 2. I am downloading only my April month's 2A. I am downloading only my April month's 2A. But when I download my 2B of April month, 2B of April month on 11th May, I'll get supplier 1's transaction. Even if I download my April month's 2B on 21st July, still I'll only get supplier 1, 2B will freeze on 14th of next month. Whenever I download, I'll only get supplier 1. Whether I download on 11th May or 21st July or December or next year, after 2 years, after 3 years, the moment I download my 2B of April month will always show only supplier 1. Will always show only. So what about my supplier 2? It will not be there in my 2B of April. It will be there in 2B of my next subsequent months. It will not be in 2B of April. It will be in 2B of some other month. Now what is that some other month? When supplier 2 has filed his 2B. When supplier 2 has filed his GSTR 1 IFF. When supplier 2 has filed his GSTR 1 IFF. Now July is after due date of June, which is 11th or 13th of July, but before due date of July, which is 11th or 13th of August. So this transaction of supplier 2 will be reflected in my 2B, not of April month's 2B, but of July month's 2B, but of. Got that? Sir, what if this 20th July was 10th July? What if this 20th July was 10th July? I'll get in which month's 2B? I'll get in because it is before due date of June GSTR 1 IFF. So I'll get in June month's 2B. What is the relevance of 2B, sir? For the first case, I can take the credit only in April month. For the second case, I can take the credit only in July month or June month, depending on the question. Clear? This is how I will take the credit. So I'll get the credit only if it is there in my 2B. Only if it is there in my 2A is not relevant. What is relevant is 2B. 2A is dynamic, keeps changing. Today I download, I'll get a different data. Tomorrow I'll download, I'll get a different data. But 2B is static. April month's 2B, whenever I download, I'll get the same data. Static. What is relevant for ITC? 2A or 2B? 2A or 2B? So I'll get the credit only if it is there in my 2B. Right? The question may be from April month's point of view. And one of the item is reflected in June month's or July month's 2B. Can I take the credit? No. If the question is from June or July month's point of view, sales purchase was made in April, but I get in 2B of June or July months. Will I include in credit? Yes. You have to look at the month. If the question is from April month's point of view, in April month, I will not get the credit because it was reflected in 2B of July. In April month, I will not get the credit. If the question is from July month's point of view, I purchased in April, but it is reflected in 2B of July. Will I include in credit? Yes. Look at the question. Look at the question. Then decide. Right. So now what are the conditions that we have discussed? 9 conditions. Registration, business, return, document, goods, services, receipt, no GST, no depreciation on GST, no fraud by supplier, time limit, to be. These are the 9 conditions for you to take the credit. These are the 9 conditions for you to take the credit. So what are about the next 2 conditions? They are not about taking the credit. They are about reversal and reclaim. They are about reversal and what are the conditions that you have to be worried about for taking the credit? 9 cases. So what about the other 2 cases? Condition number 9 and 11. It is not about availment. It is about reversal and reclaim. So question will also touch this. Supposing I purchase a product on October 11th October invoice date 11th October is my invoice date, but I missed the credit in October month for some reasons. I took the credit in next month. Can I take it? Yes. Supposing I got the goods only in November, or I satisfied all the conditions in October, but I missed the credit. I can take the credit till November 26. October 26 return filed on or before 30th November 2026. I have a lot of time. I have lot of time. I miss the credit. I am taking next month. Can I take? Yes. Now I made the payment for that particular invoice. The invoice value was 1 lakh plus 18,000. I made the payment of 1 lakh 18,000 on 22nd December 2026. 22nd December 2026. Now understand that I have already availed the credit. When? I have already availed the credit in November month. Assume that why I did not take the credit in October, it might be because in my 2B it reflects only in November. So I took the credit in November, return 18,000. Now 180 days, did I make the payment? No, I did not make the payment. 180 days will be calculated from where? 180 days will be calculated from invoice date. Will be calculated from, or whether I take the credit in October or November or December, 180 days will be calculated from, 180 days will be calculated from. So 180 days, if I start calculating from invoice date, this is very important point. 180 days will start from, so 180 days will get over on 9th April 2026. 9th April 2026. Right, it will start from invoice date. It will start from, did I make the payment? No, because I made the payment on 22nd December 2026. So what will happen in April return? In April return, I have to reverse the credit 18,000 with interest. Interest calculation we'll see in payment chapter with interest. I have to pay 18,000 with interest. I have to pay the tax, reverse the credit 18,000 with interest. Right. Finally, I make the payment in December month. 22nd December 2026. I have purposefully given this date. Because for financial year 25-26, the last date for me to take the credit was October return filed on or before 30th November 2026. October 26 return filed on or before 30th November 2000. Now please understand, time limit is only for availment. Time limit is not there for re-availment. Time limit is there only for availment. Time limit is not there for re-availment. Can I re-avail the credit? Yes. But when I re-avail, I can re-avail only 18,000. Interest is my cost. I cannot re-avail that. Interest is my cost. This condition is not for availing. When I get the invoice, I'll take the credit. I'll not even worry that I should make the payment in 180 days or not. First, I'll take the credit. First, I will take the, if I make the payment in 180 days, superb, nothing to do. If I don't make the payment within 180 days from invoice, reverse with interest. Reverse with, and once I make the payment, re-avail, but not interest, but not There's no time limit also. There's no time limit also. Is this clear? This is clear? So this is 180 days payment. By whom? By recipient to supplier. By recipient to of what? Of price and tax. Not only of tax, of price and tax. Now, when you talk about the last condition also is in the similar way. This is talking about again, it's all about reversal and reavailment. Supposing supplier has made me supply in April month. Supplier has made me supply in April month. But it reflected only in June to be. So purposefully I am mixing other conditions. When as a recipient, when I can take the credit? April return or June return? I can avail the credit only and only in June return, 18,000, because it is 1 lakh plus 18,000. 18,000 I can avail the credit. Now, supplier has filed in his GSTR 1 lakh plus 18,000, but never paid the amount, but never paid the tax. In 3B, he has not shown this. Supplier finally paid the tax to the government. Supplier finally paid this tax to the government only in Jan 2027. So, supplier, what he did, he showed the sale transaction in GSTR 1 or IFF, but never reported it in 3B. So, payment was never made. Supplier finally made this payment of 18,000 tax to the government on Jan 2027. Now, initially, whether supplier has paid the tax or not, I will not be worried. IC will give supplier has not paid the tax. Don't worry. Whether supplier has paid the tax or not, I will take the credit. I will take the credit in the month eligible. In this case, April month was not eligible. June month it was eligible. Then I will wait till 30th November of next financial year. 30th November of. So, as the tax was not paid by the supplier on or before 30th November of next financial year, that is 30th November 2026. Now, in December 2026, I took the credit in June 25. I am reversing in December 2026 because supplier still has not paid the tax till 30th November of next financial year. In December 2026 return, I will reverse this 18,000 with interest. Interest calculation, payment chapter. Here interest will not start from the availment, interest will start from 1st December 2026. 1st December 2026. Again, interest calculation, payment chapter. Right. So, initially, the moment I get in my to be other conditions satisfied, I'll take the credit. 9 conditions satisfied, I'll take the credit. It did not happen in April month, it happened in June month, I took the credit. I will not be worried whether supplier is paying tax or not. But if till 30th November of next financial year, supplier still not paid the tax, I have to reverse 18,000 with interest starting from 1st December 26. Then supplier finally has paid the tax in Jan 2027. Can I re-avail the credit? Yes, I can re-avail the credit in my Jan 27 return, but I can re-avail only tax 18,000, not interest. Re-availment has got 2 special points. Re-availment, no time limit. No. And re-availment is only of tax, not of interest. Not of. Please understand 180 days criteria and your payment of tax by supplier criteria 30th November of next financial year is not for availment. It's not for, I say will confuse you and tell that for this invoice, supplier has filed in his GSTR 1 but not yet paid the tax. And the question is about April month. You take the credit. You take the, you have to wait for reversal till 30th November of next financial year. 30th November of, can you take the credit? Yes, you take the credit. These 2 conditions are about availment or they are about reversal and re-availment. 180 days. Recipient to supplier, price plus tax. And 30th November of next financial year, supplier to government, only tax. Look at the difference. 180 days, recipient to supplier, price plus tax. You have to make the payment within 180 days. And 30th November of next financial year, supplier to government, only tax till 30th November of next financial year. These 2 conditions are not for availment, they are for reversal and re-availment. Reversal and initially you will not check these 2 conditions. So how many conditions you will check for taking the credit? 9. These two conditions are not about availment, they are about reversal and re-availment. Reversal and re-availment. Right, and second special point, all the last three conditions. What are the last three conditions? 180 days, 2B, and 30th November of next financial year. They are not applicable in RCM. They are not applicable for RCM. All other conditions, they are applicable for FCM and RCM. What are the three conditions which are not applicable for RCM? Coming in GS2B, whether or not it comes in 2B, you can take the credit. 180 days, RCM not applicable. So you need not check whether the payment is made within 180 days or not. If it is RCM, pay by cash, getting credit, 180 days not relevant. 30th November, because in RCM, supplier will never pay tax to the government, it is recipient is going to pay tax to the government. Not applicable for RCM. Not applicable for, three conditions are not applicable for RCM. They are only applicable for FCM. All the other 8 conditions are applicable for RCM as well as FCM. RCM as well as FCM. Are you guys clear with this understanding? Out of total 11 conditions, 9 conditions are for availment. 2 conditions, 180 days and 30th November of next financial year, it's not for availment, it is for reversal and re-availment. Out of 11 conditions, first 8 conditions are applicable for FCM and RCM. Last 3 conditions are applicable only for FCM, not applicable for RCM. Are we guys clear with this entire understanding? Right? Are we guys clear with this entire understanding? This will not stop here. Because when you are taking the credit, question of ITC will not stop here. Availment of ITC, ICA will give in 2 parts. Supposing they are giving 5 line items. Out of 5 line items, 2 can be block credit. 2 can be, when it is blocked, will you check the conditions, 9 conditions? No. For balance 3, where it is not blocked, you will check how many conditions, 9 or 11? 9. 2 conditions you will not check for availment, they are for reversal and, so what are the 9 conditions that you will check? Registered, business, return, documents, goods, services, no depreciation on GST, no fraud by supplier, time limit, 2B. These conditions you will check for availment. 180 days payment by recipient to supplier of price and tax is not for availment, it is for reversal and re-availment. 30th November of next financial year, payment by supplier to government only of tax. Only of tax. It is again not about availment, it is all about reversal and re-availment. Reversal and, if at all, within that time limit, everything is done, nothing you will do. No reversal, no re-availment. Right? Why I am telling this, your ITC question will incorporate these 9 conditions. Last 2 conditions they will not give. They will ask for MCQs and case studies, but they will not give mixed with the computation. And they will try to confuse you. They will give one line item that supplier has filed his GSTR 1 IFF. You have got in 2B, but supplier has not paid the tax. Will you take the credit or ignore the credit? Will you take the credit or ignore the credit? Supplier has filed his GSTR 1 IFF for April month on time and you have got in April month's 2B, but supplier has not yet paid the tax. Will you take the credit or ignore the credit? Take the credit. Whether he is going to pay tax or not relevant. We'll see 30th November next financial year. It is not about availment, it is all about reversal and re-availment. They will also give a condition where supplier 1 has given you invoice for 10 lakh plus GST in the month of April, but you are not going to pay the amount to the supplier in the next 250 days. Whether you will take the credit today. Yes, you will take the credit. You are not going to pay that amount next time, forget about it. You will take the credit. You will take the credit. Are you guys clear with this understanding? Now, out of say 5 or 6 points in the availment question, 2 will deal with block credit. For these block credit, please do not even break your head. Don't check the conditions. Don't check the 0. For other 3 items, you are going to check those 9 conditions. Now, what is block credit? What is your block credit? Now, let us evaluate your block credit and complete your block credit. Block credit I have made simple by giving you blocks. Block credit given in blocks, 4 blocks. Motor vehicles, vessel and aircraft, first block. Second, personal consumption, second block. Third, immovable property. Fourth, others. First block will only focus on motor vehicles, vessels and aircrafts. If there's a motor vehicle for special purpose, can you take the credit? Special purpose. Yes. Special purpose motor vehicle, you can always take the credit. Dumpers, tippers, construction sector, tractors. They are not for transportation of goods, they are not for transportation of passengers. You can always take the credit. If there's a motor vehicle for transportation of goods, take the credit. Special motor vehicle, take the credit. Motor vehicle for transportation of goods, take the credit. Motor vehicle for transportation of passengers, more than or equal to 14 seating capacity, take the credit. Special motor vehicle, take the credit. Goods transportation motor vehicle, take the credit. Passenger transportation motor vehicle, seating capacity 14 or more, take the credit. Where the problem lies? Transportation of passengers motor vehicle and seating capacity is less than or equal to 13. Then no credit. Where the issue lies? Passenger motor vehicle, seating capacity less than or equal to 13. There are also few cases you can take credit. Normally no credit. Normally, exception, yes, there. If at all you are talking about anomaly automobiles, who are purchasing those 2-wheelers or 4-wheelers and selling those 2-wheelers and 4-wheelers. Automobile showroom, dealer, can he take the credit? Yes. Further supply, purchase, sale, this is his main business. He can take the credit. Automobile showroom dealer, can he take the credit? Even if the seating capacity is 13 or less, he can take the credit. So for example, anomaly automobile showroom here. So if you go to your Metupalayam road or if you go to Avinashi road, you will find a lot of 4-wheelers and 2-wheelers showroom. Can those showrooms take the credit? Yes. Second, transportation of passengers. Can red taxi take the credit? Yes. Without these cars, it cannot give you the services. Right? They can take the credit. Imparting training or driving of such motor vehicles. Chamundi driving school. Can it take the credit? Yes. 3 sectors which can take the credit. Further supply of such motor vehicles, transportation of passengers, and imparting training or on driving such motor vehicles. They can take the credit. Others, no. If you are not in these 3 special sectors, the moment you understand your motor vehicles, vessels and aircrafts is more or less the same. There is no special purpose vessels and aircrafts. So if the vessel and aircraft is for goods, it's for goods. Can you take the credit? Yes. If the vessel and aircrafts is for passengers, normally no credit. Normally no credit. Exception. Further supply. If at all you are talking about a company which is purchasing and selling vessels and aircrafts, it can take the credit. If you are talking about vessel and aircrafts, Indigo Airlines, can Indigo Airlines take the credit? Yes. Transportation of passengers. If you are talking about a company which is purchasing airplanes or helicopters for giving training on navigating those vessels and aircrafts, or navigating those, it can take the credit. In Coimbatore, there's a academy which gives you training on driving planes. Can that academy take the credit? Yes. Same. Everything is the same. Only thing is you don't find special purpose vessel aircrafts. Otherwise, it ditto. It is copy, paste. Are you guys clear with this understanding? If Reliance Limited, Ambani, if Reliance Limited company has purchased a 4-wheeler for Ambani's transportation, can it take the credit? No. Passenger vehicle less than or equal to 13 seating capacity, no exception. Here 13 seating capacity is not relevant. Here you don't focus on seating capacity. 2 changes, no special vehicles, no 13 seating capacity and all. Right. Now, Reliance Limited has purchased a helicopter for transportation of Mukesh Ambani for business purposes. Can it take the credit? Though it is for business purpose, no, it cannot take the credit. If Rajmouli is taking an aeroplane for transportation of its crew members, crew members. Can it take the credit? Can it take the credit? No. Why? Thank you. Na. Why? It is not involved in further supply. Not involved in transportation of crew members is not same as transportation of passengers. They are not passengers. And not involved in training on navigating that vessel or aircraft. No. Clear? So this is for your motor vehicles, vessels and aircrafts. Now please understand, if at all there is a four-wheeler on which ITC is not allowed at the time of purchase. When ITC is not allowed at the time of purchase, even though that same vehicle, if you are taking on renting, leasing, hiring, ITC is not allowed. On that vehicle, if you are having repairing and maintenance services, ITC is not allowed. On that vehicle, if you are having general insurance services, ITC is not allowed. If the item is ineligible, you do anything with that item, ITC is not allowed. If I purchase a car for my transportation, can I take the credit? No, though I may use only for business purposes, I cannot take the credit. If I don't purchase the car, I go for renting of car, I cannot take the credit. If I have repair and maintenance on that car, no credit. If I have general insurance service on that car, no credit. So though that car is used for my company, I cannot take the credit, nor on purchase, nor on renting, leasing, hiring, nor on general insurance service, nor on repair and maintenance service. What if I tell that I purchase a bus for my company? Bus means more than or equal to 14 seating capacity. Can I take the credit if I purchase? Yes. If I don't take the bus on purchase, I take the bus on renting, leasing, hiring, I can take the credit. I have repair and maintenance service on that bus, I can take the credit. I have general insurance service on that bus. If asset is eligible, everything is eligible. If asset is ineligible, everything is but there are exceptions. There are no exception for purchase. There is an exception for renting, leasing, hiring. There is an exception for what is the exception for renting, leasing, hiring? If at all you are taking that motor vehicle on renting, leasing, hiring due to statutory obligation, I can take the credit. Say for example, in Tamil Nadu I have a company, I purchase a car, I cannot take the credit. I take the car on renting, leasing, hiring, I cannot take the credit. If in Delhi I run a company, I purchase a car, I cannot take the credit. But if I take the car on renting, leasing, hiring for my transportation of women employees, which is mandatory in Delhi state, I have to take care. Then on renting, leasing, hiring, I can. In Delhi also, if I purchase a car, I cannot take the credit. But if it is renting, leasing, hiring, and that too it is because of statutory obligation, I can take the credit. I can take the. So the exception is for purchase or exception is for renting, leasing, hiring? The exception is for purchase or renting, leasing, hiring. I repeat the example. In Tamil Nadu, I purchase a car for my employees transportation or take the car on renting, leasing, hiring, I will not get the credit. In Delhi, I purchase the car for my employee transportation, I will not get the credit. But if I take the car on renting, leasing or hiring, I will get the credit if it is statutory obligation. In Delhi, we are assuming that they have made it mandatory to take care of transportation of their women employees. And the question talks about women employees only. Can I take the credit now? Yes. Not if I have purchased the car, but if I have taken the car on renting, leasing or hiring. That is one exception. That exception is for purchase or only for renting, leasing, hiring. You find this exception where? Renting, leasing, hiring. Likewise, for repair and maintenance service and general insurance service, normally car is ineligible, general insurance service on the car ineligible, repair and maintenance service on car is. But there are two people who will get the credit. One is manufacturer of motor vehicle, one is general insurance service provider. Please understand, Tata Limited is manufacturing nano cars. Tata Limited will never purchase cars. It is not a showroom. They will purchase raw materials and manufacture cars. They'll purchase raw materials and manufacture. On raw materials, they'll take the credit. Don't you think that Tata Limited surely will take insurance on the stock of car manufactured? Can it take the credit? 100% business use. Got that? Don't you think that Tata Limited on 1 lakhs of cars manufactured by it, it will not only take general insurance service, there will be repair and maintenance services? Yes or no? It can take the credit. Sir, why for Tata Limited these cars are ineligible? How do you decide on eligibility? If at all you are talking about automobile showroom, whether it was covered in eligible category or ineligible category. Automobile showroom. Automobile showroom, even if it is less than or equal to 13 seating capacity, it is eligible. But whether manufacturer was covered there, whether manufacturer is doing further supply, no, manufacturer is not purchasing and selling cars. Manufacturer is purchasing the raw materials, iron, steel, plastic, etc. and manufacturing. So Tata Limited was not covered by exception. Tata Limited will never have purchase of these cars. Tata Limited manufactures these cars. Tata Limited, you got that? And for Tata Limited, on these 1 lakh cars manufactured by it, general insurance is very common. Repair and maintenance is very common. They understand the business and they tell, okay, for you, take full credit. For you, take full credit on general insurance and repair and maintenance service. This is first exception. And for second exception, please understand the second exception so that very clearly, so that you never have any issues with this. Tata Limited, like this, I have given the answer. Tata Limited will never purchase cars, it will manufacture cars, and on those 1000 cars, there will be general insurance service and repair and maintenance service. Though car is ineligible for them, but they can take the credit on general insurance and repair and maintenance. Next is reinsurance. Reinsurance. Now, General Insurance Company 1 has given insurance service to Reliance Limited on airplane purchased by Reliance Limited. Can Reliance Limited take the credit? General Insurance Company 1 will pay output tax. Reliance Limited cannot take the credit because it is ineligible. Airplane purchased by Reliance Limited is eligible category or ineligible category? Airplane purchased by Reliance Limited is eligible category or ineligible category? Reliance Limited is not involved in further supply, transportation of passengers or imparting training on navigating those aircrafts. Correct? Ineligible. Reliance Limited cannot take the credit. This airplane purchased by Reliance Limited is very expensive. So General Insurance Company goes to General Insurance Company 2. General Insurance Company 1 goes to General Insurance Company 2 for taking reinsurance, for taking sharing the risk. Now, General Insurance Company 2 is a supplier. It will pay output tax. Can General Insurance Company 1 take the credit? Though it is related to the same aeroplane, which is ineligible. Though this insurance is also related to the same aeroplane, which is, it can take. Always understand this thumb rule. Subcontract. Always take full credit. Business essential. Subcontract is very common. Subcontract is very, always you will get the credit. Always you will get the. So look at this example. We will be using the subcontract many places. Look at this example. Aeroplane is ineligible. So when General Insurance Company 1 is giving insurance service for aeroplane, General Insurance Company 1 will pay output tax, but Reliance Limited cannot take ITC. But for the same aeroplane, reinsurance is given by General Insurance Company 2 to General Insurance Company 1. Subcontract. Sharing of risk. Subcontract. Main contract is Insurance Company 1 and Reliance Limited. Subcontract is Insurance Company 2 and Insurance Company 1. Though it is again related to the same aeroplane which is ineligible, but look at General Insurance Company 1. Its outward supply is also insurance, inward supply is also can take the credit. It can take the subcontract. Always you can take the credit. Always you can take the credit. So there are two exceptions for General Insurance Service and Repair and Maintenance Service. Basically not eligible. But manufacturer of motor vehicles will always get the credit on these two items. General insurance company will always get the credit in these two items because of the concept of reinsurance. Clear? This is for what? Motor vehicles related. Motor vehicles, vessel, aircrafts related. Now onwards, it would be very, very basic and very, very simple. Where you are talking about personal use. Personal use. Food, beverages. All these items will come in your will always surely come in your block credit. All these categories, personal use, food, beverages, outdoor catering, blocked. You cannot take the credit. Beauty, treatment, health services, cosmetic, plastic surgery. You cannot take the credit. Renting a cab, life and health insurance of employees. You cannot take the credit. Membership of a club or membership of health and fitness center. You cannot take the credit. Travel benefits given to employees, not on business tour, but on personal vacation, leave travel or home travel concession. If it is on business tour, you can take the credit. It is on leave travel or home travel concession. Personal tours, company sponsoring for vacation of employees, no credit. What are these items again? I have merged two so that you can easily remember. Food, beverages, loud and clear. Food, beverages, outdoor catering, beauty treatment, health insurance, cosmetic and plastic surgery, rent a cab, life insurance, health insurance, membership of a club, membership of health and fitness center, travel benefits to employees for vacation, not for business tours, you cannot take the credit. And two exceptions that we have discussed in two different places. Now it is merged. Exception. What is the exception? If it is statutory obligation, SS, giving food and beverages to laborers in a factory is mandated by Factories Act 1948. Can the factory take the credit? Yes. Statutory obligation. Example. Subcontract. I'll take the same food and beverages example. Now, Reliance Limited is having AGM. First, I'll take example. Reliance Limited is having a factory where it is giving food and beverages or outdoor catering to its employees, laborers. Can it take credit? Yes, Factories Act. And the question will get that it is mandated by Factories Act 1948. Can Reliance Limited take the credit? Yes, though it is food and beverages, outdoor catering, it can take the credit. Reliance Limited is conducting an AGM where it is going to have food for 2,000 people. Can it take the credit? No. But that contractor who has taken the contract for 2,000 outdoor catering thinks that he cannot fulfill the entire obligation, so he gives the part of the contract to another contractor. Subcontract. So subcontractor 1 to Reliance Limited cannot take the credit. Contractor 2 to contractor 1. Can contractor 1 take the credit? Subcontract, take the credit. For contractor 1, outward supply is also outdoor catering, inward supply is also, it can take the credit. It can take the credit. Clear? Clear? Subcontract always, I'll explain subcontract even by say another example, cosmetic plastic surgery. Hospital giving cosmetic plastic surgery to an actor or actress. Can the actress take the credit? No. That hospital per se is not having a specialist. Hospital takes the services of a doctor who's a specialist, who's not employee, who's going to charge professional fees. So doctor to hospital, can hospital take the credit? Yes, subcontract. It is subcontract. It is right. So this is how you have to read the second category. Over. Third category, immovable property. So immovable property, look at this chart, you'll find third category also simple. If at all you are talking about any civil structure or pipelines outside the factory, ICA has gone in depth here. Pipelines outside the factory will not be taken as plant and machinery, they will be taken as civil structure or telecommunication towers. What are the three items? Any building which is constructed, civil structure, or pipelines outside the factory or telecommunication towers. In the second category, plant and machinery which is immovable. So here you can understand plant and machinery other than pipelines outside the factory, other than. So technically pipelines outside the factory and telecommunication towers are also plant and machinery, but they are not treated as plant and machinery for GST purposes. They are not treated as plant and machinery for GST purpose. They are treated along with civil structure. One is building, one is plant and machinery. And both we are talking about immovable. Building is always immovable. We are talking about plant and machinery which is immovable. So here they are telling that pipelines outside the factory and telecommunication towers we will not treat it as plant and machinery, we will treat it as along with civil structure. Along with, right. Now there are two ways for getting this building ready or plant and machinery ready. One, I take works contract service, which means I tell the person, you give the goods, you give the services, you make it ready. You make it ready. Second, I tell that no, this building, I'll purchase the cement, sand, steel and all. I'll purchase the goods. You give me only construction service. You give me only labor service. One way I can tell a builder, you purchase cement, sand, steel, etc. and put the labor, you give me together works contract. Goods and service together. Goods and service, works contract. Or second way, I tell, no, you give me only labor. You give me only labor, construction service. You tell me what quantity of cement, sand, steel you want, I'll purchase. Now understand whether I go with first type of work where goods and services are given together by builder or contractor, or I go with second type of work where contractor is only giving me labor, construction service and I purchase the goods. In both the cases, concept will be the same. Concept will be the, if it is for civil structure or pipelines outside the factory or telecommunication towers, and if the same is capitalized, look at the way government is doing. If it is capitalized, big value, it will go to balance sheet. It will go to tax, will be very big. Tax is very big, no credit. And if the building is ready, and after that you have small repair and maintenance, painting services, small repair and maintenance, which is charged to profit and loss account. Kutti. Can you take the credit? Yes. If Tata Limited is constructing a factory, can it take the credit on works contract or goods or construction service? No. If the factory is ready and there are small repair and maintenance, yes. So government is not interested in giving the credit because the value is huge. But it cannot do so with plant and machinery. For plant and machinery other than pipelines outside the factory and telecommunication towers, whether it is capitalized, big value, taken to balance sheet, you will get the credit, or it is small repair and maintenance expenses charged to profit and loss account, you will always get the credit. You will always. With plant and machinery, very simple. Whether you are taking to your balance sheet, first new items, new purchase will be going to balance sheet. Take full credit. Or it is small after plant and machinery is installed, small repair and maintenance expenses, take full credit. Right. But what about buildings, land and buildings, civil structure, including pipelines outside the factory and telecommunication tower? If it is capitalized, first time Airtel company is constructing a telecommunication tower, no credit. After that telecommunication tower is over, small repair and maintenance, take credit. And there is always an exception. What is the exception here? So what do you mean by subcontract? If I am constructing a factory for Tata Limited, can Tata Limited take the credit? I am constructing factory for Tata Limited. Can Tata Limited take the credit on the works contract service or goods or construction service? No. But I give part of the work to another contractor. Can I take the credit? My outward supply is also works contract, inward supply is also. I can subcontract. I can take the credit. I can take the credit. Subcontract. That is the third category. First was motor vehicles, vessels, aircraft. Second is personal use or consumption. Third is immovable property. And last, etc. Other items. Out of etc., 6 items are there. 3 items already discussed. If I purchase from composition taxable person, can I take the credit? See, it is not about composition taxable person. Composition taxable cannot take the credit. I'm not talking about composition taxable. I'm talking about regular. You guys are composition under composition scheme. I purchase from you. Can I take the credit? No. Why? You cannot collect tax from me. You cannot. You'll give me bill of supply. Whether there will be tax on bill of supply? No. There won't be any tax on bill of supply. Look at composition taxable person. On their purchase, they cannot take the credit. On their sales, they have to pay tax, but they cannot collect it from customer. So what is the document? Now, I'm not talking about composition taxable person. I'm talking about regular person who's purchasing from. Can I take credit? No. Why? The document is bill of supply. Document is, it won't have tax. It won't have, already discussed. If I use the goods for personal use, second condition is violated. Second condition is business use is not there. I cannot take the credit. If supplier has done fraud, if tax is paid by the supplier in terms of section 74, done fraud, can I take the credit? This was the 7th condition. This was the 7th condition. So point number 1, 2 and 6 already discussed. Already, if I purchase from composition tax, I cannot take the credit because document will be bill of supply. And what are the documents on the basis of which I can take the credit? Tax invoice, debit note, self invoice, ISD invoice and bill of entry. Bill of supply was not there. So it was not there in the document list. It was not there in condition number 4. It was not there in condition number 4. Personal use. Condition number 2. It is not used for business. Point number 6. Condition number 7. If supplier has committed fraud and then he is paying tax, can he pass on the credit to me? 1, 2, 6 already discussed in the conditions. Now what are extra points? If goods are lost, stolen, I would have taken the credit, but now I'll reverse it. If they are destroyed, lost, stolen is different from destroyed. Lost, stolen means someone has taken it away. Destroyed means they are in front of me, but they have been destroyed. I would have taken the credit, now I have to reverse it. Written off. Written off means it is in front of me, but they are outdated. I have to reverse the credit. Given us gifts of free samples, we have discussed in levy. If I have ITC, I have to pay output tax. If I reverse ITC, I need not pay output tax. If I have ITC, I have to pay output tax. If I reverse ITC, I need not pay output tax. This we have touched in your deemed supply. Schedule 1, para 1. Schedule 1, para 1. Right. And NRTP. We are talking about NRTP person. Non-resident taxable person cannot take any credit. Zero credit. Only one exception. Import of goods by him. NRTP will not get any credit except, so import of goods will have customs duty, BCD, SWS and IGST. He can take credit only on IGST portion. He can take credit only on IGST portion. IGST portion. NRTP can take the credit only and only on import of goods, customs duty, IGST portion. Customs duty, no other credit. No other credit. And last few attempts, IC is asking this. Any expenses that is for CSR activity, that is for no credit. Any expenses that is for CSR activity, no credit. Any expenses that is for CSR activity, no credit. Clear? Clear? To understand in detail about your composition taxable person and NRTP, I have given a small chart. NRTP cannot take any credit. NRTP cannot take any credit other than IGST on import of goods. This chart explains this. No other credit. Composition taxable person will not get any credit. If at all you are talking about composition taxable person, if the entire story is from point of view of composition taxable person, zero credit. But a regular taxable person or a casual taxable person, if he is purchasing from another regular taxable person, casual taxable person, he'll get the credit. If he is purchasing from NRTP, he'll get the credit. If it is import of goods, IGST portion, he'll get the credit. Only one item he'll not get. If he purchases from. So that I have tried to explain with these three simple charts. Right? And another item which I have tried to explain with this simple item is, I purchase 100 laptops, I'll take the credit. One laptop is used for my family, personal use. So I have already taken the credit. I'll have to reverse it for my family. 2 laptops are lost or stolen. I've already taken it, reverse it. 3 laptops are destroyed. 4 laptops are written off. They are in front of me, but written off, old. Reverse. 5 laptops are given as gifts of free samples. 2 options. Either I reverse the credit and I don't pay output tax. If I decide to retain the credit, it is deemed supply. I have to pay output tax. Output tax. So that is everything about your ITC chapter. About your ITC main chapter. And ITC main chapter ends that your utilization of ITC. Whatever we have discussed is one type of question. So there will be 5-6 items, out of which 2 will be blocked. Do not even think answer is 0-0. If it is blocked. If it is rest balance items, think of the conditions. Think of the how many conditions? 11 conditions or 9 conditions? Do not break your head and think of 11th, 10th and 11th condition, last 2 conditions, 180 days and 30th November of next financial year, because they are not about availment. They are all about, and ICA confuses this. ICA will purposefully ask this, that you have got in your 2B but supplier has not paid output tax. Don't worry. You have satisfied everything but you have not paid within 180 days. Don't worry. 180 days may be relevant. If you purchased earlier and now in this month 180 days is getting over, then it is not about availment. It is about reversal. So you have to see the month. Every time I think I've said for at least 5 to 6 times, see the month. Then decide what to do. Then decide what is needed to be done. And once you avail the credit, the second step is utilization. Never ever follow ICA method. Utilization, follow the sequence. In your columns, it should be ICS, ICU, ICS. Don't write CSI. IGST, CGST, SGST, output tax. Right? So you'll have output tax then. Less ITC. So first column, you'll write output tax. On your sales, whatever gross output tax, you'll write it, correct? Whatever gross output tax is there, you're going to write it. Then you'll reduce by ITC available. So this gross output tax will come from your sales. This ITC will come from your purchases or expenses. Gross output tax minus ITC is your net output tax to be paid in cash. So your gross output tax, ICS, write it. The question may directly give you, or you may have to calculate and write it. Then ITC, you would have already calculated it. Then when you are reducing, do not write one line item. Write 3 rows. Less IGST ITC, then CGST ITC, then ICA. Most of the times will try to give one line item and explain below. Don't do it. Why? First you have to use what ITC? First you have to use IGST ITC. IGST ITC. Right? So always think of someone whom you hate. That person is IGST. Right? And he is having 2 wives, CGST and SGST. Now, first he will use for whom? First, after having understanding his life, making a very big mistake. Right? It's not legal also, otherwise it's also not fine. First he'll use for himself. Then he'll give to whom? Maybe wife is not the right way. Maybe girlfriend 1, girlfriend 2. Correct. So that we also take care of the legal. We are seeing law. So we cannot cross the legal point. So it is girlfriend 1, girlfriend 2. He is managing 2 girlfriends. First he'll use it for himself. Your friend is having 1 lakh rupees. He requires 20,000 rupees. So he'll use it for himself. IGST, ITC used for IGST output. Then he is having balance 80,000 rupees. He'll use for whom? No. Depends. This is where your planning will come. At times, this is where your planning will come. Any ratio, any proportion. He'll keep on the table and he'll tell that you take in any ratio, any proportion. And for your exam, this is where your planning will come. At times, you have to be very careful. If you give it equally, you might end up in wrong answer. You might end up in wrong answer. Right? Once this is 0, then only who will contribute? The first girlfriend or the second girlfriend? Who understands him better? First girlfriend, CGST. So then that CGST will contribute. CGST first will use for whom? And undoubtedly first she'll use for herself. CGST first will be used for. So that person had 1 lakh rupees. He required 20,000 rupees. Balance 80,000 rupees. Use between CGST output, SGST output, any ratio, any proportion. That amount got over. Only when it gets over, then CGST input tax credit. First, she will use for whom? Herself. CGST input tax credit first use for CGST output. Supposing that first girlfriend had, say, 50,000 rupees. She required 10,000 rupees. She used it. What is the balance? 40. Now, her boyfriend requires 20,000 rupees. Will she give it? Yes. CGST input first use for CGST output, then use for IGST output, then use for IGST output. So she had 50, she required 10, balance 40. Her boyfriend required 20, balance 20. Whether girlfriend 1 will ever give to girlfriend 2? No. No. So if there is a balance CGST input, it can never be used for SGST output. Finally, if the fund is insufficient, finally who will come? Once you use it to the maximum, then finally SGST will come. SGST input, girlfriend 2, first will use for whom? Herself. SGST output. SGST output. So supposing girlfriend 2 is having 30,000, she requires 5,000. So first she'll use for herself, balance is 25,000. Will she give to her boyfriend? Yes. So SGST input first use for SGST output, then use for IGST output. Supposing her boyfriend required 10,000. So what was the total amount? 30. She required 5,000, so balance 25. Her boyfriend required 10, so balance 15. Whether SGST input will ever be used for CGST output? Whether girlfriend 2 will ever give to girlfriend 1? No. They will not try to communicate. Rather, they might not know even each other. Giving is later thing. They might not even know each other. Even if they know, obviously no. Irukku, but ana kudukka maata. Amount irukku, but I will not give a single penny. I will not give a single penny. What is the sequence? IGST input, first for IGST output, balance, CGST, SGST output, any ratio, any proportion. I repeat, this is where your planning will be required. Once this is 0, only then CGST input for CGST output, balance for IGST output. Even if there is a balance, can never be used for SGST output. Finally, SGST input for SGST output, if there is a balance, for IGST output, but can never be used for. So this is how it is going to be used. So your planning will come. So I have just given a question where planning is actually required to make you understand that. Planning is not always. See, at times your planning will not help you out. So why are we doing planning? ICI will make 3 mistakes. First, it will not follow ICS. Second, ITC, it will make it one-liner. Third, ICA will never write ITC carry forward. And I always want you to write ITC so that you can understand whether I have to do some planning or not. Supposing your output tax is 10 lakhs, 5 lakhs and 5 lakhs. IGST, CGST, SGST. Your available IGST input is 12 lakhs. So first you will use it for IGST. So balance you have 2 lakhs. Now, normally you will think that I'll split 1 lakh between CGST and if you do so, there'll be a problem. Why there'll be a problem? Because CGST input is only 3 lakhs, whereas SGST input is 6 lakhs. SGST input is, sir, how there can be a difference input? Input always includes opening input. ITC always includes opening ITC. So last month there would have been a carry forward of SGST input of 3 lakhs. So current month CGST input 3 lakhs, 3 lakhs. So total input of CGST is 3 lakhs. But SGST is opening 3 lakhs and current month 3 lakhs. Got that? So I will not split it as 1 and 1. I'll fully use it for CGST. I have to do trial and error. I have to do mind calculation, trial and error. So I use fully. So now my credit becomes 0. IGST first for IGST output, then for CGST output. I did not even give a single paisa to because I had to do planning. This is where I will be doing the only area where I can do my planning is this area. Right? Now, what is my CGST output? CGST output 5 lakhs, out of which 2 lakhs is already paid. So what is the balance output? What was my balance output? When I used my 2 lakhs IGST, my balance output is 3 lakhs. So how much credit I have? I have credit of 3 lakhs and I have to pay 3 lakhs. I'll fully use it. So what is my credit what is my credit carry forward of IGST? 0. What is my credit carry forward of CGST? What is my net IGST output tax payable? 0. What is my net CGST output tax payable? 0. So first I'll write net output tax, then ITC carry forward. Then finally I'll touch my SGST. So my SGST input is 6 lakhs, but I'll use only 5 lakhs. So what is my balance input SGST? So 1 lakh is carry forward. Payment in cash is 0. If I did not do it, you just try to do it otherwise. If I had split that excess IGST credit after using IGST output, which was 2 lakhs, as 1 lakh and what would have been my answer? My answer would have been pay CGST output 1 lakh and my credit carry forward of SGST would have been, which is not proper, which is not the optimum answer. I will not pay something more where I could have done my planning. Right? So this is very, very crucial. This is the only area. Sir, are you trying to tell that you should never get an answer where cash payment is there and ITC carry forward is also there? No, at times it will be there. You cannot help out. At times you cannot do planning. You'll have some cash payment, though you have some ITC carry forward. Though you have some, in one pocket you'll have some cash payment, but in another pocket you'll have ITC carry forward. In one pocket you'll have cash payment, in another pocket you have ITC carry forward. You cannot help out. So that, no, not possible. So here, please understand that certain things is not in your control, and when things are not in your control, you actually cannot do anything. And this is the master table that I was referring to. 4 tables, work out, you'll never get a wrong answer. First table will always be gross output tax. Your sales multiplied by output tax rate. It may be intra-state supply, CGST, SGST pocket, interstate supply, IGST pocket. You can remove this 42, 43 notes because 42, 43 is not applicable for inter-syllabus. So you can remove this 42 and 43 notes. Then second table is not ITC. ICA makes it a mess. They will give RCM together, Kasa Musa, everything they'll give it. But you have second table RCM. RCM always paid by cash, then taking credit. So second table is RCM. Third table is ITC. Why? This RCM will not only come in final table, it will also come in third table. So when I tell calculate ITC including, so here ITC will be including, you pay by cash, getting credit. You pay by cash. So legal service will come in table 2. But the same thing, you'll pay by cash and get in credit. It will also come in table 3. It will also come in. ITC includes RCM ITC. ITC includes, clear. So that is the reason I said table 2 is RCM. Table 2 is, and final table. Final table, whatever you have written in table 2, actually RCM will come in table 3 as well as table 4. So RCM to be paid by cash. RCM to be, you will again write here. Because RCM is to be only paid by cash. You cannot use credit. You cannot use credit. So RCM table 2 will come in table 3 as part of ITC. Will also come in table 4 for payment in cash. So you will pay in cash and get in credit. And table 4 will be split into two parts. One is RCM to be paid in cash. Second is what we have discussed now. Gross output tax less, which will come from your table 1, less ITC, which will come from your table 3, including opening ITC. ITC will always include opening ITC. Then net output tax to be paid in cash. So total amount to be paid in cash is RCM to be paid in cash and net output tax to be paid in cash. So this is the total payment to be paid in. Total payment to be paid in cash, which is given in point number 3. And finally, always write ITC carry forward. Always write. ICA will never ask this, but do it. So that to check, have I done anything wrong? Whether there was a planning required, but I did not do it. When you do this, so question morning asked by you, ITC complications. This will avoid all the silly mistakes that you are about to commit. It will avoid all the silly mistakes that you are about to. Table 1 output tax, table 2 RCM. Table 2 RCM will be part of table 3. ITC includes RCM ITC. And table 4, first part is RCM to be paid in cash. Second part is net output tax to be paid in cash, which is gross output tax less ITC. That ITC is including RCM ITC. So you will subtract it. Total payment in cash is RCM by cash and net output tax by cash. Add both. But always have ITC carry forward. ITC carry forward. Are you guys clear with this understanding? Are you guys clear with this understanding? So this is how your ITC questions will come. Actually, we are seen with all the ITC problem except for special ITC. Except for special ITC. Special ITC we are yet to see very basic thing. Maybe another half an hour tomorrow will be done with your special ITC. Will be done with your special ITC. ITC, rather, I forgot ITC chapter. When you talk about a ITC chapter, write entire chapter 5 star. Normally, I within a chapter give 5 star or 3 star. Correct? Within that chapter, within that page, half a page or only that small part of the page. This is so important. Entire chapter, don't skip. Entire chapter, your ITC chapter, entire chapter will be your 5 star. You cannot skip anything. You are required to remember all these ITC chapter, entire chapter would be marked as 5 star. So this is the only chapter, only and whole and sole chapter where I'll tell that no, don't see what is important, what is not. Everything in ITC is 5 star. And start revision with this chapter. Start your revision with this particular chapter. Short question will be there. Clear? Clear? Now what we will do is take your last exam paper. So today we'll work out one question paper and tomorrow we'll work out another question paper. Till here, are we guys clear with this entire understanding? Are you guys clear with this ITC understanding basics? So when we talk about your sale of capital goods, Basically, we are discussing which provision? Section 18. So section 16, 17, ITC is over. Now the focus is on section 18, important areas. The most important area of section 18 is, repeatedly asked question is your sale of capital goods. Sale of capital goods or plant and machinery. By default, actually capital goods includes plant and machinery. But anyways, they have written sale of capital goods or plant and machinery on which ITC has been availed. So this you can mark it as 5-star. Rather, entire chapter I had asked you might mark 5-star. Now, if you go to the first page, you can write 16 and 17 5-star fully. 18, this area is 5-star. 16 and 17 fully 5-star. Section 18, this is 5-star. So another area would be not so important. We'll put it as 3-star. Now, what is happening in this case? Let us understand this case. Supposing you have purchased a capital goods on 1st of June 2024 for 1 lakh plus 18,000 and you have taken the credit of 18,000. So at the time of purchase of capital goods, you can take the credit. Right? You can take the credit on inputs, input services as well as capital goods in the month of purchase itself. In the month of purchase itself. On 10th of June 2026, you have decided to sell it. This is the sale value. So this initial information was all about your purchase. The later information is all about your sale. So this is the purchase information and this is the sales information. What is the basic question? The basic question is calculate the tax on sales. Understand that sale of capital goods is also subject to GST. Rather, in business definition, we have walked through telling that even when you're selling the capital goods, it attracts GST. It is within the definition of business. It is within the definition of business. So, if at all you would have normally sold your product, what would you done? What will you normally do? Take the sale price multiplied with the GST rate. The question does not give the rate directly, but indirectly you know the rate. Indirectly you know the rate. What is the rate? When I tell 1 lakh plus 18,000, what is the implication? What is the rate? Correct. So first area, calculate normally as you would have calculated for your normal output tax. So what would have been your answer in the first case? In the first case, your answer would be very normal answer, which is 60,000 selling price multiplied by 18%. Very normal calculation. Selling price multiplied with tax rate. If I am telling that I am selling a product for 60,000 and the rate of tax is 18%, what would you do? Take the selling price, transaction value multiplied by the GST rate. Very normal calculation. This you will do normally for your any stock, final product. Same thing. But for capital goods, there's a difference. For capital goods, you take this tax on transaction value, compare it with reduced ITC. Now, what is reduced ITC? ITC minus, what is the input tax credit taken at the time of purchase? 18,000. ITC, tax portion. Tax portion, ITC minus 5% for each quarter or part thereof. Now, please understand throughout GST, quarter means calendar quarter. Quarter means, so this is very crucial. Quarter always means calendar quarter. Now, when you talk about June 2024, June 2024 itself is 1 quarter. Though it is only 1 month. April to June is 1 quarter. So June 24, 1st June to 30th June is 1 quarter. Then understand from July 2024 to June 2026, 2 years. How many years? 2 years. July 2024 to June 1st July 2024 to 30th June 26. So to be very specific, I'll even mention the dates. Which July? 1st July and June 30th. So from 1st July 2024 till 30th June 2026. How many years? 2 years means how many quarters? 8 quarters. Correct. So because sale happened on 10th July. Now 1st July 2026 to 10th July 26 is only 10 days. Is only, but you will treat it as 1 quarter. See, if you look at June 2024, it was only 30 days. But April to June is 1 quarter. Right then, July 2024, 1st July 2024 till 30th June 2026, 2 years. 2 years means how many quarters? 1 year will have 4 quarters. 2 years means 8 quarters. Then lastly, July 2026. 1st July 26 to 10th July 26 is only 10 days, but you will still treat it as total quarters are 10. If you ignore the calendar quarters, you would have got a wrong answer. If you ignore the simple calculation, you would have got 9 quarters. What you would have done? You would have taken June 24 to June 26 as 2 years, 8 quarters, then balance 1 quarter. So your quarters calculation would have been 9 and not 10. So you have to go with calendar quarters. You have to go with quarters in GSE always means calendar quarters. So what is the calculation of sale of capital goods? First, take the selling price 60,000 multiplied by GSE rate, you'll get one answer. Second, take the ITC. The question gives the ITC. At the time of purchase, you have taken the credit of 18,000. Take the ITC minus 5% for every quarter. Quarter means, so April to June or part of April to June is 1 quarter. July to September or part of July to September is 1 quarter. October to December or even few days of October to December is 1 quarter. Jan to March or even few days of Jan to March is. So totally you don't get 9 quarters. Normal calculation would have given you 9. But in this case you have to take 10 quarters. So subtraction is 5% for every quarter. So 10 quarters means how much percentage? 50%. 10 quarters means how many percentage? So subtraction is 50%. Subtraction is 18,000 minus 50% of 18,000, which will give you 9,000. Compare whichever is higher. Compare. In this question, what is higher? 10,800. Why this is higher? Because tax on transaction value 60,000 multiplied by 18% comes to 10,800 and ITC minus 5% per quarter comes to 9,000. You have to compare. If the first one was higher, you go with first one is higher. If second one is higher, you go with second one is higher. Whichever is higher. So what is the GST payable on sale of capital goods? Two answers. First is a very normal basic answer. Tax on transaction value, which means nothing. Normally what you would have done, selling price multiplied by GST rate or reduced ITC. ITC minus 5% per quarter or part thereof. Compare whichever is higher. This is a repeatedly asked question by ICAI. When you are selling the capital goods, what is the tax payable? What is the tax payable? So this is very, very crucial and important. But they give an exception. If you're talking about special capital goods like refractory bricks, molds, dies, jigs and fixtures. Condition number 1. Refractory bricks, molds, dies, jigs and fixtures. These are special capital goods. They are used in job work industry. They are used in job work industry and they are sold as scrap. If the same question was given for them, I'm assuming if the same question was given for them, refractory bricks, molds, dies, jigs and fixtures. Second condition, not when they are sold when they are new, when they are fully used. When they are fully used, when they are sold as scrap, they tell okay, forget the ITC complication, you cannot find the ITC because what happens is they get consumed in such a way that you cannot track it. You cannot track it. So if you cannot track it, you cannot track the ITC. For capital goods to track, you should know when it was purchased. Only then you can take ITC minus 5% per quarter or part thereof. You cannot track it. So what they tell? Okay, what would be your normal answer when you're selling something? What would be your normal answer when you're selling something? Selling price multiplied by GST rate. So you take the selling price in this question, 60,000 multiplied by GST rate. Simple answer. No complication of ITC minus 5% or part thereof. No. Answer is very simple. Tax on transaction value. Tax on transaction value. Very, very simple understanding. Tax on transaction value. Tax on transaction value. So normally when you're selling your capital goods, this will never be asked by ICAI. Normally ICAI will focus on this. So it will tell that, okay, take tax on transaction value, which is nothing but selling price multiplied by GST rate. Compare it with ITC minus, ITC taken at the time of purchase minus 5% for every quarter, calendar quarter or part thereof. Subtraction is minus. So 5%, if it is 10 quarters, 50% is a subtraction element, not the final answer. It is a subtraction element, whichever is higher, whichever is. So ICAI will focus on this particular area, right? So this is one important area of section 18. And another important area of section 18 is a situation where you are talking about not so important but 3-star. See, the entire ITC chapter, I have asked you to mark 5-star. 16 and 17, fully 5-star. 16, 17, till utilization chart. Till your utilization chart, fully 5-star. 18, sale of capital goods, 5-star. Rather, everything is 5-star except for one this area where I am talking about certain conversion happening, certain changes happening, rare cases. So, this area where you are talking about the differentiation chart in your text, you will find this area. This area, it is 3-star. This particular small area is 3-star. Right? Now, what is happening? Let us assume on 1st of October, you have converted from composition scheme to regular scheme. Your exempt supply becomes taxable supply. Your sales was exempt, you cannot take credit. Now your sales has become taxable, you can take credit. Earlier you are under composition scheme, you cannot take credit. Now you are shifting to regular scheme, you can take the credit. Earlier your sales was exempt supply, no output tax, no credit. Now your sales has become taxable supply, 5% or 12%. Pay output tax, take credit. So you are going to take the credit. Earlier you are not registered. If you are not registered, no credit. Now you take registration. Either you take voluntary registration, but if you are liable for registration, one important condition, you should apply within 30 days. Very important condition, you should apply within 30 days. Very crucial, 30 days. You should apply within 30 days. So if you look at these scenarios, you're talking about what? You were there in an area where you did not get the credit. Now you have shifted to an area where you'll get credit. Correct? Earlier you were not available. You did not have your input tax credit. Now you have your input tax credit. Are we talking about the new purchases? No. New purchases you'll get credit. Are we talking about entire old purchases? No. We are only talking about old purchases which is contained in the stock. Old purchases which is contained in the stock as on 30th September. Conversion happened when? 1st October. So old purchases which is contained in the stock as on 30th September. As on 30th September. And please understand, stock can be only of inputs and capital goods. It cannot be of input services. It cannot be of input services. We are not bothered about new purchases. Are we bothered fully about old purchases? No. We are only bothered about that quantity of old purchases which is there in the stock as on the previous date of conversion. As on 30th September. As on 30th September. What if I am showing you the mirror image of it? Mirror image. What is the mirror image? Ulta. What if I tell that you are earlier under regular scheme where you got ITC, now you have shifted to composition scheme on 1st April where you will not get credit. See, entry into composition scheme will be always on 1st of the new financial year. I have taken care of this. But exit can be, so if you see the previous point, exit is any time. 1st October, 10th October, 11th October, any date. But entry is only 1st April of next financial year, and we are not talking about a new registered person because he is already under regular scheme. So it means already he is registered. Already he is registered. So you are earlier taking credit, but now you cannot take the credit. Or the second situation, your sales were earlier taxable, which means you are paying output tax, you got the credit. Now your sale item which earlier had 5 or 12 or 18% now becomes 0. So now you are not going to pay output tax. Now you cannot take the credit on your purchases. Or earlier you are registered. When you are registered, you got the credit. Now you are cancelling your registration. You are cancelling your, so you will not be getting credit. It is exact mirror image. Exact mirror image. Regular scheme to composition scheme. Your sales was earlier taxable. Now it is exempt. Earlier you are registered. Now you are cancelling your registration. Earlier you got your credit, but from today you will not be having credit. Are we worried about new purchases? New purchases from 1st April, you will not get the credit. What about old purchases? Are we worried about entire old purchases? No. We are worried about only stock from those old purchases which is there as on previous day. When this conversion happened? So stock as on 31st March, stock is only of inputs and capital goods. Now, what will happen in the first case? In the first case, you did not get the credit, but now you will be availing the credit. When you're converting from composition scheme to regular scheme, or exempt supply to taxable supply, or new registration, voluntary registration or liable for registration applied within 30 days. Earlier you did not get the credit. On the stock, what will happen? On the stock, what will happen? You will avail the credit. Old stock, you did not avail the credit. But now you will take the credit because now you are eligible for credit. See, new stock, you will take the credit. Old stock, you did not get the credit. But old purchases, you did not get the credit. But stock from the old purchases, which is still there. Stock from the old purchases, which is still there. You will avail the credit. Why you will avail the credit? Because you have moved to a regime where you get the credit. Where you get the credit. Ulta, what will happen? Regular scheme to composition scheme. Your taxable supply becomes exempt supply. You are cancelling your registration. New stock, new purchases, you will not get the credit. Old purchases, you got the credit. We are not worried about entire old purchases. We are worried about the stock of old purchases which is there as on 31st of March. You got the credit, but you are entering into a regime where you are not allowed for. You are entering into a regime where you are not allowed for credit. So credit that you have availed, you are going to reverse it. Credit that you have availed, you are going to, right? So first is the case of availment of credit. Second is the case of reversal of credit. First is the case of availment of credit. Second is the case of reversal of credit. And our focus is only on the calculation area. I am not taking through other things. Now, I'll directly show you the numbers, what happens with the numbers. My focus is only on the calculation part. Government is government. Government tells that availment as well as reversal will happen on inputs as well as capital goods. First, our focus is on inputs. First, our focus is on, so are we focusing on inputs or capital goods? First, our focus is on inputs. So first, assume that stock as on that day, stock as on the previous day, stock as on the previous day is 1 lakh units, 1 lakh units, and tax per unit is 10 per unit. So this, we are talking about stock. Stock as on the previous day. Stock as on the previous day of change. Previous day of change. What are the three cases of availment? What are the three cases of availment? Composition to regular. Exempt supply becomes taxable supply. You are not registered, now you are taking new registration. What are the three cases of reversal? Regular to composition. Your taxable supply sales becomes exempt sales. You are registered, but now you are cancelling your. Now government tells if it is availment, you can take the credit on. Government loves availment or government hates availment? Government loves availment or government hates availment? Government will hate availment. But government will love reversal. Government will hate availment. Government will love. So when it comes to availment, they put a condition. Your stock should not be older than 1 year. Your stock should not be older than. So I give you an additional information. Out of 1 lakh unit stock, which is there as on the previous day, 80,000 units is less than 1 year old. Is less than. So balance 20,000 is more than 1 year old. Balance 20,000 is more than. So when you are availing, government tells that you can avail the credit on stock which is only of last 1 year, which is only of last 1 year. So how much stock actually you are having as on the previous date? 1 lakh units. But when you are availing, you avail only on. When you are availing, you avail only on 80,000 unit multiplied by 10 per unit. You avail only on. You get only 8 lakhs. You get only 8 lakhs. But when you are reversing, government does not have this criteria of 1 year. Whether the stock is last 1 year old or more than 1 year old. Last 1 year old or more than 1 year old, you reverse on entire stock. You reverse on. So when you are reversing, reversal is on entire 1 lakh units multiplied by tax portion 10 per unit 10 lakhs. Look at the disparity. When you are availing, avail only on last 1 year old stock. And this is not only for inputs, this is also for capital goods. Last 1 year old stock of inputs as well as capital goods. But when you are reversing, entire stock, whether it is last 1 year or more than 1 year. This is calculation for inputs. Very simple calculation. All you have to remember is when you are availing, they put a criteria of last 1 year. More than 1 year, forget about it. When you are reversing, they tell that entire stock as on the previous date, whether it is last 1 year old or more than 1 year old, reverse it. So this is for your inputs. When you're talking about availment and when you're talking about reversal. When you're talking about availment and when you're talking about reversal. Right. First we discuss the situation. Then we discussed stock of inputs. Now what will happen with stock of capital goods? What will happen with stock of capital goods? So now we are continuing the same situation. What are the situation? 3 situations of availment, 3 situations of reversals. So we are continuing the same situation. Inputs, you avail on inputs but only last 1 year. Inputs, reversal, reverse on entire stock whether it is last 1 year or more than 1 year old. What about capital goods? Let us take the example of capital goods. Now entire focus shifts to capital goods. Supposing 1st of June 25, you have purchased capital goods 1 lakh plus 18,000. 1 lakh plus 18,000. Tax element is 18,000. Tax element is 18,000. 13th of November, that is a change. That is a change. In one case, the change is composition scheme to, just tell me, composition scheme to regular scheme is about availment or reversal? Availment or reversal? Availment. Second case, taxable supply becomes exempt supply is about availment or reversal? Please understand, whenever it is all about availment, you go with subtraction method here for capital goods, and reversal you go for multiplication method. Subtraction method depends on calendar quarters. Multiplication method depends on months, normal months. Now, here, when you're talking about subtraction method, you're going to get the credit. So, subtraction. Getting the credit is subtraction method. Subtract. Normally, capital goods will have 5% per quarter. Subtraction method. So, what are you doing? You take the tax element. What was the tax element? On capital goods? Tax element was 1 lakh is price. Tax element was, so you take that 18,000 subtracted by 5% per quarter or part thereof. Subtracted by 5% per quarter or part thereof. Please understand one thing. How many quarters are used? How many quarters are completed? June will become 1 quarter. June will become 1 quarter, correct? Then July to September, 2nd quarter. Then October till 13th November, 3rd quarter. So how many quarters? 3 quarters. How many quarters? So June, 1st June to 30th June, 1 quarter. July 25 to September 25, 2nd quarter. October 25 to 13th November 25. So how many quarters? So you subtract. This we already used for sale of capital goods. Sale of capital goods is selling price multiplied by GST rate or ITC minus 5% per quarter or part thereof. Same method, but here only we are taking that subtraction portion. Right? The tax element minus 5% per quarter or part thereof. 5% per quarter or, so how many quarters you get now? 3 quarters. So 3 quarters means, what is the final answer? What is the percentage? 5% for 3 quarters means 15%. So 18,000 subtracted by 15%. 15,000, correct? This is your answer for capital goods. When you are talking about availment or reversal. When you are talking about availment or reversal. When you are talking about availment. When you are talking about availment, subtraction method. Availment, subtraction method. And subtraction is always quarters, calendar quarters, not normal quarters, calendar quarters. Now, the same is the question for reversal. Exactly same question. Same data, same date, same numbers. But for reversal, it is multiplication method. Step number 1, you have to calculate the completed months. You have to calculate the completed months. How many months have been completed? How many months have been completed? Completed months. See, June now normal months. June is over, July is over, normal month, which means 1st June to 1st July, normal. June, July, August, September, October, November partly. November, understand that whether November you have 5 months, 13 days you get, correct? Whether you get 5 months, 13 days, or 5 months, 25 days, or 5 months, 2 days, or 5 months, 3 days, or 5 months, 5 days, you'll always take it as 6 months. Completed months is, first of all, make it very clear. Completed months you'll always add. You'll not go for rounding off. 5 months, 5 days is also 6 months. 5 months, 5 months is also, 5 months, 5 days is also 6 months. So how many completed months? Balance months. Understand, if you have understood subtraction method, life of capital goods is how much? 5 years. 1 year, 4 quarters. So 5% for 1 year will be 20%. And for 5 years will be 100%. 1 quarter, 5%. So 1 year, 20%. 5 years. So what is the life? 5 years. If you convert into months. So what is the total months? So 60 months, how much is completed? So what is the balance life? We are only worried about the balance life, correct? 54 months. So take the ITC element, take the tax element, 18,000 multiplied by balance months, multiplied by balance month. How you get? You cannot get it directly. First you have to find completed months, then balance month is 60 minus completed months. 60 minus completed months divided by, what is the entire life? 60. What is the entire life? How you got that 60? I explained life of capital goods is also always 5 years, whether you go by subtraction or whether you go by multiplication. So 18,000 divided by 60. But how many balance life is that? What is the balance life? You're reversing the credit for the balance life. You're reversing the credit for the balance life. So balance months is 60 minus completed months. 60 minus, how to calculate completed months? Normal months. 5 months, 5 days will be. So here you will always get a different answer. There is no possibility where you come and get the same answer. So when it is all about availment, if you look at things carefully, even when it is about inputs, you get a different answer. You get a, for availment, last one year, stock only 80,000 units. For reversal, entire stock. For reversal, 1 lakh units. Here also, please understand, for availment, last 1 year capital goods only. In this example, I have taken care that capital goods is purchased within 1 year. If capital goods was purchased more than 1 year, availment would have been, forget about subtraction method, availment would have been, so that 1 year is relevant for both inputs and capital goods. But here, if at all, assuming that it is within 1 year for availment, for reversal, 1 year is relevant or not relevant? Not relevant. And when you are availing on capital goods, it is subtraction method, calendar quarters. Tax minus 5% per quarter or part thereof. When you are reversing the credit on capital goods, it is multiplication method. Tax multiplied by balance months. Tax multiplied by, divided by 60. How you get balance months? 60 minus completed months. How you get completed months? Any month which is complete. How you get completed months? You check the dates. 5 months, 5 days, or 5 months, 25 days, you treat it as 6 months. You'll treat it as 6 months. This is your calculation. Now, final change, and we are done with this chapter. Please understand, when you talk about your inputs, when you talk about your availment of stock on inputs, it was available in all 3 cases. But when you talk about your capital goods, it is available only in 2 cases, which means you can take the credit of the stock of capital goods. Obviously, it should be 1 year old. Same condition of 1 year is applicable both for inputs and capital goods for availment. For if capital goods would have been more than 1 year old, you cannot take the credit even in availment. For reversal, 1 year is not allowed. Whether it is within 1 year or more than 1 year, you will reverse. Whether it is inputs or capital goods. Here, when you talk about availment, it is composition scheme to regular scheme, and your exempt supply becomes taxable supply. when you talk about your new registration, for new registration, you can take the credit of stock of inputs only. You can take the credit of stock of inputs only. You can take the credit of stock of inputs only. But when it is all reversal government is very free. Government means getting revenue. So government tells whether it is regular scheme to composition scheme, or your taxable supply becomes exempt supply, or you're cancelling your registration. All three cases it is there. So availment, when you talk about for inputs, availment for inputs is in all three cases. But for capital goods is only in two cases, not applicable for new registration. Not applicable for new registration. Reversal, it is there for inputs as well as capital goods in all three cases. Now, two important difference. Availment, government loves or hates it. Government loves or hates it. So, availment, whether it is inputs or capital goods, only lasts 1 year old. Only more than 1 year old, even if it is capital goods, 0. More than 1 year old, even if it is capital goods, 0. First point. Second point. For capital goods, it is available only in two cases. It is not available in case of new registration. It is not available in case of 2 points. For reversal, government loves it or hates it? Loves it. So, first point. Reversal will be there on stock of inputs or capital goods, whether it is last 1 year or more than 1 year. Last 1 year or more than 1 year. First point. Second, reversal will be there on inputs as well as capital goods. As well as in all three cases, including cancellation of registration. So on capital goods, it will be there in all three cases. Please understand these differences. Not so crucial, but yes, IC has tested this. To wind this up, one simple question, and we are winding this up ITC chapter. Very basic and simple question. Let us see. Will you, I say in mock test papers have asked this time and again. Very, very basic and simple question. Okay, I'll just tell them this way. Very basic question. Supposing you are dealing only and only with exempt supply earlier. Suddenly your item becomes taxable supply. Say on 30th of September, it becomes taxable supply. As you are dealing only and only with exempt supply, you never took registration. Suddenly you are taking. Now, the question is, you will avail the credit or reverse the credit? You'll avail the credit or reverse the credit? Now, whether you can avail the credit on inputs and capital goods or only on inputs, not on capital goods. You will take this question from the angle of exempt supply becoming taxable supply, or from no registration you have taken registration. You will take this question from which angle? You will take this question from the angle of taking registration. So you can avail it only on inputs, not on capital goods. I say for one time in mock test paper, twisted this question. Though you are giving only exempt supply, though there was no requirement of registration, but still you are registered. Then your supply became. Now, you can avail on inputs as well as. Are you guys clear with this understanding? So earlier your supply was only exempt supply. Though you are having turnover of 10 crores. We have discussed 23 yesterday. If you are having even 10 crores turnover, but you are having only exempt supply, no need of registration. Right? The moment it became taxable, you applied for registration within 30 days. 30 days is crucial. Otherwise, these benefits will not be there. Within 30 days. Now, you will not look at this question from the angle of exempt supply to taxable supply. You will not look from this angle. You look from the angle of new registration. You look from the angle of that. So this was not tested in exam multiple times. One time maybe. But in mock test paper and revision test paper, this was tested multiple times. Right? Done with this entire area of your ITC. 16, 17, all 5 stars. 18, capital goods, 5 star. Changes, 3 star. That is one more area. Transfer of credit, not important, I have not touched. Not so important, I have not touched that. Right. So this is all and all about your most important chapter. Input tax credit. Now we'll move on to your new chapter. Yes, please.
Minus 5%
Correct.
straight line method or WD
Straight line, ma. That is the reason we get the same percentage. You're not going by WDV method, you're going by straight line method, and that is the reason you don't. Otherwise, you would have got a very different answer. So it is all simple straight line method, normal straight line method. Now, when you talk about the payment chapter, the most important area of payment chapter is calculation of interest. The most important area of payment chapter is calculating your interest. And those who are sitting there for the entire question paper, we have already seen that it was there tested in your exam May 25. Rather, almost every second attempt they ask question about interest. So one question paper you will not find, another question paper you will find calculation of interest. The most important area is calculating your interest. So directly we'll just jump to your calculation of interest. Calculation of interest, put a 5 star for calculation of interest. So when you're calculating your interest, look at this particular area. We'll see the questions directly and understand the implication. First, you're talking about your April return. You're talking about your April 25 return, and you have reported the transaction in April. April 25 transaction, reported it in April return. Your gross output tax is 11 lakhs, ITC is 7 lakhs. But you have filed your April return very late. You have filed your return on 31st July. On 31st July. You have filed your April return very late. When it came to filing, you filed it very late. So April transaction reported in April return, but return was filed on 31st July. Now understand that normally when you are reporting your transaction the same month, interest is not on gross output tax, it is on net output tax. It is on net output tax. But that's one exception. If you are filing after officer has find it out, officer is reporting you. If you have got a notice under section 73, 74, whether you found out this or officer intimated you, then they tell that no, we are going to have interest on entire value. We are going to have interest on entire value. So interest would be on gross 11 lakhs. Interest would be on 11 lakhs. What is your gross output tax? 11 lakhs. You will calculate interest on 11 lakhs. Now what is the number of days of delay? For April month, what is the due date? For April month, what is the due date? For April month, due date is 20th May 2025. And when have you filed your return? July 31st. So May month, how many days delay? May month, first date, 20th May will not count. So May month, 21st to 31st, 11 days. June, 30 days. July, so what is the total delay? Total delay is 72 days. Clear? Now you know interest will be calculated for 70 days. And always remember interest rate is 18%. Interest rate is? So now the only thing that is not clear, whether you will calculate interest on gross output tax 11 lakhs or you will calculate only on net output tax 4 lakhs. Whether you will calculate on gross output tax 11 lakhs or you will calculate on net output tax 4 lakhs, because this only you will pay by cash. 7 lakhs will be paid by credit. Government is not losing anything. Government is not. Now normally please understand that you will calculate on net output tax. But if this is found out by officer when you are getting 73, 74 or 74A notice, then you are reporting it. Whether you yourself did it or officer showed you, then interest will be higher or lower. Higher or lower? So now interest will be on 11 lakhs multiplied by 18 percentage multiplied by 72 divided by 365. We are not interested in numbers. You can use your calculator and get the answer. Right? But if you never got any notice in 73, 74, you are filing your April month return rate. Yes, April month return should have been filed on 20th of May, but you are making the payment and filing on 31st of July. You are having 72 days delay. How to calculate delay we have seen. But you're doing on your own. You're doing on your own. No notice. No. So interest will be on gross output tax or net output tax. Net output tax. Interest will now be on only on 4 lakhs. Interest now will be only on 4 lakhs multiplied by 18 percentage multiplied by 72 days delay divided by 365. See, we were very clear with the rate of tax. It is always 18 percentage. In this case, we were clear with the delay, 72 days. We are clear with the delay. Issue was interest you will calculate on gross output tax or net output tax. Gross output tax or normally net output tax. Because normally officer will not give notice so soon. Normally, if the question is silent, you will always go with net output tax. Rarely, officer would have given you a notice. Officer would have given you a notice and after that you file it. So, rarely it is on gross output tax. Rarely it is on gross output tax. Clear? Clear? Now, if I change this question, I make it more interesting. Now, observe the second question carefully. If I change this question, I make it more interesting. I tell that I filed my April return. I filed my April return, nil return. Nil return. By mistake, I filed nil return. But April month had gross output tax 11 lakhs and ITC 7 lakhs. I filed nil return. I filed nil 3B by mistake. I realized my mistake when I was there in June month. When I was there in June month. So while filing my June return, I included both April as well as June transaction. Please understand, in GST there is no concept of revision of return. Repeatedly asked 2 marks question. Can you revise your return? Answer is no. Can you revise your return? Answer is can you rectify? What is meant by rectification? I have found it in June month. I cannot go back and revise April month, but in June month I can make additions or subtractions. So in June month I am making the correction of April month. I did not report anything in April. Now I am reporting in June month. So my June month return will have June transaction plus April transactions. Plus, can I revise my return? No. Can I rectify? Yes. In which month? In the month I find out my error or omission. So I will do addition or subtraction. In this case addition. But it can be add or less. It can be add or less. Is there any last date for rectification? Yes. Very similar to your ITC. 30th November of next financial year or actual date of annual return, whichever is earlier. Whichever is in GST, last dates are there for 3 chapters. 1 ITC chapter, 1 return filing chapter rectification, and another you have it for your document chapter credit note. Document chapter. In all the 3 cases, what is the last date? 30th November next financial year or actual date of annual return of that financial year, whichever is. That is the last date where it should be corrected on portal. That is the last date where it should be corrected on. So when I tell 30th November, it doesn't mean November return. Maximum possible answer. If I file my annual return in December, assume that I file my annual return in December. It could be maximum October return of next financial year. Filed on or before 30th November of next financial year. Right. So that is how you have to understand. Now in this case, things are very peculiar. In June month, there is June transaction as well as April transaction. So June return, I filed it on 31st of July. Now please understand, delay is different for April month, delay is different for June month. Why? What is the due date for April month? Due date for April month. Due date for April month is 20th May 2025. Due date for June month 20th July 2025. So for April month, it would be 20th May to 31st July, which you have already calculated, correct? 20th May to 31st July, which you have already calculated, 72 days. 11 days of May, 30 days of June, and 31 days of July, which you have already calculated in the previous question. For July month, what is the delay? For July month, it is 20th July to 31st July. So 20th July you will not count. From date you will not count. You will count from 21st. So how many dates delay? 11 days. 11 days. 20th July to 31st July. 20th July to 31st July, not 21st. So 21 to 31, how many days? Are we guys clear with this understanding? So when you take interest for April month, you will go with 72 days. When you take it for July, you will go with. So now you are very clear that see, interest is always having three parts: principal, rate, and period. You know the rate, 18%. You know the period for April, 72 days. You know the period for June, 11 days. It is only about the principal amount. It is only about the. Now please understand, principal amount. Here we are assuming that no notice is received. Principal amount will be different for April month, will be different for June month. Now April month, what is the net output tax? April month, what is the net output tax? And July month, what is the net output tax? Please understand, government will be giving me concession for June transaction or April transaction? June. Why? June month transaction reported in June return, net output tax. But April month transaction reported in June return, gross output tax. June month transaction reported in June return, net output tax, 1 lakh. But April month transaction reported in June return, gross output tax. For April month, interest calculation will be on gross output tax, 11 lakhs. Gross output tax, 11 lakhs. For June month, it will be on net output tax, 1 lakh. Institute has asked this question, but not with this complication. Institute will give you April month transaction reported in June return, and it will ask you only for calculation of interest of April. But in reality, this will happen. I repeat, whether delay will be same for April month and June month? No. For April month, I should have paid the tax on or before 20th May. So delay will start from 21st May, 72 days. For June month, I should have made the payment on or before 20th July. Delay will start from 21st July. So delay is different, 72 days and 11 days. Rate of interest is same, 18%. Period is different. For April month, 72 days, and for July month, 11 days. First, we calculated the period. Then, the principal amount. Principal amount will be different for April month. For April month, it is April transaction reported in June return. So, you will not get the benefit. You will pay interest on gross output tax. You will pay interest on. So, you will not pay on 4 lakhs, you will pay on 11 lakhs. You will pay on. But for June month, June transaction reported in June return along with April. Along with April transaction. June month transaction along with April transaction. Forget about April. June month transaction reported in June return. Though it is late, it will be on net output tax. It will be on net output tax. This is how you have to calculate interest. A small amendment in interest. Small amendment. These two calculations will help you for calculating interest. A small amendment. Supposing for April month. Supposing for April 25 months, your gross output tax is 11 lakhs and ITC is 7 lakhs. So what is your net output tax? Correct. And your April return, finally you have filed on 25th May. 25th, what is the delay? Louder. So gross output tax or net output tax? If nothing is given, you will go with gross output tax or net output tax. So normally, if I don't give any other information, your interest calculation would have been 4 lakhs multiplied by 18% multiplied by, correct? But now a small change. The question tells that before 20th May, 20th May. I did not file. I filed my return on 25th of May. But before 20th May, I deposited in cash ledger. I deposited in cash ledger already an amount equal to 2.5 lakhs. Net payment is 4 lakhs, but I deposited 2.5 lakhs before due date. Before, and balance amount 1.5 lakhs I deposited on 23rd May. Now, government tells that, okay, no problem. For 1.5 lakhs will not give you any relaxation because you deposited after. So, we'll calculate interest for 1.5 lakhs it will be on 5 days. 18% it will be for. We will not consider 23rd May. We will not consider. So, we will not consider 23rd May. We will consider the return filing date 25th of May. So, your answer you said 4 lakhs multiplied by 18 multiplied by 5 divided by 365 suddenly becomes 1.5 lakhs multiplied by 18 multiplied by 5 divided by 365. Why? 2.5 lakhs, though you finally filed your return on 25th May, adjustment is only on 25th May, but you did it before due date. You did it before, so they are giving you relaxation. So here, first I have calculated your normal answer. Your answer would have been 4 lakhs multiplied by 18%. You will always see the final return date. You will not see 19th May, you will not see 23rd May. You will always see the final return day, 5 days delay. 5 days delay, 25th May. But now, government gives a relaxation out of 4 lakhs. If any partial amount you have paid on or before the due date in cash ledger, you already paid, it is only a procedural lapse. It is only a, because government got the amount and it was always kept there. It is only a procedural lapse. We will forgive our 1.5 lakhs and it's logical also. Government got that amount before due date. So government tells that, okay, technically it should have been 4 lakhs. But if you are giving a relaxation, because 2.5 lakhs you paid it before due date, you pay on only on 1.5 lakhs. But for 1.5 lakhs, will not give you any relaxation. We will not calculate interest only for 3 days. So this 23rd May doesn't becomes relevant. We'll calculate interest for 5 days. We'll calculate interest for. This question till date has not been asked by ICA. So last 2 attempts it is amendment. And if at all questions are got, I bet if this is not discussed, everyone would have calculated 4 lakhs multiplied by 18% multiplied by 5 divided by 365. Right? This requires an update. So this question till now ICA has not touched. If it is touching, you be prepared. You be prepared. Are you guys clear with this understanding? This is your interest calculation on your gross output tax or your net output tax. Gross output tax or your, which we have completed by way of 3 examples. Right? Now, we are worried about interest calculation on your ITC, on your wrong ITC. For this, we will take a master example, which in yesterday's paper we have solved it, which was very basic, but we will take a master example. Right? So, which will include all the ifs and buts. This is not about output tax anymore. This is about wrong ITC. Wrong ITC. So, in my April return, which I filed on 25th of May 2025, I have taken a credit. Is there any information about that? Just a second. I have taken wrong credit. I have taken wrong ITC. I have taken wrong ITC to the extent of say 10 lakhs. To the extent of say 10 lakhs. I have taken wrong ITC. This is on motor vehicles. I should not have taken, but I have taken it. I should not have taken, but I have taken it. But once I file my April return, my balance in credit ledger is more than 10 lakhs. I have taken wrong ITC of 10 lakhs, but my balance in credit ledger is more than 10 lakhs, which means I have taken wrong credit, but I have not used it. I have not used it. I have taken it, but I have not used it. So my balance in electronic credit ledger till 10th of November, I took it in April return, but till 10th of November is always more than 10 lakhs, which means I have taken wrong credit, but it is not yet utilized. It is not yet utilized. When I have filed my September 25 return, On 10th of November 2000, I have purposely given delay. I did not file on or before 20th October. I filed on 10th. I filed on 10th. My balance in credit ledger became 3 lakhs. Now wait. Did I wrongly use my credit? I took wrong credit of 10 lakhs. Now did I wrongly use my credit? When my balance in credit ledger, which was always more than 10 lakhs, suddenly became 3 lakhs. Did I use any wrong credit? How much? Louder. So interest will now be on. Interest will now be on. So now you will start interest calculation on 7 lakhs. Wait, interest rate is always 18. Now the issue is about, first you understand that it is not on availment, it is on utilization. The issue is about that period. Now, when my credit ledger was wrongly used, interest is only on wrong utilization, not on wrong availment. So what is the date when I started wrongly using it? September return filed on 10th November. Now it was because of my September return that my credit was wrongly utilized. Correct? Now I have to calculate from date. From date will always start from due date of my September return or actual date of my September return, whichever is earlier. Due date of my September return or actual date of my September return, whichever is earlier. So this calculation is nothing but due date of September return or actual date of September return, whichever is. I have wrongly used my credit while filing my September return. So which date is earlier? So interest will start from 20th. Got that? But wait, we are not done with it. For finding out the period, you require 2 dates. From date and the to date. So from date is clear. What is the to date? Till I correct my mistake. Finally, the question gives the last information that finally I realize my mistake and I reverse the ITC. When I reversed it? I reversed it on 10th June. I may realize my mistake. But I realized my mistake when? 10th June 2026. 10th June 2000. We are in 2025, but I realized my mistake on 10th June 2000. Now, to date is freeze. You require for period 2 days. From date and to date. From date and to date. Did you got the from date? Yes. When you wrongly use the credit, availment is in April return. But when you wrongly use the credit, September month. Actual date of September return or due date of September return, whichever is earlier. From date. Till I make my correction. Till I made the payment. Now, what is the delay? What is the delay? October month, how many days? 11 days. November 30, December, Jan, Feb 28, March 31, April 30, May 31 and June 10. So if I calculate, I'll get the delay as 233 days. Clear? Clear? This was yesterday's question. Exam question. May 25, exam question. But I want to make it more interesting. Now, I did not fully wrongly use it. I use only to the extent of 7 lakhs. Now my balance in credit ledger was always more than 3 lakhs till, see, from 10 lakhs it was got down to 3 lakhs, but after that it was always more than 3 lakhs till 26th June 2026. And when I paid my old dues, I got any notice from department for old years. I paid my old dues on 26th of February 2026, my balance in credit ledger became 0. So this 26th February comes from the next point. Why it was more than 3 lakhs till 26th of Feb? Because I did not pay my old dues. The moment I paid my old dues on 26th of Feb 2026, my credit ledger became now. Did I wrongly use 3 lakhs? Did I wrongly use 3 lakhs? Yes. See, when my credit ledger balance was always more than 10 lakhs, I never wrongly used my credit. When 10 lakhs became 3 lakhs, I wrongly used 7 lakhs. When 3 lakhs becomes 0, I wrongly used. Now whether interest will be on 3 lakhs? Yes. What rate? 18%. Now the question is only about period. The question is only about. Now here, did my credit became 0 or lesser because of filing any return or because of paying old dues? Because of filing, there it was because of filing September return. Is it because of filing any particular return or it was because of payment of old dues? If it is because of payment of old dues, you cannot have due date or actual date. You cannot have. So from date is that day when I paid my old dues. From date is that day when I paid my old dues. When did I pay my old dues? The question tells me I paid my old dues on 26th of Feb. Sir, why sir there is no actual date or due date? Because my credit ledger balance did not become zero because of filing a return. It became zero because I paid my old dues. I paid my, so there it cannot be any return. It is not because of filing of return. It is because of paying old dues. So payment of old dues means that particular day. That particular day, 26th of Feb, till when I corrected my mistake. This I have already seen. Finally, I realized my mistake on 10th of June 2026. I reversed entire 10 lakhs. I reversed entire. So I corrected my mistake on 10th of June. So what is the delay? February month. Only 2 days. First date will not count. So 27th and 28th. 2 days. March 31. April 30. May 31. June 10 days. 2 date is always included. So how many days delay? We'll calculate the interest. This will give you total interest. The earlier part and this part will give you total interest. ICI for inter-level may give you either the first part, which is already asked 2-3 times, May 25 exams also it was there, or it may give the second part. But in one question, I wanted to give you both the parts. In one question, I wanted to give you both the parts. Are you guys clear with this understanding? Done with the most important area of your payment chapter. The most important area of your payment chapter. Right. Now, put a 3-star mark for this small differentiation chart. Put a 3-star mark for the small differentiation chart, credit ledger and cash ledger. How do you get the amount in credit ledger? Only when you file your return, credit is received. ITC chapter, condition number 3. Only when you file your return, you get the credit. How do you get the amount in cash ledger? When you deposit through online challan. When you deposit through, how you get your amount in credit ledger? By filing your return, showing your ITC in your return. How you get the amount in your cash ledger? By depositing in through online challan. Through challan is always online. What is the utilization of credit? Can you use credit in any format? No. We have discussed that story yesterday. Credit can be used only in a particular sequence. Only in a particular sequence. First IGST credit for IGST output, then CGST output, SGST output, any ratio, any proportion. Once it is 0, CGST credit for CGST output, then for IGST output. Even if there is a balance, it can never be used for SGST output. Finally, SGST credit for SGST output, then for IGST output. If there is a balance, also it can never be used for CGST output. This is a sequence. This is the. But what is your cash ledger? Cash ledger, though it is like a fixed deposit, utilization is very strict. It is only one-on-one. It is only one-on-one. Same head. First important point that is always there. Your credit ledger can be used only for paying output tax. So yesterday in MCQs we discussed this. You can use your credit ledger only for payment of output tax. How many types of payments can be there? Total types of payments. CGST, SGST, IGST, compensation cess. Within that, tax, interest, penalty, late fees, any other amount. 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 So we call them as major heads and minor heads. Major heads and, so how many major heads are there? 4. How many minor heads are there? 5 each. 5, totally 20 minor heads. Totally clear? Please understand, your credit ledger can be used only for paying CGST tax, SGST tax, IGST tax and compensation tax. Compensation cess tax. Compensation cess ITC can be used only for compensation cess output tax. Only for tax. Whereas your cash ledger can be used for paying anything and everything. Your cash ledger can be used for paying. It can be used for paying everything. Tax, interest, penalty, late fees, any other amount. Tax, interest, penalty, late fees, any other amount. Tipla. Any payment. Any payment. So which is more flexible? Cash ledger or credit ledger? Cash ledger or credit ledger? How many major heads? 4. How many minor heads? 5. Please understand only your output tax. CGST output tax, SGST output tax, IGST output tax, compensation says output tax can be paid by using credit ledger. Can you pay RCM by credit ledger? No. Pay only by cash. Can you pay GST, TDS, TCS by credit ledger? No. Pay only by cash. Can you pay composition tax by credit ledger? No. You will not have any credit. A composition dealer will not have any credit. Can you pay interest by credit ledger? No. Only by cash. Can you pay penalty by credit ledger? No. Only by cash. Can you pay late fees by credit ledger? No. Only by cash. Can you pay any other amount by credit ledger? No. Only by cash. Only output tax. RCM is not output tax. It is input tax. Only output tax. Regular output tax can be paid by credit ledger. Please understand, though it is output tax paid by credit ledger, output tax can be fined self-assessed by you in your returns or found by officer. Found by. So it is for output tax. Whether you assess yourself or you get a notice and you pay output tax. But credit ledger can be used for paying output tax. So this is also asked whether you find it out yourself or it is found by the officer. You can use your credit ledger for paying output tax. For paying whether it is self-assessed or found by the officer or found by the. But every other payment, interest, penalty, late fees, any other amount, RCM, composition tax, GST, TDS, GST, TCS, etc., these all payments can be made only by cash ledger. Can be made only by. So this is one thing. But second thing, utilization for credit ledger, there's a sequence that you discuss now. For cash ledger, it tells one-on-one, one head against the same head, one-on-one. Though it is credit, cash ledger is very friendly. It can be used for anything. But it is behaving differently that if at all I want to pay IGST penalty and I have CGST interest, cash ledger, liability is IGST penalty, but I have an CGST interest cash, I cannot set it off. I have amount in CGST interest cash. CGST, my liability is IGST penalty. I cannot use it, but don't worry. There are 2 steps. I can transfer and use it. I can first I'll transfer from IGST. Sorry, I'll transfer from CGST interest cash to IGST penalty cash. So I can transfer. Then I'll use IGST penalty cash for IGST penalty liability. IGST penalty. So though cash ledger is restrictive, it can be used only one-on-one, but can I transfer and close it? Can I transfer and close it? Yes. So this is an example how to transfer and close it. Supposing I have amount in CGST tax cash ledger 10 lakhs, but my liability is SGST penalty. Please understand, within CGST also you have to transfer. If I have CGST tax cash ledger, but you have to pay CGST penalty liability, first I have to transfer CGST tax cash to CGST penalty cash, then set off. It is all one-on-one. It is all, but I can transfer. So it makes my job, only one step I have to do extra. One step I have to do. In this case, I have amount in CGST tax cash ledger, but I have to pay SGST penalty liability. I have amount in one cash, but my liability is other head. My liability is, what is my step 1? I'll transfer cash to cash. I'll transfer CGST tax cash to SGST penalty cash 10 lakhs. Now the amount goes to SGST penalty cash 10 lakhs. Then step 2, I'll set off my liability. Set off my liability means using cash for closing my liability. I'll use SGST penalty cash, which is now available in SGST penalty cash 10 lakhs for closing my SGST penalty liability. So now this entire 10 lakhs cash will become 0. My liability also will become 0. Clear? Clear? Cash ledger is very flexible. because I can use it for anything, everything. But it is very stringent because it is only one on one. Every minor head only against that minor head. But don't worry, you can transfer any head to any head. You can transfer any head to any head. Any head to any head. Within 20 heads, you can transfer any head to any head. Then set off. But whenever you transfer from your whenever you're transferring from CGST to SGST or SGST to CGST or IGST to SGST or SGST to IGST, if it is between S and C or S and I, S and C or S and I, if it is between S and C or S and I, back end transfer will happen. Why? Please understand, I paid cash to whom? Central government. CGST and IGST will be under control of central government. I paid actually amount to whom? Central government. But whose liability is closed? State government tells that I never got any amount but my liability is closed. I never got any amount but my liability is closed. So whenever you're transferring between C and S or I and S, back end transfer will happen. Back end, if it is between C and I, nothing will happen. C and I, nothing will happen. If it is between C and S or I and S, because one is under control of C and I are under control of central government, S is under control of. So now what will happen? Back end transfer. Now you paid the moment you are transferring from CGST tax cash ledger to SGST penalty cash ledger, central government in the back end will transfer 10 lakhs to the state government. 53A, section 53A, back end transfer. This back end transfer will not be known to the assessee. It will be between one government to another government. Are you guys clear with this understanding? Right. Please remember this very important concept of your credit ledger and cash ledger. Credit ledger only for payment of output tax. Credit ledger only and only for payment of your output tax. It's only for payment of output tax. Cash ledger for payment of any liability. Credit ledger, can I transfer my amount from one credit ledger to another credit ledger? No. Credit ledger, there is no question of any transfer. In credit ledger, can I transfer from one pocket to another pocket? Can I transfer from one pocket to another pocket? No. It can be used. I cannot transfer from one pocket to another pocket. I cannot. IGST credit, can I transfer to CGST credit? No. But can I transfer the amount from one cash ledger to another cash ledger? Any head to any head. Any head to any head. It can be transferred from any head to any head. For 1 second, you can turn it off, then on. Okay, thank you. Any head to any head. It can be transferred from any head to any head. 20 heads are there. Any head to any head. Back end transfer will also happen. Clear? Can I get the refund of credit ledger? No. Refund of credit ledger can be possible only in two cases, which is discussed in detail at final level: zero rated supply and inverted duty structure. But can I get the refund of cash ledger? Always. Cash ledger is your fixed deposit. Cash ledger is your fixed deposit. You can get the refund of cash ledger always. So what I have given in the small differentiation chart, different concepts of your cash ledger and how you get the amount in credit ledger or cash ledger, how you use the amount from credit ledger or cash ledger, can you transfer the amount from credit ledger, cash ledger, can you take the refund of amount from credit ledger or cash ledger, all are given in the small chart which is hardly 7-8 lines. So you know a lot of things about your credit ledger and cash ledger within this one chart, within this 3-star, right? And the final thing that we have to see in your payment chapter is frequently asked MCQs about CPAN and CAN. When you deposit the amount in cash ledger, again this area 3-star, this area 3 star. The last area in your payment chapter. When you want to deposit the amount, how you get the amount in cash ledger? By depositing in cash ledger. When you want to deposit, as discussed, you can always deposit only by online challan. Only by, and that online challan is technically called as CPIN, Common Portal Identification Number. Can you deposit? Can you have offline challan? No. Challan is always online, only through common portal. Only through common portal. Even if you're unregistered person, you may be asked to pay tax. If officer is catching hold of you, even if you're unregistered person, even then it is an online challan. Officer will generate challan for you, called as temporary identification number, by giving you temporary. So how a registered person will generate challan? Log in onto his portal, then generate online challan. Unregistered person, officer will give temporary identification number, then online challan. Whether you are registered or unregistered, challan is always online. And what is the name when you generate challan? The moment you generate challan, you call it as CPIN, Common Portal Identification Number, which is a 14-digit number valid for 15 days, which means within 15 days you have to make the payment. Sir, if I don't make the payment within 15 days, don't worry. Create another challan. That challan is over. Create. So within 15 days, I have to make the payment and convert my common portal identification number to challan identification number. And if I don't do it, don't worry. Create another challan. Create. That challan is over. Create another challan. Right. Now, whether manual or physical challan is allowed? No. Can I have a single challan for tax, interest, penalty? Yes. Can I have a single challan for tax, interest, penalty for multiple months? Yes. So one challan is sufficient for tax, interest, late fees, penalty, etc. Even if it is for multiple months. So challan need not be separately for tax, need not be separately for interest. It is only a deposit. So single challan is sufficient for tax, interest, penalty, etc. Not for 1 month. It can be for multiple months. So I'm making the payment for 3 months. I'm making the payment of tax, interest, late fees, penalty, etc. Can I make it through one challan? Yes. I can make through one challan. But this is only challan creation, CPIN. Did I make the payment? No. Whether amount will come in my cash ledger? No. When amount will come in my cash ledger? Only when I'm making the payment. And when I'm making the payment, only then my CPIN will become CIN within 15 days. If I don't make payment within 15 days, don't worry. Create another CPIN. Create another, and CIN will be 17 digits. 14 digits which is of CPIN, and 3 digits will be of the bank's branch code. So totally it will be 17 digits. 17 digits. Bank's branch code. Now understand, challan can be only online, but payment can be online or offline. Challan is only online. Payment can be online or offline. And whenever challan is generated, banks, for its reference, bank will have bank reference number. Assessee will have CAN number. Challan identification number on the common portal. And banks will have bank reference number, so that tomorrow if any problem is there, assessee can show the details of CIN and bank will have corresponding BRN, bank reference number. Now when you talk about online payments and offline payments, I repeat, challan is always online. Payment can be online or offline. So when you're talking about online payment, internet banking, credit card, debit card through authorized banks, or UPI payments or IMPS payment through any bank. So when you're talking about online payment, it is internet banking, credit card, debit card through authorized banks. List of banks will be there. But UPI and IMPS through any bank. Offline payment, it is NEFT, RTGS. Wait for 2 seconds and switch it on. NEFT, RTGS. Is it working now? Okay, thank you. NEFT, RTGS, any bank, over the counter payment. See, NEFT and RTGS is technically not online payment, it is offline payment. Over the counter payment. which is nothing but cash, check or demand draft. Again through authorized bank. Now forget about authorized bank, any bank. Authorized bank means what? List of banks are given on the portal. So when you are making the payment through your net banking, credit card, debit card, authorized banks. When you are making through over the counter cash, check or demand draft, authorized bank. But if you are making through UPI, IMPS, any bank. NEFT, RTGS, any bank. But wait, in all these payments, there is no limit. You can make the payment of 1 lakh, 10 lakh, 1 crore, 10 crore, 100 crores. But when it is over the counter payment, even if it is a NEFT, RTGS, no limit. If it is over the counter payment, there's a restriction. The payment can be only up to 10,000 per challan per tax period. 10,000 per challan per. So 10,000 per challan per tax period per month also. Normally tax period is month. For composition scheme it is quarter, but normally it is month. 10,000 per challan per period. But they suddenly understand that we cannot have this restriction always. If you are paying yourself, by cash, check or demand draft. It is 10,000 per challan per period. But if officer is asking you, if it is recovery of dues or deposit which is initiated by officer, this 10,000 limit will not apply. This 10,000 limit will not apply. And this 10,000 limit will also not apply for government departments and notified persons. So this 10,000 limit will not applicable for whom? If it is payment by government departments or notified persons, the payment by cash, check, demand draft can be more than 10,000 per challan per tax period. Or if you are not paying on your own, officer is demanding you payment. Officer is demanding you payment, right? By way of recovery of old dues or ad hoc deposits, pay some deposits. Then payment by cash, check or demand draft can be even 1 crore. 10,000 per challan per tax period will not be applicable. If assessee is paying on his own, it's a simple understanding. This is applicable for other than government departments. And when assessee is making payment on his own, assessee is making payment on his own. Otherwise, no. If it is for government departments, no limit. If it is for recovery of dues or any ad hoc deposit initiated by officer, no limit. No limit. Is there any limit for other payments? No. The limit is only for cash, check, DD, technically called as over the counter payment. You go and clear it. Over the counter, any other mode of payment, there's no limit. NEFT bank, NEFT or RTGS, no limit. Online payment, credit card, debit card, net banking, credit card, debit card, no limit. UPI, IMPS, no limit. Limit is only for OTC, over the counter payment. Over the counter payment, which is for your cash, check and demand draft. So that is another important area. So this completes our discussion of your payment chapter. This completes our discussion about your. So one was actually, if you look at this, one page was 5-star and one small chart, 5-6 lines, 3-star, and this small area about MCQs, CPIN and CIN. When you are talking about cash ledger, this is actually about cash ledger. How you get the amount in cash ledger? By creating online challan, then making online or offline payment. By creating online challan, then by making online or offline payment. Online challan is CPIN, common portal identification number, and when you make the payment, then it is CIN. Correspondingly, bank will have BRN. Only when you make the payment, when you get CIN, amount will be reflected in cash ledger. Amount will be reflected in your cash ledger. Right. So this is all about your payment chapter. Payment chapter. Now we will move on to your registration chapter. Certain areas where important things are there, not entire registration. Your 5 stars and 3 stars categories. Part of your registration, we have already seen it. Correct? If you recall, part of your registration, when you talk about 20 lakhs, 10 lakhs or 40 lakhs, it was nothing but registration. It was nothing but only registration. So part of your registration, we have already seen it, but not entire thing. We'll take those important areas of registration. Then we'll have a Small break, right? Important areas of your registration. Now, when you talk about your registration, one of the important area which is there, which is your state-based registration. I'll not touch registration now. I need to find that file where already examples are mentioned. We'll start with this small cutie chapter, written filing, then we'll touch your registration. Registration is actually more important. Written filing only those relevant areas we will touch it as of now. So when you're talking about your written filing, please understand your written filing you can easily walk through by only seeing the simple chart. So mark this as 3 stars. It's not a 5-star area and all. Written filing doesn't comes in your 5-star category. Mark this as 3-star. This area. Now please understand written filing is always done only by registered person. Only and only by registered persons. And normally written filing will happen after payment is done. Only when you make the payment you can do your written filing. So it is only and only by registered person, and normally you can make your filing, written filing only after making the payment. Only after making the payment. Thank you, Pa. You can sit in front. I don't know what. Right. Only after your payment is done. Now, written filing, how we'll discuss in a very simple format. Written filing is split into person based. Persons are normally regular taxable person or your casual taxable person or composition taxable person or non-resident taxable person or OIDRS, OMS, which means online information and database access and retrieval services, or online money gaming supplied from outside India. Supplied from outside India. RTP, CTP, composition taxable person, non-resident taxable person, OIDRS, OMS from outside India. These are normal persons. These are special persons. ISD, TDS deductor, TCS collector. ISD, TDS deductor, TCS collector. Please understand when you are talking about ISD, this is not basically applicable, but only this one return is not applicable. We will walk through it. ISD is basically not there. But understand the scenario. When you're talking about normal persons, Reliance Limited will have regular taxable person registration as well as ISD registration. Government will have regular registration as well as TDS registration. Amazon will have regular registration as well as TCS registration. Eco. Right? So these are extra registration. These are extra registration. Got that? I repeat. Reliance Limited may have, because it is working in multiple states, it may have regular registration, RTP, as well as ISD registration. Government department or person dealing with metal scrap may have regular registration, RTP, and TDS registration for detecting TDS. When you're talking about your Amazon, it will have regular registration for paying GST on its commission, RTP, and TCS registration for collecting TCS. You got that? So these are extra registration, special registration. And these people will file normal returns and they'll have special returns. Special returns are annual return and final return. Normal returns and special returns. Normal return, normal persons, special persons. Normal returns, special returns. Normal returns. What are the normal returns by a regular taxable person and casual taxable person? Regular taxable person and casual taxable person will have GSTR 1 and 3B. GSTR 1 and 3B. So first we'll understand about your regular taxable person and casual taxable person. Otherwise, within that chart we'll complete it. Now, regular taxable person and casual taxable person normally will have monthly return, monthly payment. Very rarely, there's a very bogus scheme called as QRMP scheme, scam. In the name of simplification, they have complicated. Quarterly return, monthly payment. Name itself is a scam. QRMP, quarterly return, monthly payment. It should have been monthly payment, quarterly return. It should have been monthly payment, but we are calling it as QRMP. Now understand that payment is always monthly. Return can be monthly or quarterly. And this return, when it is quarterly, it is applicable only if your aggregate turnover in your previous year is up to 5 crores. Aggregate turnover in your. So ICA also understands it. They have not asked a lot of questions about QRMP scheme. Though a lot of questions can be asked. They have not asked. They have restricted themselves to when you can go for QRMP scheme. Who can go? Regular taxable person or casual taxable person. When their aggregate turnover in previous year, previous financial year is up to 5 crores. Is it mandatory or optional? I can ignore QRMP scheme. I can continue to make payment, monthly return, monthly payment, monthly return, monthly payment. If I go under QRMP, monthly payment, quarterly return. Payment will be monthly, but return filing will be quarterly. Now, normally, what happens in your MRMP scheme? I am taking an example of April, May, June month because QRMP scheme is a comparison. MRMP scheme and QRMP scheme is for regular taxable person and casual taxable person. Don't bring composition. It is for regular and casual taxable person. Casual taxable person. And I said GSTR 1 is sales information. And Italy is GSTR 1, mini Italy is IFF. IFF is also sales information. Invoice furnishing facility is also sales information. Same only. GSTR 1 sales information. IFF is also sales information. But after that, there will be payment and 3B. Payment and 3B. For April month, MRMP scheme does not have mini Italy. It will be only GSTR 1. So April month, GSTR 1, 11th May. Payment and 3B, 20th May. For May month, GSTR 1, 11th June. Payment and 3B, both payment, without payment return cannot be filed. Payment and 3B, 20th June. For June month, GSTR 1, no IFF. 11th July, payment and 3B, over. It's very normal. Your MRMP scheme. GSTR 1 only will be there and it will be next month 11th. Payment and 3B will be next month 20th. Without payment 3B cannot be filed. Payment and 3B will be next month 20th. What happens if it is QRMP scheme? Which is mandatory or optional? Optional. Applicable for all or only limited? Limited. If your previous year aggregate turnover is up to 5 crores. Only if your previous year aggregate turnover is up to 5 crores, you may go for QRMP scheme. Right. Now, here your IFF and GSTR both will come. Obviously, payment and 3B continues. For April month, there will not be any. Now, mini Italy will replace Italy. Because return is quarterly. Return is. So now IFF will be that 13th May. Not 11th May, 13th May. Whether there is any GSTR 1? No. Why? It will be quarterly. It will be quarterly. Whether payment will be there? Yes, because monthly payment, quarterly return, monthly, but payment is not 20th now, it is 25th. So you get 2 more days for your sales return and 5 more days for your payment. So April month, whether GSCR1 or IFF, IFF, not 11th May, 13th May, 2 extra days. April month, whether payment will be there? Yes. 3B? No. Return is quarterly. So payment, it is not 20th of May, it is 25th of May. No 3B. No 3B. May month, same. Whether GSCR1 will be there or IFF will be there. Italy or mini Italy? Italy or mini Italy here? It is mini Italy. No GSCR1, it is IFF. 13th June. 13th June. And payment will be there? Yes. Payment will be there? Yes. 25th June. No 3B. No 3B. Finally, June month. When you are talking about June month, Italy will be there or mini Italy will be there? Italy. GSCR1 will come. Quarterly return. Quarterly return. Now your IFF will not be there. It will be replaced by GSTR1. Because when main Italy is there, mini Italy will not be there. But when you're filing your GSTR1, it is not only for your June month, it is for April, May and June month. Whatever you have not reported in IFF will come here. First, filing of IFF is optional. Second, it cannot be filed after due date. Third, it will have only B2B. Fourth, it will be having only transaction up to 50 lakhs. I repeat, IFF is optional. GSTR1 is mandatory. IFF is second. Can it be filed after due date? No. So no late fees because it cannot be filed after due date. Third, it can have only B2B. It cannot have B2C. So B2C will all come in GSTR1. Even if it is of April, it will come in quarterly GSTR1. Fourth, it can have B2B, but only up to, if in April I have B2B 60 lakhs and B2C 20 lakhs, I can report B2B only 50 lakhs, balance 10 lakhs, quarterly GSTR1 and B2C 20 lakhs. Right. Are you guys clear with this understanding? So April to June, quarterly GSTR1, 13th of July. So 13 continues. 13 continues. Extra 2 days. 13 continues. 13 continues. But for IFF, April month and IFF May month, it is 13th of next month. But for GSTR1, it is 13th after the end of the quarter for entire quarter. For entire 13 July only. But for not June month, it is for April to June. April to June. Whatever I have not reported, I'll report now. Now payment will be there. Yes. But now payment will be along with 3B. So now payment and 3B will be quarterly. Now it is not 25th. Suddenly they change. 22nd for southern part of India and 24th for northern part of India. 22nd July and 24th July. 22nd July or 24th July. If you're there in Tamil Nadu, 22nd July. If you're there in Delhi, 24th July. 22nd July or 24th July. For southern part of India and for northern part of India. Right. So first month payment was there, 3B was not there. 25th of April, 25th May, 25th June. But entire quarter, April to June, not only June, April to June, payment and 3B. It is not 25th of July now. It is either 22nd July or 24th July. How to remember northern part and southern part of India? Just remember the southern states. And normally you know that your Pondicherry, southern or northern? Lakshadweep, southern or northern? Andaman Nicobar, Tamil Nadu, Kerala, Karnataka, Andhra, Telangana. Now you have to be very careful. Dadar and Nagar Haveli, Daman and Diu. No, southern. There are certain confusion, but you will take it in southern. Maharashtra. Goa is missing out, but Goa. Maharashtra, Goa. Southern. Maharashtra, Goa will come in southern. Gujarat. See, these are the areas where you can have doubt. Gujarat will also come in southern. Chhattisgarh, southern. Madhya Pradesh, southern. So don't remember all the states. Southern states, remember few states. Dadar and Nagar Haveli, Daman and Diu. Goa, Maharashtra, Gujarat, Chhattisgarh, and if you remember them, everything you remember. So you know the entire list of southern states. Rest all is northern. Rest all is northern. Goa is missing out there, right? Goa also, right? Goa as well. Are we guys clear with this entire understanding? Are we guys clear with this entire understanding? Right. Now, composition taxable person. Now it's all one liner. Composition taxable person. Yes, please.
Like calculated,
That was I rather this would be the next step. I was expecting this QRMP scheme to be taken away for the last 2-3 years. Right? Why it is a scam? Rather, in the name of simplification, it is more complex for me. I have to again see when June is over. I have to again see April month and June. Very headache. And payment is anyways monthly, so it is very confusing. In payment, there is two methods: self-assessment method, fixed sum method. I have not taken, not so important. SA method, which is output tax minus input tax, or fixed sum method, which is some percentage, 35% or 100% depending on the case. I have not taken, not important. So complicated. You are giving for whom? Small persons. In the name of what? Simplification. But you are creating what? Complications. So if you recall, 7-8 minutes back, I said this scheme is scam. Right? So either remove it or make it like what you said. Right? QRMP scheme. You can make it as QRQP. Quarterly return? But no. They want payment early. They want payment early. Right? So thanks that you have again validated my point. The reason is when I said scam, might be a lot of you did not understand. In the name of simplification, Thambi, in front in the name of simplification, they have made it more and more complex. More and more complex. Now, composition scheme, return. Please understand composition scheme, quarterly payment and yearly return. It's called Shankar once. Quarterly payment and yearly return. It is quarterly payment plus yearly return. Quarterly payment, yearly. Quarterly payment is when? April to June, 18th July. April to June, 18th July. So if it is quarterly payment, and if you see, what is this quarterly payment? April to June, it is 18th July. 18th July. July to September, 18th October. October to December, 18th Jan. Jan to March, 18th April. So quarterly payment, CMP 08. CMP, yearly return, GSTR 4. Yearly return, GSTR 4. Yearly return is 30th June after the end of the financial year, which means for financial year 25-26. 30th June 2026. After 3 months of the end of the year. 30th June 2026. So quarterly payment CMP 08. After the end of the quarter, 18 days. After the end of the quarter, and yearly return 30th June. After the end of the year, 3 months, 30th June. GSTR 4. That's it. Over. That's it. Over. NRTP. NRTP is very special. Payment and GSTR 5. Payment and GSTR 5. No separate. Payment as well as your GSTR 5 will be 13th after the end of the month or 7 days from the last date of registration, whichever is earlier. Whichever is 13th of the next month or 7 days from the last date of registration certificate, whichever is earlier. Now look at this example. I have compared this because CTP and NRTP are very important and you will always feel that they are having something common. Why? Both will have temporary registration. Both will have maximum 90 days. Maximum, right? Now CTP and NRTP will be applicable if any person is going to other state for a business exhibition where he is not having any presence. If Adani comes in Tamil Nadu and Tamil Nadu it is not having any branch, then Adani in Gujarat is regular taxable person, but Adani in Tamil Nadu is casual taxable person. If in the same business exhibition, Trump is also coming in NRTP because Trump is not having any presence in entire India. Adani was having presence in Gujarat, regular taxable person, But in Tamil Nadu, no branch. CTP. Trump is not having any place of business or residence throughout India. So in Tamil Nadu, Trump will take NRTP registration. Got that? Got that? So when you're talking about CTP, NRTP, they will come and participate in business exhibition or trade fair for some time and go away. So that will be maximum for 90 days. So the registration is given from 10th April to 4th June. 10th April to maximum 90 days. So 90 days on the last date mentioned in the registration certificate, whichever is earlier. If the business exhibition is getting over on 4th June, they'll stop there. They will stop there. The last date on the registration certificate will be 4th June. Will be 90 days is yet to get over. But last date on the registration certificate will be 4th June. Right. Now CTP, please understand, CTP will file 1 and payment along with 3B. Only NRTP will go with payment along with 5. For CTP, it is normal GSTR1, GSTR3B. And whenever you are writing 3B, 3B is always along with payment. 3B is always along with, right? So 1 and payment 3B. For NRTP, it is payment and GSTR 5. Correct? For CTP, April month, 11th May, GSTR 1. Payment and 3B, 20th May. For CTP, May month, 11th June, GSTR 1. Payment and 3B, 20th June. Already simple, normal answer only. June month, 4 days. June month, 4 days. 11th July, GSTR 1. Payment and 3B, 20th July. We have assumed that CTP has not gone for the scam. We have assumed that CTP has not gone for the scam. Clear? This is for your CTP. This is for your CTP. What about your NRTP? NRTP for April month, 13th of next month, or 7 days from the last date of registration certificate, which is 11th June. Last date of registration certificate is 4th June. Last date on your certificate is 4th June. And 7 days will be 11th June. 7 days will be 11th June. So 13th May or 11th June, which is earlier? Which is earlier? So for April, 13th May. For May, 13th June or 11th June, which is earlier? So 11th June is freeze. 7 days from the last date of 7 days from the last date of registration certificate is 11th June is freezed. 11th June. For June month, 13th July or 11th June, which is earlier? Now, if you look at this carefully, you are getting same due date for 2 returns. You are getting same due date for 2 returns. You can be here for 15-20 minutes. Same due date for 2 returns. Right? Normally, if I tell, can 2 returns have the same due date? Answer is no. But answer, yes, it is possible in rare cases. It is possible in rare cases. Correct? You are getting the same due date. 2 returns are there. May return is separate, June return is separate. June will not be the same return. 2 returns, but same due date. But same due date. Are you guys clear with this understanding? Are you guys clear with this understanding? That is for your NRTP. Payment and GSTR 5. Now what about OIDRS, OMS outside India? OIDRS, OMS outside India. Your payment and GSTR 5A. Payment and GSTR 5A is 20th of next month. Is simple, 20th of next month. April month, 20th May. Return form is 5A. Return form is 5A. May month, 20th June. June month, 20th July, etc. 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 Done. These are all normal persons, special persons. ISD. ISD will book the credit, pass on the credit. Head office is going to give the credit to the branch office. Please understand, ISD, there won't be any payment. It is only going to book the credit, pass on the credit. Book the credit. So now payment will not be there. Payment is cancelled. Payment is cancelled. It is only GSTR 6. GSTR 6, 13th of next month. April month. April month. 13th May. May month. 13th June. June month. 13th July, etc. etc. For TDS and TCS. For TDS and TCS, TDS, there will be payment and 7. TCS, there will be payment and 8. Payment and GST are 8. For TDS and TCS, it is 10th of next month. It is 10th of next month. April month, 10th of May. May month, 10th of June. June month, 10th of July. So on. For TDS, payment and GST are 7. TCS, payment and GST are 8. TDS is by government or person dealing with metal scrap. Government or person dealing with metal scrap. Government companies. Normally government will come separately here. Government and government companies and person dealing with metal scrap. TCS is by electronic commerce operator through whom you are selling Amazon. Right. Now understand, when government companies and person dealing with metal scrap is making the payment of TDS, they will make the payment by cash. I will get in cash ledger. If they are deducting TDS against me, I will get in my cash ledger. If Amazon is paying TCS and I am supplying through Amazon, I will get in my cash ledger. Amazon will pay by cash. I will get in my cash ledger. What about your ISD? My head office will take the credit, pass on the credit. Take the credit, pass on the credit. So branch office, head office will pass on the credit. Branch office will get in credit ledger. Branch office will get in credit ledger. TDS and TCS will be paid by, TDS is paid by government companies, person dealing with metal scrap. TCS by Amazon, online electronic commerce operator. These people will pay by cash, whether it is TDS or TCS. And the person against whom TDS or TCS is deducted or collected will get in cash ledger. Opposite person will get in cash ledger. And ISD, head office distributing the credit to branch office. So head office will distribute the credit. Branch office will get the amount in credit ledger. Right? As I said, these are extra registration. These are Reliance Limited will have normal registration for all the branch offices plus ISD registration. Government companies and person dealing with metal scrap will have normal registration and TDS registration for deducting TDS. Amazon will have normal registration for commission payment, GST payment on commission, GST payment on, and TCS registration for collecting TCS. Right? Special registrations. These are extra registration. Now, normal persons, special persons. Returns we have seen. Right? Starting from 1 to 8. Right? Starting from 1 to 8. 2A to B we have already seen yesterday. 2A to B is relevant only for RTP, CTP. RTP and we have seen it already yesterday. What about special returns? These people will have two special returns, annual return and final return. Annual return is there only for regular taxable person, composition taxable person and TCS. Regular taxable person, composition taxable person, and it is not there for CTP. It is not there for, it is only there for regular taxable person. GSTR 9, composition taxable person 9A, TCS, Amazon 9B. It is only there for regular taxable person, GSTR 9, not for casual taxable person, not for casual taxable person. 9A, composition taxable person. 9B, Amazon collecting TCS, TCS collector, TCS 9, 9A, 9B is only there for regular taxable person, no CTP. Composition taxable person 9A and 9B for TCS collector. Right? And all these three returns due date is 31st December after the end of the year, which means for financial year 25-26, it is 31st December 2026. 31st December 2000, after the year is over, 9 months time. After the year is over, 9 months time. And these annual returns, payment is not mandatory. You may, if at all there's some payment, you may make the payment or you may decide not to make the payment. So it is only for returns. It is only for returns. Clear? Clear? So annual returns there only in 3 cases. And when you talk about your regular taxable person, when you talk about your regular taxable person, your 9 can be along with 9C. Your 9 can be along with 9C. If your aggregate turnover is more than 5 crores. Now, you don't take it for previous year because annual return is filed after the year is over. Annual return is filed after the year is over. If your aggregate turnover is more than 5 crores, 9 along with 9C. 9 along with 9C. So what is 9C? Reconciling your books, annual audited financial statements and your GST, annual return. Reconciliation between your books, annual audited financial statements and your GST, your annual return, GSTR 9. Whether it is certified by CACMA? No. Self-certified. It is self-certified. So when your 9 will be along with 9C, when your aggregate turnover in that financial is more than 5 crores. What if your aggregate turnover in that financial is up to 5 crores? You will file only 9. You will file only 9. 9C is not required. You are going to file only 9. 9C won't be required. If it is more than 5 crores, 9 with 9C. If it is up to 5 crores, only 9. Only 9. Are we guys clear with this understanding? So that is about your annual return. Annual return. Yes, please. So we were discussing your annual return. Annual return. When your aggregate turnover is more than 5 crores, you have to file 9 and 9C. But when your aggregate turnover is up to 5 crores, you are required to file only GSTR 9. And what is GSTR 9C? What is your GSTR 9C? GSTR 9C is nothing but your reconciliation statement reconciling your annual audited financial statements with your annual return, with your annual GSTR, which is GSTR 9, which is GSTR 9. In simple language, reconciling your books and GST. Reconciling your books and GST. Now, when you talk about your annual return, as discussed, it is filed only by RTP, GSTR 9, casual taxable person, no annual return. No annual return. Composition taxable person 9A, but no one has filed till now. It is irrelevant. It is a ghost. Because anyways, they are going to file yearly return. And 9B by TCS collected. By TCS collected. Amazon. Right. There is another special return called as final return. This final return we have discussed in your ITC chapter. When you are cancelling your registration, you have to reverse the ITC on stock. You have to reverse the ITC on stock. Correct? Stock of inputs and capital goods. Stock of inputs and?
Not for capital goods.
No, ma. It is only for availment. Availment, not for capital goods when you take new registration. So when you talk about ITC availment, it is also on inputs and capital goods. If it is composition to regular, inputs and capital goods. Exempt supply becomes taxable supply, inputs and capital goods. New registration, only inputs, not for capital goods. That is all about availment. Now we are discussing about availment or reversal. So I highlighted the mistake that you are trying to tell now. Don't mix both. Here it is about reversal. Government loves it. So whether it is regular to composition or exempt supply, your taxable supply becomes exempt supply, or you are cancelling your registration. It is both on inputs and capital goods. And 1 year is not relevant. Whether it is last 1 year old or more than 1 year old, not relevant for reversal. So we are talking about cancellation of registration. Cancellation of, out of 3 cases, the last case is cancellation of, in case of cancellation of registration, you are going to file a final return. You are going to file a final return, GSTR 10. GSTR 10, giving the details of stock of both inputs and capital goods so that you can reverse the ITC on the same. You can reverse the ITC on the same. This final return is required to be filed only by 2 persons, RTP and CTP. RTP and CTP. So this particular final return will have payment and 10. It will be along with payment. Reversal of ITC is nothing but payment. Payment and GSTR 10 filed by both RTP and CTP. Filed by both RTP and CTP. Here CTP will be coming. Here CTP will be coming. What is the timeline? Timeline is 3 months after the order of cancellation. Supposing order of cancellation comes today. Order of cancellation comes today. Say 12th August. And effective date of cancellation is 1st Jan. Retrospectively. Whichever is later or whichever is earlier? Whichever is later. Date of cancellation, effective date of cancellation or order of cancellation, whichever is later. If order of cancellation comes today on 12th August and it tells that it is effective from 1st Jan 2025, you cannot go back. So whichever is later, you'll have 3 months time. You'll have 3 months time. Are you guys clear with this understanding? Right. So this is at the time of that cancellation. This is at the time of that cancellation of registration. Why? Because you have to reverse ITC on the stock of inputs and capital goods. Also capital goods. So payment and GST attend. Payment and, is it filed by everyone? No. It is filed only by RTP and CTP. Composition taxable person? No. Generally they don't have ITC. NRTP, no ITC other than IGST on input of goods. OIDRS? No. So it's only by these two people. RTP and CTP. RTP and no one else will file final return. No one else will file annual return by 3 people. RTP, composition taxable person, TCS collector. Final return by 2 people. RTP and CTP. RTP and CTP. Are you guys clear with this understanding? Very special returns, not relevant for your inter level. So I am not touching more about your UIN and your job worker return. So these are very special returns. Normal persons, special persons, normal returns, special returns, very special persons, very special returns. Not that for you. Not relevant for you. We are not touching that. Now, if you see this important area of chapter, this is 3-star. So this almost cover everything about your return filing in a very simple chart, 1 page. Everything is very crystally clearly given to you. You can easily remember all the different types of returns and their due dates right? There is a return called as first return, which is not coming here. First return is at the time of birth and rebirth, new registration and revocation of suspension. New registration and, why it is not that? It is not any special return. It is a normal return which is filed for group of months together. Supposing I am liable for registration in April, but I get registration in June. So I will file June return. I will file, but it will be for April, May and June transaction. So I will file GSTR1 for April, May and June. 3B for April, May and June in June return. So your first return concept is there? Yes. But we have not seen first return anywhere. Why? First return is any normal return that you file. Normally what are the returns? 1 and 3B. But it is for a group of months together. It is for a... So if you are liable for registration in April, but you get registration in June, you can file only June return. You can file only... But it will include transactions of April, May and June. Group of months in June return. Group of months in... So your GSTR1 for June will be 11th of July. 3B, payment and 3B will be 20th of July. But it will include transactions of April, May and June. So that is your first return. That is your final return at the time of death. First return at the time of birth and rebirth. Birth and... What are the two cases? New registration and revocation of suspension. New registration and... So that is an area. And another 3-star mark for late fees. Repeatedly ask questions. Late fees. Repeatedly. So whether there will be any late fees? Yes. If you're filing your GSTR 1 or 3B late, there will be late fees. For late payment interest, we have seen in your payment chapter. For late return filing, late fees. Late return filing, late fees. So if at all your 1 and 3B is nil, if your 1 and 3B is nil, no return, nil return, then late fees is 10 per day or 250, whichever is lower, whichever is, if at all there is 3 days delay. How many days delay? So 10 per day means 30 days or 250, whichever is lower. Please understand the answer is only for CGST late fees. Copy paste SGST. Copy paste. So answer will be 30 plus 30. 30 plus 30. If at all your 1 and 3B returns are nil return. Nil return. So it is 10 per day or 250, whichever is lower, not higher. Whichever is, that is CGST late fees. Copy paste SGST. Same amount will be for SGST. What if it is not nil return, a normal return which contains the details, Then Then you have to ask yourself whether your aggregate turnover of previous year is up to 1.5 crores or 1.5 crores to 5 crores or more than 5 crores. Small, medium, large. Small, medium and large. Up to 1.5 crores, 1.5 crores to 5 crores, more than 5 crores. The smaller you are, the lesser will be the late fees. The bigger you are, the higher will be the late fees. So normal return, if it is up to 1.5 crores. If it is up to 1.5 crores, your previous year aggregate turnover, your previous year aggregate turnover is up to 1.5 crores. You are filing your 1 and 3B current year, but your previous year aggregate turnover is up to 1.5 crores. It is 25 per day or 1000, whichever is lower. Supposing again we'll always stick to 3 days. 3 days delay means how much? 75 or 1000. Which is lower? This is for CGST late fees. Copy paste, SGST. So it is not 3 days delay, it is 300 days delay. 300 days delay. 75 will become 7,000. So 7,500 or 1,000. So copy paste. So CGST 1,000, SGST 1,000. Right? But if it is 1.5 crores to 5 crores, previous year aggregate turnover, then 25 per day remains the same, or 2,500 or 2,500, which is low. This is CGST, copy paste, SGST. If there is a 3 days delay, 75 or 2,500, which is lower? 75. If it is 300 days delay, 7,500 or 2,500, which is lower? 2,500 is CGST late fees, copy paste, SGST. Right? If it is more than 5 crores, previous year aggregate turnover, then again 25 per day or 5,000, whichever is lower. If it is 3 days delay, 75 or 5,000, whichever is lower. 75 is CGST, copy paste, SGST late fees. If it is 300 days delay, 7,500 or 5,000, which is lower? 5,000. Copy paste, SGST late fees. Copy paste, SGST late fees. This is how you have to calculate. This is for 1 and 3B. This is for, and don't worry, when you know for late fees for 1 and 3B, the same is the late fees for GSTR 4. The same is the late fees for, you need not remember it separately. Sir, whether there's any late fees for CMP 08 quarterly? No. CMP 08 is payment. There won't be any late fees, there will be interest. There will be interest. There will be, so it is only for GSTR 4. GSTR 4. Right? So GSTR 4, I am not even touching it. Why? Again, if it is nil GSTR 4, 10 per day or 250, whichever is lower. If it is normal GSTR 4, 25 per day or composition scheme means always your previous year aggregate turnover is up to. So you not even buy it. Always in composition scheme dealer, your previous year aggregate turnover will always be up to. So what is the amount? 25 per day or 1,000, whichever is. You need not remember. You need not remember. Next, if it is your TDS return, if it is your TDS return, if it is nil TDS return, if it is nil TDS return, then late fees is 0. Then basically TDS returns are generally filed by government companies. Also now person dealing with metal scrap. So government, they tell if it is nil return, it is 0. But if it is normal TDS return, GSTR 7, then 25 per day or now no previous year aggregate turnover and all. Whatever is your previous year aggregate turnover, 25 per day or 1,000, whichever is lower, copy paste, SGST. Now I am not going to take the numbers. You know how to play with the numbers. 25 per day or 1,000, whichever is lower, copy paste, SGST. Right? Nil TDS return, GSTR 7, 0 late fees. Normal TDS return, 25 per day or 1,000, whichever is lower. Right? All other returns. Now what are the all other returns? Your all other returns would be GSTR 5, GSTR 5A, GSTR 6, GSTR 8, because TDS 7 separate late fees. GSTR 9B, annual statement comes here. 9A separate, but 9B comes here. GSTR 10. other than 1, 3B, 4, 7, 9, 9A. Other than 1, 3B, 4. 1, 3B, 4. 1, 3B, 4 is not 1, 3B and 4. 7, 9, 9A. 7, 9, 9A, everything else. So you'll 5, 5A, 6, 8, 9B and 10. Then for them, they tell that whether it is nil or normal, whether it is nil or any return, whether it is nil or normal, look at the compare your GSTR 7 and this. When it is for government tells nil means 0, normal means 25 per day or 1000, whichever is lower. But when it is for others, government changes its stance. Any return, whether nil return or normal return, it is 100 per day or 5000. Now, first time you're saying 100 per day. 100 per day or 5000. 3 days delay. 300 or 5000, whichever is lower, 300. Copy paste, SGST. If it is 300 days delay, 30,000 or 5,000, which is lower? 5,000. Copy paste, SGST late fees. Copy paste, SGST late fees. Clear? Now, when it is your annual return 9 and 9A. 9 and 9A. 9A is a ghost. 9A no one has seen. It's typically only 9. 9A till date no one has ever filed. So it is only 9. It is only 9. Again, you divide into 3 categories. Small, medium, large. Small, medium. Now this time, you will go with aggregate turnover of current year. Why? Why not previous year? Why current year? Why not previous year? Because when you talk about the previous scenario, you are filing 1 and 3B for current year, current month, current year. But you don't know what will be your current year turnover because you are filing now. Your base will be only previous year. Here, you are filing GSTR 9 after the year is over. So you know the aggregate turnover of that year. You know the aggregate turnover of that year. Got that? So here it is aggregate turnover of that year. Aggregate turnover of that year because annual return is filed after the year is over. After the year is over. Now, there, whatever was big, here it is small. Up to 5 crores. There it was 1.5, 1.5 to 5, more than 5. Here it is up to 5. Up to 5. 5 to 20, more than 20. 5 to 20, more than 20 crores. 5 to 20, more than 20 crores. Small is up to 5 crores. Medium is 5 crores to 20 crores. And large is more than 20 crores. What are the late fees? 25 per day if it is small, up to 5 crores. Or 0.002% of state turnover. State turnover. Whichever is lower. Whichever is, assuming that your turnover is 1 crore. And delay is 3 days. 25 per day is 75. Now 1 crore multiplied by 0.02 percentage. 0.02 percentage. 2000. So 75 or 2000, which is lower? Copy paste, SGST late fees. Got that? But if we are in medium category, 5 crores to 20 crores. Now that 25 becomes 50. 25 becomes 50 per day or same 0.002% of state turnover, whichever is lower. Same 3 days delay. 3 days delay means now it is not 75, it is 150. It is 150 or assume that now I cannot take 1 crore turnover. My turnover is say 10 crores. 10 crores multiplied by 0.02 percentage. 20,000. So 150 or 20,000, which is lower? 150. Copy paste, SGST late fees. Right? And if it is big category, large category, now 25 becomes 50, 50 becomes 100. 100 per day in the initial 2 areas, 0.02 percentage. 0.02 percentage. Suddenly now it becomes 0.25 percentage. 0.25 percentage. Assume your turnover is 30 crores. Your turnover is 30 crores. 30 crores multiplied by 0.25 percentage. 30 crores multiplied by 0.25 percentage. 7 lakh 50,000. And assume that there is 300 days delay. 300 days delay. 30,000 or 7 lakh 50,000, whichever is lower. So you'll get 30,000 CGST late fees, copy paste, SGST late fees. Like this is repeatedly asked, calculation of late fees. Generally they ask question about 1, 3B or 9. Either 1 3B or 9. This requires remembrance. There's no other option. This requires remembrance. Are you guys clear with this understanding? Are we guys clear with this understanding? Calculation of late fees. Calculation of late fees. Now there is one more important area which you have already discussed. I'm just going to mark that area. Can you rectify your returns? Can you revise your returns? Can you revise your returns? Revision of returns is not possible. Revision of returns is not possible. Can you rectify? Yes, you can rectify in the month in which you find the error or omission. We took an example while calculating your interest, correct? April month return, by mistake you filed nil. In June month you realize it. Can you revise your April month return? No. But in June month you cannot. You can do what? Include June transaction and April transaction. Rectification. Rectification, is that got any time limit? Yes. 30th November of next financial year or actual date of annual return, whichever is earlier. Right? There's one more point. Rectification is possible only if you find out the error or omission. If proper officer is finding out the error or omission, if proper officer is finding out the error or omission on account of scrutiny, audit, inspection, enforcement, whatever, officer is finding out. Officer is finding out. You cannot do rectification. If you find out the error or omission, rectification possible. If officer is finding out the error or omission, rectification is not possible. Rectification is not. And even when you are finding out the error or omission, rectification is possible, but that's a timeline. That's a timeline. So that is all about your rectifications. These are the areas where you have the questions asked from your written filing chapter. Written filing chapter. Now, when you talk about your another small topic, which is your TDS and your TCS. TDS and TCS. We are only going to discuss this chapter, the basics. Only this area, put a 3-star. Only the small tabular column, first page, small tabular column, put a 3-star. As discussed, when you talk about your TDS will be applicable when you have government contracts. When the recipient happens to be government or government agencies or government undertakings. Normally government will come, government companies will not come, but here everything will come, be it government or government agencies or government undertakings, including government societies. So now it is government and government companies, government undertakings, government societies, everything. Clear? So now it is all, whether government is included, yes. Whether government companies, public sector undertakings, yes. Governmental society, yes. Governmental agencies, yes. Now everything is coming together. Government bodies also are coming. Now it is not only government, it is government, government agencies, government undertakings. Government undertakings. So government undertakings will include government control body, more than 51%. Public sector undertakings, more than 51%. Government society, more than 51%. Everything. So now everyone is coming. Or the recipient is a registered metal scrap dealer. Registered metal scrap dealer. So initially it was only government, government agencies and government undertakings. Now recipient can also be registered metal scrap dealer. Metal scrap dealer. When the contract value, it is not transaction value now. When the contract value, single contract value, supposing the contract value is 10 lakhs, but supplier is supplying 1 lakh, 10 invoices. Whether TDS is applicable? Yes. The contract value is more than, it is not, contract value is not more than or equal to, it is more than 2.5 lakhs. It is, if it is 2.5 lakhs, no, it should be more than 2.5 lakhs. It should be more than 2.5 lakhs. When the contract value is more than 2.5 lakhs. Condition number 1. When the recipient is government agencies, government undertakings, or registered metal scrap dealer. Condition number 2. Contract value is more than 2.5 lakhs. Your GST TDS will be applicable. When is your GST TDS applicable? When you are supplying goods and services through ECO, through Amazon or any other online platform, electronic commerce operator. Supplying goods or services through ECO, and payment is also collected through ECO. You don't get the payment in your bank account. So you supply through ECO, consideration is also through ECO. Supply is through ECO, consideration is also through ECO. Right? And it is not covered under 9.5. 9.5, supply will not pay GST, recipient will not pay GST, ECO will pay GST. So what are the two criteria? Supply through ECO, payment through ECO. Not a 9.5 case. Not a 9.5 case. Supply through ECO, payment through ECO. Not a. Here amount is irrelevant. Even if it is for 100 rupees, TCS is there. Even if it is for 100 rupees, TCS is there. And TCS will be on what? TCS will be on gross value or net value. Supply minus supply return. If I have supplied to Amazon 10 lakhs in this month and my supply return in this month is 2.5 lakhs, TCS will be on 7.5 lakhs. TCS will be on 7.5 lakhs. Supply in August month 10 lakhs. Supply return. I would have supplied earlier, but return is happening in August return. Supply return 2.5 lakhs. TCS will be on 7.5 lakhs. TCS will be on. So supply minus supply return. Obviously 9.5 will not be counted. 9.5 is outside TCS. Outside TCS. Now there are actually 3 conditions for TDS. What are the 2 conditions that we have discussed? One, the recipient. Government is not supply. Government is the recipient is government agencies, government undertakings, or registered metal scrap dealer. Metal scrap dealer who's a registered person. Second, contract value is more than? Not more than or equal to, more than 2.5. Third, supplier and recipient. Supplier should be other than government agencies, government undertakings. Recipient should be government agencies, government. So both supplier and recipient should not be government undertakings and government agencies. So they tell that if both supplier and recipient are, see, recipient by default is government agencies, government undertakings. So what is the third extra condition? You remember the third condition this way. Supplier should not be government agencies, government undertakings. Supplier should not be government agencies, government. If I'm not clubbing all now, supplier should not be government agencies, government undertakings. Don't talk about metal scrap dealer. Supply should not be government agencies, government undertakings. Recipient should be government agencies, government undertakings, or a registered metal scrap dealer. Contract value more than? Obviously, contract value, just like transaction value, will not include GST. Will not include GST. But it is not transaction value, it is the contract value, entire contract value. Fourth, it should not be a case that supplier and place of supply, location of supplier and place of supply is in Maharashtra. Location of supplier and place of supply is in Maharashtra and recipient is in Bihar. By the way, who's the recipient? Government. Forget about metal scrap dealer for the time being. Who's the recipient? So if recipient is in Bihar, recipient, that is government, is in Bihar, and supplier, location of supplier is Maharashtra, place of supply is Maharashtra. If LOS and POS is in Maharashtra, what is the type of transaction? Location of supplier Maharashtra, place of supply Maharashtra. What is the type of transaction? Louder. Type of transaction is CGST Maharashtra, SGST. CGST Maharashtra, but where is the government? Where is the government? Bihar. Now, can the government in Bihar deduct CGST in Maharashtra TDS? No, it can only deduct IGST TDS. But the type of transaction is? Type of transaction is CGST and Maharashtra SGST. But the government in Bihar cannot deduct CGST and Maharashtra SCST because it is not registered in. So they tell no. Government, you are our person. Forget about this TDS. See, understand why they are removing this point, because they understand that if the recipient is government and it is there in some other state, but LOS POS is in one state, LOS POS is in Maharashtra, so it is CGST, Maharashtra SGST, but LOR, recipient government, is in Bihar. Now, the government which is there in Bihar can only detect IGST, TDS, but now it is required to detect CGST and Maharashtra SGST, CGST and for which it has to take registration in. No, forget about it. No TDS. No TDS. So now what are the 4 conditions in total? 1. Supplier should not be government, government agencies, government undertakings. Recipient should be government, government agencies, government undertakings or registered metal scrap dealer. 3. Contract value other than GST only. Contract value just like transaction value other than GST should be more than 2.5 lakhs. 4th, it should not be a case where LOS and POS is in one state. Location of supplier, place of supply is in one state, but LOR, location of recipient, in another state. If it is a case where LOS and POS is in one state and LOR, location of recipient, is in other state, then no TDS. So these are the 4 criteria for your TDS to be applicable. What are the 3 criteria? What are the 2 criteria for your TCS to be applicable? Supply through eco, consideration through eco. It should not be a 9-5 case. It should not be a, and whenever TCS is there, value is not relevant, it will be on supply minus supply return. Supply through Amazon minus supply return through Amazon in that month, in that particular month. And when you talk about both TDS and TCS, they are not applicable in certain cases. And you'll understand why. Understand who is deducting TDS. Basically, government agencies or government undertakings, including registered metal scrap dealer or eco, or they will pay by cash ledger. And opposite person, if I am the supplier to government for TDS, if I am the supplier through Amazon, not to Amazon, it is through Amazon, it is for me, TDS and TCS will be there. They will pay by cash ledger. I will get in my cash ledger. So they tell that when you are talking about the opposite person should get in cash ledger, if the opposite person is unregistered, if the supplier himself is unregistered, no TDS, no TCS. Supplier himself is unregistered, no TCS, no TDS, no TCS. If supplier is registered, but supply is exempt supply. Supply is, when supply itself is exempt supply, there is no need of cross verification. No TDS, no TCS. Or supplier is registered, supply is taxable, but it is under RCM. It is under RCM. No TDS, no TCS. What are the 3 cases where in spite of satisfying all the conditions, TDS as well as TCS will not be there? Supplier is unregistered, supply is exempt or taxable under RCM. I repeat, supplier is unregistered, supply is exempt or taxable under. In all these 3 cases, no TDS, no TCS, even if all the conditions are satisfied. Even if all the conditions are satisfied. What is the TDS rate? 2%. What is the TDS rate? 1% CGST, 1% SGST. If it is CGST, SGST, if it is IGST, 2%. What is the rate for TCS? 0.5%. Amendment 0.5%. 0.5% IGST. If it is IGST, CGST, SGST means 0.25% CGST, 0.25% SGST. 0.25% CGST, 0.25% SGST. Next point we have already discussed. What is the due date for GSTR 7 TDS and GSTR 8 TCS? 10th of next month. Payment and GSTR 7, payment and GSTR 8, 10th of next month. 10th of, for April month, 10th May. For May month, 10th June. For June month, 10th July. So on. Last 2 points, not relevant. Last 2 points, not relevant. I'm not even focusing on the last 2 points. So don't focus much on these. Last 2 points, extra points, forget about it. Are we guys clear with this understanding? Are we guys clear with this understanding? So when you talk about your TDS and TCS, you should know these important aspects. You should know these important aspects. Conditions are there for TDS, conditions are there for TCS, and rate for TDS is 2% and it is 0.5% for TCS. 0.5% for TCS. Government agencies, government undertakings or a registered metal scrap dealer will pay TDS and supplier will get TDS. They will pay in cash ledger, supplier will get in cash ledger. Eco, Amazon will pay TCS by cash ledger and opposite person, supplier through Amazon will get in cash ledger. Will get in cash ledger. Right? So the questions will revolve only on the conditions when TDS and when TCS is applicable. Just to complete it, metal scrap dealer. Metal scrap dealer. Remember this important point because it will come in RCM chapter also. Only we are talking about your metal scrap dealer. So when you're talking about your metal scrap dealer, what if the supplier is registered and what if the supplier is, what if the recipient is registered and unregistered? So we are talking about registered. When RCM is there and when TDS is there. When your RCM comes into picture and when your TDS comes into picture. Supposing you're talking about your metal scrap dealer. Okay, a little orally now. If at all, assume supplier is unregistered, recipient is registered. Supplier is unregistered, recipient is registered. If supplier is unregistered and recipient is registered, supplier is unregistered and recipient is registered, it is RCM. It is RCM. You'll have RCM for that. Where supplier is also registered. When RCM is there, there's no TDS. Just now we have discussed. When RCM is there, there's no. If supplier is registered and recipient is also registered, then you cannot have RCM FCM. So GSC will be collected. GSC will be collected at right rate, 5 or 18 or 12, whatever rate. GSC will be collected by the supplier. Recipient can take the credit. In addition to it, recipient will deduct TDS, file in a separate return GSTR 7, pay by cash ledger, and the opposite person will get in cash ledger. Opposite person will get in cash ledger. So when you talk about your TDS and RCM combo, what is going to happen? If supplier is unregistered, recipient is registered, there is no TDS, there is RCM. There is no TDS, there is RCM for a metal scrap dealer. And the supplier and recipient both are registered, there is no RCM, there is TDS. There is TDS. So this area you need to remember. You can stop it for some time, then turn it on. Thank you. Now this completes a small topic, ego, TDS and TCS, important area. Not very important, okay. At times, it's maybe on the once in 3-4 attempts, they touch few areas and that too mainly for your MCQs. Mainly they put in case studies and try to give MCQs. Separate question, not many a times we have seen any separate question on your TDS and TCS. Now, we have seen your payment, return filing, TDS, TCS small part. So what we'll do, we will take your important topic, which is actually your registration topic, I could not find the file where already examples were mentioned. So we'll take the file without those examples. I will write examples. Right? So we'll write those examples wherever required. Now the important area here, first is an area where you're talking about state-based registration. First is an area where you're talking about state-based registration. So put a 3-star for your state-based registration, and that too only when you're talking about entire India, rather one state, multiple registration. Not the first part, the second part. One state, multiple registration. Now, normally, what is the understanding that you have? If you're there in one state, how many registration you have? If you're there in one state, how many registration you have? One registration. If you're there in 5 states, if you're there in 10 states, 10 registration. Correct? So that is the understanding that you have. Now, you can do this one thing for some time. Like this. So only my voice would be visible now. If at all you're talking about a situation where you're talking about 5 states, 5 registration. Within a state, can you have multiple registration? One is mandatory, one is optional. One is your mandatory multiple registration, one is your optional multiple registration. So one is actually mandatory, one is actually optional. Supposing you're there in Tamil Nadu and Karnataka, by default, if I ask this question, how many registration you will tell? You will tell 2. You will tell 2. Now I'm just trying to tell you certain things. For some time this will take time. This is sorry. Okay. So if at all you're there in Tamil Nadu and if you're there in Karnataka, the moment I tell Tamil Nadu and Karnataka, how many registration you have? Supposing there's a company VJ Limited, and this company is having its presence in Tamil Nadu and Karnataka. By default, how many registration you will tell? Correct. I'm changing this now. Tamil Nadu is having totally 5 branches. 4 in domestic tariff area, normal India. India other than SEZ is domestic tariff area. 1 in special economic zone. In Karnataka, you have 10 branches, 8 in domestic tariff area and 2 in special economic zone. And out of 5 branches, 3 are in textiles, 2 are in jewelry. Out of 10 branches, 6 are in textile and 4 are in jewelry. Whether you are in textile or jewelry is irrelevant data. It is not relevant. So that might be given, but it's not relevant. It is not relevant. Now, how many minimum registration will have? Minimum. I'm not talking about maximum. Minimum. Minimum registration in Tamil Nadu will be, minimum registration will be 2. 4 for all the domestic tariff area, 1 for special economic zone. Mandatory multiple registration. Mandatory, and in Karnataka, it is not 3. So that is the CBSE FAQs for both these SEZs. You can have 1 registration and all the 8 domestic tariff area branch 1. So minimum in Tamil Nadu, suddenly from 1 plus 1 it becomes 2 plus 2. Normal question if I ask Tamil Nadu and Karnataka, 1 and 1. Now suddenly it becomes 2 and 2. So all domestic tariff area, 1 registration, all SEZ, 1 registration mandatory. Is it optional multiple registration or mandatory multiple registration? Mandatory. It is mandatory multiple registration. It is mandatory multiple registration. This is actually mandatory multiple registration. And what is the maximum registration that you'll have in your Tamil Nadu? You can have for each place of business. Each place of business. So how many branches? 5. So each you can have 5, totally 5 ma. 4 in domestic tariff area and 1 in SEZ. So I'm talking about maximum. Maximum will also include SEZ. Branch means also there is a branch in SEZ. What is there in SEZ? What is there in my SEZ? SEZ is also there is on my branch. So my branch includes 4 in domestic tariff area and 1 in. So that is also part of my branch. SEZ is not a separate company, it's also part of my another branch. Just like my another branch, normal branch, it is a branch, but it is not there in domestic tariff area, it is there in my special economic zone. So that is also my branch. Now, how many maximum registration in Karnataka? 10. So totally 10 branches, 8 in DTA and 2 in SEZ. Each one of them I can take separate registration. I can go with any combination. 2, 3, in Tamil Nadu, 2, 3, 4, 5, any permutation combination. I need not go with textile and jewelry. I can go with southern part of the state and northern part of the state. Southern part of the state, few may contain textile, few may contain jewelry. Northern part of the state, few may contain textile and few may contain jewelry. I can do that. Likewise, same is true for Karnataka. Same is true for Karnataka. Right? So the one first was the area where you're talking about mandatory multiple registration. Mandatory because of SEZ. Second, optional multiple registration for each of my place of business. For each of my place of business. So this is an important area where you need to remember. Now, here we are talking about why you are taking registration. Why you are taking registration. So why you take registration? This chart. Why you take registration? Registration can be taken by SSC or can be suo motu given by department. Why SSC will take registration? Either he is liable for registration under section 22 or 24 or voluntary registration under 25 subsection 3. Either you are liable under 22 turnover based or 24 compulsory or you are taking voluntary registration. Right? Why department will give you suo motu registration? Either only one scenario. You are liable for registration, but you did not apply for registration. Why SSC will take registration? 2 reasons. You are liable, you take registration. You are not liable, you go for voluntary registration. Why department will give suo motu registration? You are liable, but you did not apply. So one is by SSC, one is by suo motu department. Amendment is only by SSC. It can never ever be by department. Registration by SSC or by department. Amendment is only by SSC. Core field important, non-core field not important. Core field important, non-core field non-important. Core field amendment. You are talking about change in legal name, PAN card name, change in legal name or something to do with place of business, adding place of business, removing place of business, changing principal place of business, or something to do with main persons. Adding partners, removing partners, adding directors, removing directors, changing Karta, changing CEO or authorized signatory, changing authorized signatory, something to do with person. Not any person, main persons. Clear? So it is name, place, person. Name, place, person. Examples. This is not an exhaustive list. Examples. Examples of non-core field amendments. Change in trade name. Trade name. It's not the legal name. Change in trade name. Right. So lot of products that you are seeing, it's only trade name. It's only trade name. Change in your trade name. Right. Or change in mail ID and mobile number. You'll get one-time password and you'll automatically do it. OTP you'll get. By one-time password you'll get for changing the mobile number and mail ID and it will happen. Non-core field. Officer's role is not required. Officer will not intervene. Registration is by SSC, 2 cases, by department, 1 case. Your amendment is only by SSC, core field and non-core field. Few examples you have seen. Cancellation. First 4 cases can be by SSC or department and next 10 cases is only by department. So first 4 cases either by SSC or mainly by SSC but can also be by department. Last 10 cases only by department. Suo motu by department. Now, please understand, suo motu by department will come when you are doing something wrong. Even for registration, it came when you are doing something wrong. Now, when you are talking about the first 4 cases, you are not doing anything wrong. What are the first 4 cases? What are the first four cases? You're talking about stopping the business. Your business is stopped. Or you're talking about transferring your business. You're selling your business. You're stopping your business or you're selling your business. Or you're changing the business with change of PAN. The change in constitution of business with change of PAN. ABC were the partners. Now DEF are the partners. ABC were the old partners. DEF are the new partners. If at all they continue the same PAN, they'll go for amendment. They'll go for amendment. If they form a new firm, new PAN, old firm will go for cancellation. New firm will go for why? GSC number is based on PAN. Out of 15 digits of GSC identification number, your third number to 12th number is PAN. I'll give this example again. That's a partnership firm ABC and Go. Now it becomes DEF and Go. Old partners ABC, new partners DEF. If the PAN is same, you'll not go for cancellation and new registration. What you'll do? You'll go for amendment. First, you'll go for legal name amendment. Legal name, code field amendment. Then you'll go for person amendment. You'll add DEF as partners and remove ABC. So you'll go for amendment. You'll go for, but if PAN changes, DEF and Co is having a new PAN, then old firm ABC and Co has to apply for cancellation. New firm DEF and Co has to go for new registration. New registration. So here, change in constitution with change of PAN. With change of PAN. If it is the same PAN, you will not come for cancellation, you will go for amendment. You will go for amendment. And finally, taxable person is no longer liable for registration under 22-24. Or he took voluntary registration, now he wants to opt out of voluntary registration. Why SSC took registration? He was liable. Now he is no longer liable. Or he took voluntary registration. Now he wants to get out of. He was liable. He took registration. Now he is no longer liable. He'll apply for cancellation. Or he took registration because of voluntary registration. Now he is not interested in voluntary registration. He wants to opt out of voluntary registration. Opts out of. So what are the four cases where SSC will go for cancellation, or department can also initiate? Discontinuance, transfer, change in PAN, change in constitution with change in PAN, and no longer liable, or opting out of voluntary registration. Opting out of. Nice. Now, what are the cases where department will suo moto initiate cancellation? SSC is not conducting business from declared place of business. He is not doing business from declared place of business, which means he is doing business from secret place of business. His business is done from a place of business which is not there in the registration certificate, which is not there in the secret place of business. Or he is doing bill trading. He is giving only invoice, no supply, only bills, no actual supply, only bills, bill trading. He will never pay output tax, but the opposite person will take IDC, cheating the government, cheating the bill trading. Or he has took fraud registration. Registration itself was obtained by fraud, willful misstatement, or suppression of acts. Wrong address, wrong person's name, Benami registration, Benami fraud registration. Or you are not updating bank account within time. So please remember the timeline for updating bank account. I'll take here itself an important area. It is 30 days from the grant of registration or due date of GSTR 1 or IFF, whichever is earlier. Whichever is, if you have got registration on 10th of June, 10th of June, what is the first return that you will file? June return. What is the first return that you will file? Though you may include April, May and June transaction, but return will be only. So 10th of June you have got the registration. 10th of June you have got the registration. 30 days from 10th of June. 30 days from 10th of June will end on. June will have only 20 days. So end on 10th of July. 10th of, what is the due date for GSTR 1 of June? July 11th. Which is earlier? Which is earlier? Before 10th July, update your on the portal, give your bank account details. Give your, otherwise it will be cancelled. Otherwise it will be cancelled. Clear? Updation of bank account should be within 30 days of grant of registration or due date of GSTR 1 IFF, whichever is earlier. Whichever is, or the registration given just now will be cancelled. Registration given just now will be cancelled. Updation of bank account or anti-profiting, not relevant now because anti-profiting was there only till your 31st of March 2025. So anti-profiting is no more relevant. You're having more profit. Your cost is reduced, but you're not reducing your selling price. Because of more ITC, your cost is reduced, but you're not reducing your anti-profiting. Not relevant, not discussing. Or there are cases where if you're covered by 86B, not an important area, but there is a provision if your taxable sales in a month is more than 50 lakhs. Taxable sales, not exempt sales, not zero rated supply sales. Then minimum cash payment should be 1%. So you might have huge credit, more credit than your output tax, but still 1% should be paid by cash. 1% should be paid by cash. You're not fulfilling it. You're not fulfilling it. Or you're claiming excess ITC. You're claiming ITC even on block credit, even on, or you're paying less output tax. How? Your sales in GSTR 1 or IFF is 10 crores. But in 3B, you're showing only 1 crore. So you're paying only on 1 crore. But you're passing the credit on 10 crores. Because when you show it on GSTR 1 or IFF, opposite person will get in 2B. Right? You're paying less output tax. More credit, government is having a problem. Less output tax, government is having a problem. Or you're not filing your returns. You're not filing your continuous 6 months return. 6 months return. Continuous 6 months GSTR 1 or 6 months GSTR 3B or 6 months GSTR 5 or 5A. Right? But wait. For few people, there is no monthly return, there is quarterly. QRMP scheme, it is quarterly return. So 6 months becomes, if you are under QRMP scheme, 6 months becomes not filing for 6 months or 2 quarters. This is for all the persons other than composition scheme. For composition scheme, you don't file monthly or quarterly, you file yearly. You file, so you are not filing your one composition scheme return. So it is not multiple returns. Now it is only one return, even after 3 months of due date. Now only we discuss your composition scheme return due date. GSTR 4 is after the year is over 30th June. After the year is over. So now it is not multiple returns. It is not 6 returns, 6 months returns or 2 quarters returns. It is only one yearly return, one which you are not filing even after 3 months of due date, which means 30th June of next financial year is the due date. July is over, August is over, September is over. Till now you have not filed your GSTR 4. Look at this. A normal assessee will either file monthly return or quarterly return. 6 monthly returns or 2 quarterly returns. Composition scheme will always file yearly return. So one yearly return not filed even after 3 months of due date. Even after 3 months of due date. Right? So that is the point. And at times your registration will be suspended, cancelled, and finally you will get revocation order. Finally you will get, which means after that there is a rebirth. Your registration is cancelled, but again it is becoming alive. It is becoming, the moment it is becoming alive, you have to file all your returns within 30 days. All your returns within 30 days. If you are not filing it, the registration was dead, it became alive, and you are not filing your pending returns within 30 days, it will become dead. You remember in ITC chapter, I did not discuss on special time limit. I said we'll understand in registration. Now you'll understand. If you go back and take that ITC chapter page, and if you go back and see your condition number 8, time limit. Condition number, time limit is what? 30th November of next financial year or actual date of annual return of that financial year, whichever is, right? That's the special time limit. When your registration is cancelled and it is again revocated, then the time limit is normal time limit that we have discussed, or 30 days after revocation, whichever is, no, not earlier, whichever is later, not earlier, whichever is later. So if you go back and if you touch your ITC chapter, this time limit, this particular time limit was a special time limit. I said I cannot discuss now. In registration automatically will be revising. In registration chapter automatically will be revising. Condition number 8. Condition number 8. Now, if your ITC, if your registration is cancelled, now it is again revocation, which means cancellation of cancellation. You are again reborn. What is revocation? Cancellation of revocation of cancellation. You are again reborn. Then the time limit for taking the credit is normal time limit that we discussed. Normal time limit that we discussed. Or your first return, or your first return. Again, when you are born, you are going to file group of months, one return. Group of months, one return. Your first return, which you have to file within, 30 days, whichever is later, whichever is. So your registration may be dead for about say 6-7 months, right? And later on, when you are again reborn, your time limit for taking the credit normally would have gone. But now can you retake that credit? Yes. Because when you are dead, you are not allowed to take the credit. When you are dead, you are not allowed to take the credit. You are reborn. So the normal time limit is gone. So now it is normal time limit or first return filed within 30 days, whichever is. So your original time limit would have gone, but still you'll take the credit. But condition is you should file within. Now link this. I am getting one benefit. If I do within 30 days, my leftover credit also I can take. My leftover credit also I can take. But if I don't file my return within 30 days, I was dead and now I am reborn. But if I don't file my first return within 30 days, again dead. And finally, a person who is taking voluntary registration, a person who has taken voluntary registration is filing nil returns for the first 6 months. He is doing everything right, but he is not starting his business for the first 6 months. So in this case, if you see all the other 9 cases, Asasi is doing something wrong. In this case, Asasi is not doing something wrong, but he is taking registration for no use. He has taken voluntary registration. It is not any 6 months return, like your non-filing of return. Non-filing of return is any 6 months, which means for the first 3 years you have filed your returns properly. Then suddenly 6 months you don't file. That is any 6 months. This is first 6 months. This is after you take voluntary registration for the first 6 months. All your returns are nil returns. All your returns are, you are filing on time. But they are all nil returns. You have not started your business. You have not started your department will cancel it. So how many cases are there? Totally 10 cases. What are the 10 cases? First, secret place of business. Then bill trading. Then fraud registration. Then updation of bank account. Then anti-profiteering. Then 1% cash payment. Then excess ITC. Then short payment. Then non-filing of returns, 2 categories. Finally, no business. Not starting the business. 10 cases. Repeatedly asked question. What are the cases where suo motu registration can be initiated by the department? Mention any 3 or 4. Mention any 3 or 4. Right. Here, this particular first part, put a 3 star. But this area, put a 5 star. I'm not going to take the other area. This area, put a 5 star. Adi? This area, put a 5 star. Effective date of registration. Right? This is very important, connected with multiple chapters, including ITC chapter that we have discussed already. What is your effective date of registration? Now, if at all if at all you are applying for registration within 30 days from the date you are liable, within 30 days from the date you are liable, then everything is fine. So for this, you need to understand when you are applying for registration. If at all you're talking about a scenario, if you've taken voluntary registration, if you've taken voluntary registration, or if it is suo motu registration by department, or assessee, you have taken voluntary registration, or you have taken registration because you are liable for registration, but you have applied after 30 days. In all the first three cases, your effective date of registration is date of grant of registration. When you get the registration certificate, only in this case where assessee has applied for registration, when he was liable for registration and he has applied for registration, within 30 days, then effective date of registration is old date, retrospective. It is old date when you're liable for registration. So this scenario, assuming you are liable for registration on 10th April, you have applied on 6th May. Did you apply on time? Did you apply within 30 days? Yes. Then your effective date of registration is 10th April. 10th? But if you are liable on 10th April, but if you have applied on 20th May, now your effective date of registration is neither 10th April nor 20th May. It would be, say, supposing it is granted on 6th June. Assuming it is granted on 6th June. See, it is neither 10th April nor 20th May because you did not apply on time. If you don't apply on that time, future date. Future date is date of grant of registration. But if you have applied on time within 30 days, then it is retrospective, old date. Date when you are liable. So what is the beauty of this? The beauty of this is everything will become good for you, good for your customers. Good for you. If your effective date of registration is 10th April, you will get ITC from 10th April. You will also get ITC on stock on 9th April. You will get ITC from 10th April purchases, also on stock as on 9th April, but only on inputs, not on capital goods, last 1 year. Sir, if you don't apply on time, you will get ITC only from 6th June. Forget about ITC on stock as on 9th of April. Forget. Clear? So here you will pay output tax as well as you will get input tax credit right from 10th April. Also ITC on stock. ITC on stock of inputs as on 9th April you will get. But here, in this case, you will pay output tax from 10th April. But ITC will only be from 6th June. So your first return will be April, May, June. But transactions will be different. If you have applied on time, both your output tax and your input tax credit, you will get from 10th April. Not only that, you will get input tax credit also on stock of inputs as on 9th April. But if you don't apply on time, your output tax liability is from 10th April. But ITC you will get only for purchases from 6th June. Forget about stock. This is for you and for your customers. Only if you apply on time, you can give us something called as revised tax invoice. You can give something called as revised for them to take credit. Because from April to 6th June, 10th April to 6th June, you have made sales. But you have not given tax invoice. GST number is not there. The moment you get registration, within 1 month, now it is not 30 days, within You can give revised tax invoice. I'm completing the concept of revised tax invoice. You can give to your customers. This is not for you. This is for your customers. This is applicable only when you apply on time. So for all the sales made between 10th April to 6th June, I can give to my customers revised tax invoice on or before 6th July. On or before, I'm assuming my registration is granted on 6th June in both the cases. I'm assuming my registration is granted on 6th June in both the cases. I can give my revised tax invoice to my customers within 1 month, 6th July, so that they can take the credit. For old sales made by me, my old sales is my customers' purchases. They will get the credit. They will get the credit. Revised tax invoice. So what about if I don't apply in 30 days? I cannot give revised tax invoice. I cannot give. My credit is lost. Even I am, though for the sales made between 10th April to 6th June, if at all I have collected tax from my customers, but they will not get the credit. They will not get the credit because I cannot give revised tax invoice. I cannot give. So this 30 days is very crucial. 30 days is very, very crucial. Very important. Normally a question will always revolve about either they will get directly asked about effective date of registration or they will link it with revised tax invoice. They link it with, in this case, can I give revised tax invoice to my customers? In this case, I can give, if at all I have applied within 30 days, I can give revised tax invoice to my customers and they can take the credit. If I have applied after 30 days, I cannot give revised tax invoice to my customers for the sales made between 10th of April to 6th of June. They cannot get the credit. They cannot get the credit. Right. So this is your effective date of registration. Effective date of registration. Are we guys clear with this understanding? Are we guys clear with this understanding? So this, yes please. Because it is not allowed. We have already discussed in your ITC chapter when you are taking new registration, availment of credit is only on stock of inputs and not on. See, I can take the credit on capital goods for my new purchases. Don't confuse this. Can I take the credit on my capital goods? Yes. For my purchases made on or after 10th of April. For my purchases made on or after 10th of April, I can get the credit on my inputs as well as capital goods. I am not talking about that. I am talking about stock as on 9th April. Stock as on, that is only on inputs. That is only on, please don't confuse. From 10th April onwards, whether I purchase inputs or capital goods or input service, all three, I can take the credit. But I am not talking about that. I am talking about my stock. This is a separate point. So first I said, I have to pay output tax from 10th April. Also I can take input tax from 10th April on my inputs, input service, capital goods, everything. Then I said additional point that when I am taking new registration, I'll also get the benefit of taking the credit on stock as on the previous date, so that point is only on inputs. That point is only on inputs, right? Both are two separate points and I have written it separately as well. Are you guys clear with this understanding? Right. Another important areas in this chapter is your compulsory registration and no registration. So yesterday we had seen when to take registration based on 40 lakhs, 20 lakhs and 10 lakhs. That question will be incomplete if you don't see this 23 and 24. That was 22. That was section 22. Now you're linking 23 and 24. 23 and 24. Now please understand, first we'll see 23. 23 partly we have seen yesterday itself while discussing 22. If you remember Tamil Nadu, Telangana and Tripura, in few cases, answer as per 22 was get registration in Tamil Nadu, Telangana and Tripura. But in Tripura or Telangana, you're dealing only with exempt supply and non-taxable supply. So I said, as per 22, you have to write answer that you have to take registration in Tamil Nadu, Telangana and Tripura. But as in Tripura, you're dealing only with exempt supply, you don't take registration. So final answer will be only Tamil Nadu and so first I said answer as per 22. Then bring in 23. Then bring in so 23, we have discussed something yesterday. So now we are having more clarity. 23 talks about 3 cases where you will not take registration irrespective of turnover. What are the 3 cases? Where you have exclusively, fully exempt supply, or exclusively, fully non-taxable supply, or exclusively, fully RCM supplies. Sir, RCM comes in compulsory registration, but you're telling no registration. It is exactly ulta. RCM comes for compulsory registration for recipient. All these points we are talking from the point of view of if I am making my supplies like GTA and all my supplies are under RCM, my recipients will pay. For GTA, whether the supply is taxable supply, yes, but every transaction is taxable under RCM. I will never pay tax. I will never. So it is from the point of view of supplier. When I tell exclusively means it is 100% fully exempt supplies, 100% fully non-taxable supply, 100% all supplies are under RCM. Supposing if you are under RCM, if you are under FCM, this will not help. This will not help. If you are taxable, if you are exempt, this will not help. If you are taxable, if you are non-taxable, this will not help. This is applicable irrespective of my turnover, which means whether my turnover in Tamil Nadu is 1 crore, 10 crores, 100 crores, 1000 crores. But if it is fully exempt supply, no registration. Fully non-taxable supply, no registration. Fully RCM supplies as a supplier, no registration. Clear? Clear? This is first part of 23. Second part, no registration to the extent of supply of agricultural produce. Now this point is applicable only for agriculturists, which means it is there for only for individual HUF. Agriculturist is defined in GST to include only individual, and a company can do agriculture, but it will not be called as agriculturist. It will not be called as. So what is the meaning of this? Supposing I am an agriculturist, I am an individual or HUF, and I am cultivating the land. I am not reselling. Reselling of produce is not that. It is to the extent of supply of agricultural produce, which is coming out of cultivation of land. So I am not talking about reseller. We are not talking about resellers. We are talking about agriculturalist who's cultivating and selling. Now, if that cultivator is having agricultural produce and other supplies, agricultural produce 5%, other supplies 18%, agricultural produce 1 crore, other supplies 10 lakhs. Now, on agricultural produce, though he is registered, though it is having a rate of tax, though he is registered, though it is having a rate of tax, no GST. To the extent of agricultural produce, you will be treated as unregistered person, don't pay. On other supplies, you have to pay GST at applicable rate 18%. If at all you are fitting into the definition of, agriculturist, individual or HUF, and it is out of cultivation of land. If you are not fitting into the definition of agriculturist, then you have to pay GST on agricultural produce at 5% and GST on other supplies at applicable rate 18%. So when I am not going to be fitting under agriculturist, either you are not individual or HUF, or you may be individual HUF, but you are a reseller. You are not cultivating that produce. You are purchasing and selling that produce. Clear? So these are the points of section 23. Section 23. 3 cases where a person will not take registration irrespective of the turnover in the state. Sir, what sir? Suddenly you will tell turnover and state, suddenly you will tell aggregate turnover. We are confused when to use aggregate turnover, when to use simple. Whenever the question is about big or small, about condition, whether you can come here or not, whether this will be applicable to you or not, either entry or whether it is applicable, or whether late fees will be high or low. This is all aggregate turnover, pan India turnover. Whenever it talks about calculating a number, it changes to state turnover. It changes to, I should have said this when I was actually talking about your return filing chapter. The best example to prove this statement is your late fees for your annual return. Look, when they are telling whether you are a big person or small person, they use aggregate turnover. The moment they are trying to find a number, they change to, because I may be registered in 5 states. In 4 states, I have filed my annual return in time. No late fees. In 1 state, I have filed late. Now, what type of late fees will be depending on my aggregate turnover of all 5 states? What type of late fees? First type, small. Second type, medium. Third type, big. It depends on my all 5 states aggregate turnover, whether I am small, medium or big category. But when I am talking about the number, supposing I am working in 5 states, all the 5 states 5 crores. So which category? Small category, medium category or large category? Louder. Large category. Correct. But when I am calculating the late fees, it is 100 per day or 0.25% of 25 crores or 5 crores. 5 crores. See, all 5 states it is 25 crores. Depending on that, I am coming in large category. But when I am finding out the number, it is 0.25% of, only in 1 state I have filed late. So in that state, the turnover is 5 crores. So 0.25% of 5 crores. I use 25 crores for deciding small, medium or large category. But when I decided that, whether I am small or big, which category and when I am calculating a number, it is always state turnover. It is always state turnover. So always remember that. Now talking about your 23 prima facie is over. 3 cases, no registration irrespective of turnover. 1 case, you may be registered, but if you are a agriculturalist, individual HUF and selling out agricultural produce which is coming out of cultivation of land, 2 conditions. Then, though you may be registered, though the produce is having rate of tax, beautiful provision. You may be registered, produce is having rate of tax 5%, lot of agricultural produce, strawberry and all is having rate of tax. You may be registered, your item may be taxable, but you are not going to pay tax. You may be registered and that produce may have a rate of tax. But on the supply of agricultural produce, you will not pay GST. On other supplies, you will pay GST. Such a beautiful provision. Person is registered. Item is taxable, but still no GST. Now, you are talking about your 24. We have done with 22, turnover based registration. We are done with 23, no registration, partly. Now, compulsory registration. Now, please understand, there are few cases where compulsory registration will be mandatory. What are those cases? All those special cases we'll analyze. All special persons. NRTP, special person, compulsory registration. RCM from the angle of recipient, compulsory registration. ECO paying tax under 9(5). Neither supplier is paying tax nor recipient is paying tax. ECO is paying tax under 9(5). Compulsory registration. ISD, TDS and TCS, special. ISD, TDS and TCS. Reliance Limited will have normal registration. ISD is addition, compulsory. Government may have normal registration, but TDS is additional, compulsory. Amazon may have normal registration, but TCS is compulsory. Right. Then, person making taxable supply on behalf of another person, you can write in bracket special agent. special agent. Special agent. Schedule 1 special agent. Schedule 1 special agent. Special agent making supplies on behalf of another taxable person. Principal. On behalf of another taxable person, which is principal. Special agent. Compulsory. Special agent. Compulsory. OIDRS. Supplier. Online information database access and retrieval services. Not in depth for you. I'm not going in depth for you. OIDRS supplier, but from outside India. Sitting there outside India. Online money gaming supplier. Your Rummy Circle, etc. etc. All mine OIDRS is all your apps. All your apps. Online money gaming. Rummy Circle. Dream 11. Online money gaming. Supplier is outside India. Now these are all special persons. What is the list? NRTP, RCM from the angle of recipient, RCM from the angle of recipient. Then now ECO. See, special persons and special types of tax. Special types of taxes, RCM, supplier will not pay, recipient will pay. ECO 95, supplier, recipient will not pay, third person, ECO will pay. So special transaction, special transaction. Now special persons, NRTP, ISD, TDS, TCS, your special agent, OIDRS outside India, OMG outside India. OMG, these people, two special transactions and certain special persons. Compulsory registration. Compulsory registration. So if I want to make life very simple, you write special transactions. Special transactions. RCM under 93, 94 and ECO under 95. Special persons. First you go with ISD, TDS, TCS, because you will have other registration, they are extra registration. They are extra registration. Then you talk about NRTP or special agent. Agent as per schedule 1, who's raising invoice under his own name. Who's raising invoice under his own name. Or OIDRS from outside India, OMG from outside India. CTP I'm not writing. CTP is always along with RTP. For CTP also it is on 1 and 3B. It's also 1 and 3B. I'm not writing. These all persons, there is no exception, compulsory registration as per section 24. No exception. No exception. Compulsory registration as per section 24. Right. Now, there are certain exceptions now. Now we are talking about two things discussed together. Interstate outward supply. Interstate outward supply. Interstate sales. Tamil Nadu to Maharashtra or Tamil Nadu to USA. Interstate outward supply. Or Tamil Nadu to SEZ. Or Tamil Nadu to within Tamil Nadu SEZ. Tamil Nadu to Tamil Nadu special economic zone. Interstate outward supply. Tamil Nadu to Maharashtra. Interstate outward supply. Tamil Nadu to USA. Interstate outward supply. Right. Now for interstate outward supply, goods, special goods, one category, services, one category. Goods category, normally one answer, special case, one answer. Service, normally one answer, special case, one answer. So for goods is always strict. Normally, if we are having interstate sales, even one interstate sales for goods, normally answer is compulsory registration, section 24. For services, even though you are having interstate sales, you will go with turnover based registration. For service, turnover base is 20 lakhs and 10 lakhs. 40 lakhs is not that, because 40 lakhs is only for goods. 20 lakhs and 10 lakhs. But please understand, this benefit is not given by 22. Actually, you are caught by 24. But 23 tells that, don't worry, I am helping you. And 23 tells that, follow the spirit of 22. You are actually caught by 24. Who comes for rescue? 23. But 23 tells that, I don't have an answer, follow the spirit of 22. It is not irrespective of turnover, it is turnover based. But turnover based this time is not 22. It is because of 23. 23 tells that follow the spirit of 22. 20 lakhs, 10 lakhs. For service, turnover is always 20 lakhs and 10 lakhs. Normal answer. A chartered accountant can have local clients and interstate clients. If the turnover is within 20 lakhs or 10 lakhs, no registration. If the turnover is within 20 lakhs and lakhs, no registration. But a supplier of goods, even if he is having one interstate supply, even for 100 rupees, the moment you have first interstate outward supply of goods, compulsory registration. Compulsory. Till then you can enjoy. But the moment you have your first interstate sales, supply to SEZ or outside the state or outside the country, take compulsory registration. But special means there's an exception. There's an exception for notified handicraft goods. For your notified handicraft goods, you can have interstate sales, but it will be turnover based registration. Now again, you're caught by 24, but who's coming for rescue? Section 23 is coming for rescue, and it tells that follow the spirit of 22. What is the spirit of 22 for goods? 40 lakhs, 20 lakhs, or we have discussed all the games, all the possible permutation combination when it is all about 40 lakhs, 20 lakhs, and 10 lakhs. You know how to come out of it, correct? 40, 20, or 10. 40, 20, or so we did not discuss only for a state. We brought out multiple states. Even then, when it is 40, when it is 20, when it is 10 lakhs. Clear? Normally for goods, one interstate sales compulsory. But for notified handicraft goods, don't worry. You can have local sales and interstate sales. Overall should be up to 40, 20, 10 lakhs. Don't take registration. Don't take. Once it is crossing, please take registration. For services, normally you have local clients or interstate clients. Don't worry. Don't take registration up to 20 lakhs, 10 lakhs, turnover based. The moment you cross that, please take registration. But special sector means there is exception. Exception means what? Now it will be ulta. Services normally it is lenient, but now it will be strict. For job worker services in jewelry sector, not any job work service. Job worker service in jewelry. What about normal job worker services, say in textile sector or any other sector? Normal category. It is normal category, turnover based registration. Job worker in jewelry sector. Job worker in, then it is compulsory registration. 24. Look at the way. First we discuss normally what happens. Normally for goods, even if it is one interstate sales, compulsory. But for notified handicraft goods, don't worry. Local sales and interstate sales totally together up to 40, 20, 10 lakhs. Don't take registration. If it is crossing that, take registration. For services, normally for any sector including job work sector in other industries other than jewelry industry. So whether job worker is covered in normal category, yes. A chartered accountant is covered in normal category. Even a job worker is covered in normal category, but not of jewelry sector. Not of jewelry sector. Whether you have local clients or interstate clients, intrastate supply or interstate supply, all together up to 20 lakhs, 10 lakhs. Don't worry, don't take registration. If it is crossing that, take registration. But if you are a job worker in jewelry sector, even one interstate client you have, even one, the moment there is first interstate supply, take compulsory registration. The moment there is, don't think that job worker jewelry sector will always take compulsory. No. If they have only local clients, if they have only turnover based, even the first interstate supply they make, then it is compulsory registration. Look at the heading. Don't forget the heading. Heading is interstate outward supply. They should make interstate outward supply. A job worker in jewelry sector, which is very common in the city that we are living, they will not always take compulsory registration. If their customer base is within Tamil Nadu, all their supplies are intrastate supplies. They need not worry. Clear? Now, you are talking about CTP, casual taxable person. Casual taxable person in general and in special case. CTP in general comes under compulsory registration section 24. Section, the moment you are CTP, compulsory registration. But special cases, you can go with turnover based registration. You are escaping from 24, coming in 23, and 23 tells that follow the logic of 22. 40 lakhs, 20 lakhs, or 10 lakhs. For what category? The same notified handicraft goods. The same. The same notified handicraft goods. For notified handicraft goods, even though you are having interstate outward supply, you can enjoy 40 lakhs, 20 lakhs, 10 lakhs. For notified handicraft goods, even though you are CTP, you need not take compulsory registration, you can enjoy 40 lakhs, 20 lakhs, 10 lakhs, then you take registration. Then you take registration. Clear? Clear? But when you are taking this notified handicraft goods, where you are not taking registration, even though you are having interstate outward supply, even though you are a CTP, in e-way bill chapter you will find that there is a compulsory e-way bill. They don't take registration, but government wants to track them. So can an unregistered person generate e-way bill? Answer is yes. They are not registered, but they have to generate compulsory e-way bill. They have to generate compulsory e-way bill. They are not registered, but they have to generate compulsory e-way bill through their PAN number. They will not have GST number through their PAN number. Notified handicraft goods, even if you have interstate outward supply, or if you are a CTP, even then you can enjoy turnover based registration 40 lakhs, 20 lakhs, 10 lakhs. But when they give this relaxation, they put an extra condition. You don't take registration, but you generate compulsory e-way bill. You don't take registration, but you generate compulsory e-way bill through your PAN. Through your PAN. Over. So there were some exceptions. Did we take in the previous list? In the previous list, were there any exceptions? No. In all these cases, 2 plus 3 plus 4. 2 plus 3 plus 4. In all these cases, compulsory registration. Then interstate outward supply, casual taxable person. It may be compulsory or it may be turnover based. It may be compulsory or it may be turnover based. Correct? And the last category, supplier through eco. We have discussed about eco. What about supplier through eco? What about supplier through eco? Supplier through eco. So when you're talking about eco, the case can be covered in 9.5 and other than 9.5. In 9.5, who will pay GST? Eco itself will pay GST. Neither supplier nor recipient, eco itself will pay. So what about eco? What about supplier or notified services through eco? Notified services through, in 9.5 only 4 notified services are there. Goods are not there. Where 9.5 is not applicable, you may have TCS, you may not have TCS, or you may have TCS. Because we already discussed TCS. For TCS, conditions are there. It should not be a 9.5 case. One more condition, supply should be through eco, consideration also should be through. If consideration is not through eco, TCS is not there. TCS is not, TCS may not be there, TCS may be there. When TCS is there, when TCS is not there, what will happen with eco? What will happen with supplier of goods, and what will happen with supplier of services? When TCS is there, what about eco? What about supplier of goods, and what about supplier of services? We need to understand all of them. When 9.5 is applicable, who will pay GST? 4 notified services. Who will pay GST? So eco will take compulsory registration as per section 24. We already saw in that list. We are not even talking about what will happen with supplier on notified services. It depends. When we are revising 9.5, you'll understand. It depends. They may or may not be registered. It depends. Supposing you are supplying, there is a food supply by Annapurna through Swiggy. Swiggy will pay GST, but Annapurna is already registered. So it depends. I'm not writing any answer here. Right? If it is not covered by 9.5 and TCS is also not applicable, whether it is eco or supplier of goods or supplier of services through eco, that is eco, that is a platform, supplying goods through that platform, supplying the services to that platform. All the three. It is basic answer turnover based registration section 22. It depends. Assuming you are not covered by, assuming you are not touched by 24. Assuming, supposing for goods you are not making interstate, you are not making interstate supply of goods. So normal answer, turnover based registration 22. Turnover based registration 22. Right. So it will be turnover based registration. For eco, turnover will be 20 lakhs, 10 lakhs because it is commission. For supplier of goods, turnover will be 40 lakhs, 20 lakhs, 10 lakhs. For supplier of services, it will be 20 lakhs and 10 lakhs. Turnover based registration with section 22 itself, base section 22. If TCS is applicable, eco has to take compulsory registration. For TCS, again, see the list, compulsory registration, compulsory. But supplier of goods will take turnover based registration, not because of section 22, but because of section 23. First, it is covered by 24. Who's coming for the help? 23. What 23 is selling? Follow the logic of 22. Follow the logic of, and supplier of services will also take turnover based registration. Again, not because of 22, but because of 23. Prima facie, they have to take compulsory registration. But who comes for rescue? 23. What 23 tells? Follow the logic of 22. Follow the logic of 22. When 9.5 is applicable, eco compulsory. Supplier of notified services depends. When 9.5 is all not applicable and TCS is also not there. Whether it is eco or supplier of goods to eco or supplier of service to eco, turnover based registration, main provision 22. Main provision 22. When 9.5 is not applicable but TCS is applicable. But TCS is applicable. Eco has to pay TCS. Eco compulsory registration. Eco supplier of goods, turnover based registration, but not because of 22, because of 23. It is caught by 24. Who's coming for rescue? 23 is coming for rescue, but logic of 22. Logic of, likewise, supplier of services, caught by 24 compulsory registration, but who's coming for rescue? 23. But 23 tells follow the logic of. So turnover based registration, both supplier of goods and supplier of services, but based on 23. Not based on 24. Logic is of 22. Sorry. Based on 23, not based on 22. Logic is of 22. Turnover based. Logic is of 22. Turnover based. But section is 23. Section is for goods, turnover will be 40, 20, 10 lakhs. For services, it will be 20, 10 lakhs. Now, extra points. For goods, they have to promise that they don't make interstate supply. And they have to take enrollment number only in one state, pan India. Two things special. They have to promise that they'll not make, because the moment they make interstate supply of goods, again compulsory. They have to promise that they'll not make, and though they are not taking registration, they have to take enrollment number. They'll be having some contact with GST department. Enrollment number which you can take only in one state across India. One enrollment number only in one state across India. One enrollment number only in one state across India. For services, no. Can you have interstate supplies? Yes. Should you take enrollment number? No. Can you have interstate supply services? Yes. We have seen in services. Can they have interstate supplies? Yes. Should they take enrollment number? No. For services, it is all very lenient. They need not have, they need not have enrollment number. No concept of enrollment number. Can they make interstate supply? For service sector, yes, intrastate as well as interstate together can be up to 20 lakhs and 10 lakhs. So they need not promise that they will not make interstate supplies. And they need not take any enrollment number. They need not take any enrollment number. Are you guys clear with this understanding? So this completes your when to take registration concept. When to take registration is answered by 22, 23, 24, all of them read together. They are all interconnected. They are all, which section is most powerful if you have understood everything? Which is most powerful? No, 23. 23 helps out U from 24 in a lot of cases. Which is most powerful? 23. See, your prima facie, lot of answers were compulsory, but who helped you out? So, which is most powerful? No registration, 23. Then 24, compulsory registration. Then 22, turnover based registration. Which is most powerful? 23, no registration, no need of registration. Then 24, compulsory registration. Then 22, turnover based registration. So that is the sequence where these provisions are taken. So this is a very, very important area. Put a 5-star where you're talking about your liability for registration. 22, 23, 24. 22, 23, 24. It is 22 we have already discussed. So only this page where you have 23 and 24. Where you have 23 and 24. Put a 5-star. Put a 5-star for that area. Put a 5-star for that particular area. And the last portion of this chapter, which is extremely important, is your CTP NRTP. So take that page, put a 5-star for that CTP NRTP. Repeatedly asked question. Rather, even in the yesterday's paper discussion that we had, there was a question of CTP NRTP. There was a question about CTP and NRTP. Right? So you are putting 5-star. Basically, if I want to summarize registration chapter, where are the questions generally lying? Suo motu cancellation, generally. Second, effective date of registration. Third, your 22, 23, 24. Fourth, CTP NRTP. And very rarely, I have put only 3-star for that multiple registration within the same state. For that multiple registration within the same state, 3-star. Not so important, but okay, important. Multiple registration within the same. We took example of Tamil Nadu and Karnataka, correct? 4 in domestic tariff area, 1 in SEZ, 8 in domestic tariff area, 2 in SEZ. Mandatory multiple registration, optional multiple registration. So that area, 3-star. Now CTP NRTP is very special, and we have already discussed the meaning of CTP NRTP by taking an example some time back. Let us recall that example. Adani of Gujarat is coming to Tamil Nadu for a business exhibition. Adani is a regular taxable person in Gujarat, but casual taxable person in why? He's coming for business exhibition, occasionally undertaking transaction of supply of goods or services in course or furtherance of business. In what state? In a state where he's not having any place of business. In a state where he's not having any in Tamil Nadu, he's not having any place of business. Sir, if Adani is having branch office in Tamil Nadu, then Adani is regular taxable person in Gujarat, also regular taxable person in Tamil Nadu. He can participate in business exhibition in Tamil Nadu by adding that as additional place of business. No CTP will come. No CTP will come. Right? So look at the language in which the entire thing is drafted. You're talking about a scenario where you're coming to that state. Occasionally means for time being. Occasionally means for time being, for taking transaction of supply of goods or supply of services in course of furtherance of business. In what state? You're coming to that state where you're not having any place of business. If you're already having place of business, Adani is regular taxable person in Gujarat, also regular taxable person in no CTP. Clear? Right. Now, what is NRTP? In the same example, I took Trump. Right. Trump is also coming to India, specifically Tamil Nadu, for a business exhibition, occasionally undertaking transaction of supply of goods or supply of services. For Trump, there's no condition of business. You cannot find out whether he's coming for business or not. So first you will ask him to register. So business criteria is not that. Business criteria is when he is coming in India, though he'll be taking NRTP registration in Tamil Nadu, what is the check? He is not having any fixed place of business or residence, not only in Tamil Nadu, throughout India. Not only in Tamil Nadu, throughout India. Sir, Does it mean that all foreign companies, when they are coming to India, they are NRTP? No. If Trump Incorporation was having a branch in Tamil Nadu, then Trump Incorporation would be regular taxable person in Tamil Nadu. If Trump Incorporation is having a branch in Gujarat and coming to Tamil Nadu for business exhibition, then Trump Incorporation is regular taxable person in. If I don't tell this, your mind will always tell that Trump Incorporation means no. Within Tamil Nadu, can Trump Incorporation be a regular taxable person? Yes. If having a branch in Tamil Nadu, regular taxable person in Tamil Nadu. Can Trump Incorporation be CTP in Tamil Nadu? Yes. Trump Incorporation having a branch in Gujarat, but coming to Tamil Nadu for business exhibition. So Trump Incorporation is regular taxable person in Gujarat, and it will NRTP will not even come. Clear? This is from your definition. Now certain special things. CTP registration is based on PAN and he'll apply a normal registration form. NRTP registration is not based on PAN of Trump or Trump Incorporation. It is based on PAN of authorized signatory. It is based on PAN of if I am representing Trump or Trump Incorporation, individual or a company. It is based on my PAN. It is not based on PAN of Trump or Trump Incorporation. It is not based on PAN of Trump or Trump Incorporation. But whether Trump or Trump Incorporation will give some proof? Yes, they'll give the proof. If Trump is individual, passport of Trump. If Trump Incorporation is company, that company in USA will have some number, right? Like in India, we have corporate identity number, SIN number, corporate identification number. So Trump Incorporation in USA will have some identification number in its country. That. So when NRTP is taking registration, it is based on PAN of Trump or Trump Incorporation? No. It is not based on PAN of Trump individual or Trump Incorporation company. It is based on what? PAN of authorized signatory, which means in our example, I took my name. So supposing I am authorized signatory. So it is based on my PAN. It is based on my PAN, but I should be Indian resident and I should be having valid PAN. I should be individual and I should be having valid PAN. Whether Trump will give some proof? Yes, passport. Whether Trump Incorporation will give some proof? Yes, some identification number in that country. Right. Now, what are the returns filed by CTP? We already discussed that. 1 and 3B, final return 10 is applicable. What are the returns filed by NRTP? Only GSTR 5. Only GSTR, final return is not applicable. Final return is not, and for both of them, annual return is not applicable. For both of them, annual return is not applicable. For both of them, it is not applicable. What are the provisions of ITC? We already completed. CTP will get normal ITC, just like regular taxable person. But NRTP will not get any ITC, except IGST portion of customs duty on import of goods. IGST portion of customs duty on, don't tell IGST. No, it will not get IGST credit also. It will get IGST portion of customs duty. IGST portion of customs duty on import of goods. So this is all that we have already completed. Yes. Then what are the special points? Now we are starting the special points. We have seen the definition. We have seen what happens in registration. We have seen what happens in return filing. We have seen what happens in ITC. Different chapters. Different. Now what happens in detail in registration? Normally, I'll ask one question. You give me answer. It's done. Normally, if I am liable for registration, I have to apply for registration within dash days. Louder. But they have to apply in advance. They don't have time. Before they are coming for business exhibition, they have to apply for registration in advance. 5 days in advance. At least 5 days before commencement of business. Other persons, after that event, 30 days. These people, before that event in advance, 5 days. Supposing business exhibition is going to start in Tamil Nadu on 1st April. 1st April. They have to apply for registration when? They have to apply for registration when? They have to apply for registration on or before? On or before? 26th of March. On or before? Advance. Okay, sir. We'll assume that they have applied on 20th of March. We'll assume that they have applied on 20th of March and grant of registration is on 5th of April. 5th of April. When they can participate in business exhibition. Did they apply on time?
Yes.
Did they apply on time? They should have applied on or before 26 March. When they have applied? Did they apply on time? So when you apply on time, you'll always be treated normally. But no, here, even if you apply on time, you can participate in business exhibition only after registration is granted. Which means even though you applied before time, you knew that your business exhibition is going to start on 1st April, you have to apply on or before 26 March. You already applied on, but registration is granted on. You can participate only from 5th April. Did you do your work on time? Yes, but still there's a punishment. You can participate only from 5th April. First, they have to apply in advance. Second, even if they apply in advance, they can participate only from grant of registration. Third, normally, when you are taking normal registration, do you pay any advance tax or deposit? No. But these people, before they apply for registration, they have to deposit in the cash ledger advance tax. What is advance tax? Estimated net tax liability. At least here they are bit conservative, not gross. Estimated. So gross output tax minus ITC. Estimated. So your income tax, advance tax is always based on estimated income. So here also, you pay in your cash ledger based on estimated net output tax, not tax liability. Net output tax liability. Your gross output tax may be 10 lakhs. ITC may be 7 lakhs. Your net output tax liability is so only that 3 lakhs. Estimated net output tax liability. Normal person, no advance tax, no deposit. Now normally if you are getting registered, your registration is valid till it is cancelled. It is valid forever till it is. But for them, this I have repeatedly said, even in morning, 90 days, maximum 90 days, or last date mentioned on the registration certificate, whichever is earlier. Supposing this exhibition is going to end on, say 5th June. 5th June. Registration will not be for 90 days. Officer will tell that when the exhibition is going to end on 5th June, your last date on the registration certificate will be 5th June. 90 days is yet to get over. April 30 days, May 31 days. Then you will have 29 days till 29 June. But officer will tell that when your business exhibition is going to get over on 5th of June, your registration is valid only till 5th of June. Only till. So last date on the registration certificate or 90 days, whichever is earlier. So maximum 90 days. Sir, if the business exhibition is extending, can I extend my registration certificate? Yes. Your extension is allowed, but when your extension is going, it is only allowed with two conditions. You have to apply for extension before original validity is over. You have to apply for extension before original validity is over. Second, you have to again make a deposit based on estimated net tax liability. So first, you have to apply for extension before 90 days is over. Second, you have to again make advance tax deposit based on estimated, because when exhibition is extended, you will be doing more business. Again, estimated net output tax liability, you again deposit. Clear? These are the conditions before you apply for extension. Now extension will be valid for how much time? Another 90 days. Another maximum. So it can be again another maximum 90 days. So for supposing extension is given from 5th of June. This is not 5th of June plus 90 days. Another maximum 90 days. It can be maximum 90. So max 90 plus max 90. Supposing exhibition is going to end on 31st July. From 5th June, it is going to end on 31st July. So 90 days from 5th June will be there ending in July, August, September. Correct. But exhibition is only till 31st July. So extension will be only till 31st July. Only till 31st July. Clear? Clear? So can you apply for extension? Yes. Condition number 1, before original validity is over. Condition number 2, again pay advance tax, estimated net output tax liability. Whether extension will be for a long time? No, it will be for a short time. Whether it is 90 days? No, it is not 90 days. It is maximum 90 days. It is maximum. Last question to end this. Can you apply for second time extension? No. If at all you are coming for second time extension, they'll tell, please have a branch. Please have a. Why are you coming again and again? Please make a branch. Take a regular taxable person. Take RTP registration. Take RTP registration. So extension is allowed only for one time for any exhibition which are running for more than 180 days. Don't come for CTP and RTP. Come for regular taxable person. Come for regular taxable person. If your business exhibition is going to run for more than 180 days, don't even initially itself don't even come for CTP and RTP. Come for regular taxable person. Come for regular taxable person. Are you guys clear with this understanding? Are you guys clear with this understanding? So this area, I already said 5-star, very, very important area when you're talking about your CTP NRTP. CTP NRTP. Are you guys clear with this understanding? Are you guys clear with this understanding? So important areas where you're talking about your CTP and NRTP. Rather, all the importance areas of registration chapter we have completed. All the important areas. Whatever is repeatedly asked, we have completed. Only one small point where if you are dying, can you come for rebirth? After your death, can you come for rebirth? Can you come for rebirth? Yes. So remember the small point. You can come for rebirth. You can come for rebirth. Only when you are murdered, not when you are committing suicide. Only when you are murdered, not when you are committing suicide. If you have applied for cancellation, you cannot have revocation. Only when you have been killed, which means it is suo motu cancellation by department. So revocation first is possible only when cancellation is done by department, not suo motu, not by SSC himself. When it is done suo motu by department. Second, after cancellation is done, you should apply for revocation within 90 days plus 180 days extension. So this has been repeatedly touched in your MCQs. 90 days plus. Other timelines, I'm not worried. So one timeline, 30 days for registration, very, 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 very important. Very extremely important. You have to apply for registration within. Likewise, this is not so important, but yes, important. So once you are dead, can you come back? Not in suicide case, but in murder case. If your cancellation is by department. What is the timeline? After cancellation, apply within 90 days. Plus, there can be an extension of 180 days by joint commission or additional commission. That can be an extension. But maximum 180 days. Maximum 180 days. So 90 days plus 180 days extension. Clear? Clear? So this is all and all about your registration chapter. Now, before we go for lunch, maybe 1:05 is the time. Maybe I'll be stopping by 1:20, 1:25. Right, before we go for lunch, we'll see one chapter where there's no such great importance. But yes, time and again they've been testing these questions of late. Of late, ICAI is asking questions about it. I actually used to call this chapter as abandoned child. It was treated as like an abandoned kit. So if you see in the last 3 papers or 4 papers, now you get questions on e-way bill. Initially, questions are never even asked about e-way bill. Right? So it is an abandoned kit, but now taken proper care of. So nowadays, ICA is asking certain questions from this particular topic. So I'll be only touching your important core areas. First and foremost important area. This yesterday also there was a question in MCQ. Rather, if you see yesterday's question paper, May 25, the recent exam that you had, one question was there in your MCQ, 2 marks. Then there were other 2 questions in your question 7 and 8. So look at the priority. So I was, if you see my old recordings in your YouTube and all, I will not be even touching this chapter 1 or 2. It's not at all important. It is treated like abandoned kit by ICA. Right? Suddenly, the last paper, this chapter which is least important. So if you see the questions, if my memory goes right, it was 2 marks MCQ and 1 mark it was your 138C. So 3 marks rather and 5 marks. So total 10 marks. 10 marks from this chapter. From 0, the journey is still 10 marks. This is not an ITC chapter where you get a question for about 10 marks. So suddenly the importance became more. Right? So we'll only see this important areas. Now I cannot call it as abandoned kid anymore. I have to treat it with some dignity. Right? Now whether e-way bill is the main document, no. e-way bill is not the main document, it is a supporting document. First point. 2 important thumb rules. E-way bill is a supporting document. There will be an invoice with e-way bill. There will be a delivery challan with e-way bill. Or there will be a bill of entry in customs with e-way bill. Or there will be bill of supply with e-way bill. Invoice, e-way bill. Bill of supply with e-way bill. Delivery challan with e-way bill. Or there will be in customs import of goods. Bill of entry with e-way bill. It's a supporting document. It's not main document. Main documents are all invoices, main document, bill of supplies, main document, delivery challan is main document, bill of entry is main document. They are the basic documents. This is only a supporting document. This is only a second important thumb rule. It is only for movement. It focuses on movement. It focuses on movement. It focuses on movement. It is not dependent on supply. It focuses on movement. It focuses on movement. So what are 2 thumb rules? Supporting document, movement, not supply. Supporting document, movement, and not supply. And e-way bill uses a word called as consignment value. For interstate movement, e-way bill is required if the consignment value is more than or equal to 50,000. If it is more than or equal to 50,000. What is meant by consignment value? What is meant by consignment value? Consignment value is equal to transaction value plus GST minus value of exempt goods. Consignment value is equal to transaction value plus GST, including GST, minus value of exempt goods, minus for interstate movement. Sir, we are not talking about intrastate movement because intrastate movement, the limit will be decided by the state. So Tamil Nadu limit will be different, Maharashtra limit will be different, Delhi limit will be different. We are not worried about it. We are worried only about interstate movement. We are worried only about. So for intrastate movement, whether e-way bill limit will be there? Yes, but it will depend from state to state. The limit will be decided by each state separately. So we only focus on interstate movement. I am not using the word supply, interstate movement. What should be the consignment value? More than or equal to 50,000. What is consignment value? Transaction value plus GST, but other than value of exempt supply. So if within one invoice, there is a taxable item and exempt item, which was actually yesterday's similar type of question. Numbers may be different. So taxable item 40,000 plus GST 5% 2,000. Exempt item 20,000. GST will be 0. So what is the total invoice value? But what is your consignment value? Consignment value is 42,000. Actually, you can easily understand consignment value. Taxable item plus GST. Taxable item plus value of taxable item plus GST. That's the other way, simple way to understand consignment value. Is it crossing 50,000? E-way bill will not be required. Main document will go. Tax invoice, bill of supply, delivery challan, bill of entry will go. But E-way will not. E-way bill will not be there. It doesn't mean main document will not be there. Main document will be there. E-way bill will not be there. E-way bill will not be there. Clear? Clear? So, the first star mark, I'm not putting important areas on otherwise. The first 5-star mark now. This area, E-way bill will be required when basically we are talking about supply or movement. Supply or movement. Movement of goods for any reason. It may or may not be supply for any reason. Whether by road, rail, airways or waterways. When the consignment value is more than 50,000. More than, and we have discussed the meaning of consignment value. This is value based E-way bill. But there are two cases where even though the value may be less than or equal to 50,000, but E-way bill will be required. First is a case which you have discussed just now in your registration chapter. For your handicraft goods, interstate movement by your handicraft goods by an unregistered person. You are not taking registration, though you are making interstate supply, you need not take registration. For notified handicraft goods, there is a relaxation from registration, even if there is an interstate supply, and even if you are a casual taxable person, you need not take registration. So here we are talking about interstate movement by any person dealing with notified handicraft goods. That person is unregistered. Though he is unregistered, he has to generate mandatory E-way bill. When I tell mandatory E-way bill, irrespective of the value, even if the value is 10,000, E-way bill. Even if the value is 10,000, generate E-way bill. First exception. Second, when the movement is by principal to job worker from one state to another state. See, principal to job worker, there is no supply. Delivery challan. There is no supply. It is by delivery challan. Principal is not selling the goods to job worker. Principal will give an item, job worker will make an item, return it back. There is no supply. Delivery challan. But for interstate movement from principal to job worker, what is the main document? Base document? Delivery challan. E-way bill is mandatory. When I tell mandatory, what is the meaning? Even if the value of the goods which is moving from principal in one state, Maharashtra, to job worker in another state, Delhi, the value may be less than or equal to 50,000, but mandatory E-way bill. Mandatory, and that E-way bill will be against delivery challan, because the base document is delivery challan. The base document is delivery challan. Clear? So normally E-way bill is required when the consignment value is more than 50,000. Taxable item plus taxes. But two cases where there is a mandatory E-way bill even if the value is less than or equal to 50,000. Notified handicraft goods by unregistered supplier, or principal to job worker from one state to another state. That is mandatory E-way bill even if the consignment value is less than or equal to 50,000. Right? So can unregistered person generate E-way bill? They have answered yes. Unregistered person can also generate E-way bill through a enrollment number. They will not have registration number, they will have enrollment number. They will have enrollment number. They don't have registration number, but they'll have enrollment. With their PAN, they'll get enrollment number. With their PAN, they'll get enrollment number. Are you guys clear with this understanding? Are you guys clear with this understanding? This is the first area. I'm only touching the important areas. Now, second important area is validity of E-way bill. Validity of E-way bill, not 5-star and all 3-star. Validity of E-way bill. Normal case, 200 kilometers or part thereof 1 day. 200 kilometers or part thereof 1 day for everything. Right? Special case, 20 kilometers or part thereof 1 day. So normal case, if I tell 480 kilometers, Normal case, 480 kilometers. For every 200 kilometers, 1 day, 3 days. If it is a special case, 20 kilometers, divide by 20, 24 days. 24 days. Clear? Clear? So normal case and your special case. Normal case and your special case. If I change this 480 kilometers to 690 kilometers, normal case, 690 kilometers divided by 200, you'll get 3 point something. 3 point something is always 4 days. But if I take 690 kilometers divided by 20 kilometers, you will get 34 point something. 34 point something is, so special case so much. Yes. Now you'll ask, what is the special case? Special case is a scenario where you're talking about over dimensional cargo. It will be big glory in form of multi-dimension. When it is taking a turn, it cannot take normal turn. It cannot even enter the municipality limits. City limits, it cannot enter. You'll see them only in highways. Over dimensional cargo. Whether it will go fast or slow. Now you understand that. Second, where it is a multimodal shipment. What is multimodal shipment? Multiple modes. Multiple modes. Where one of the mode is ship. One of the mode is ship or vessel. Which means if it is road vessel, slow. Rail vessel, slow. Air vessel, slow. But if I tell it is road and rail, normal. Road and rail, normal, 200 kilometers. If it is road and air, normal, 200 kilometers. Fast, both are fast. If it is rail and air, normal. See, problem comes when? Partly by road, partly by vessel, slow. Partly by rail, partly by vessel, slow. Partly by air, partly by vessel, slow. So 20 kilometers will be there where one of the mode is vessel. Road, rail, 200 or 20? 200 or 20? Rail, air, road, air, road vessel, rail vessel, air vessel. Clear? Clear? This is how you need to understand when it is normal, when it is special. And always understand that first day will always be extra. Assume that your validity is 3 days. Assume. You calculate something and you know how to calculate the validity, correct? Depending on the kilometers, you'll know the, assume it is 3 days. Assume you have generated e-way on 13th March, 11:58 p.m. midnight. So always use 13th, 14th midnight. 13th, 14th. Now understand your first day will always be more than 24 hours. So first day will not get over on 14th, 15th. First day will not get over on, first day will actually get over on 13th, 14th itself. Because midnight is about to get over. 2 minutes. So 1 day is about to get over. 1 day will complete on 14th, 15th. 14th, 15th, which means 24 hours, 2 minutes. You get extra. Then second day, 15, 16. Third day, 16, 17. So your validity will get over on 16th, 17th March, which means midnight, 12 a.m. Midnight, 12 a.m. That midnight. That is the reason I have written 16th, 17th, midnight. 16th, late night, and 17th, early morning. That 12. Right. What if I tell I waited for some time and I generated e-way bill on 14th of March, 12:02 a.m. I waited just for 4 minutes. Now your first day will not get over on 14th, 15th, it will get over on 15th, 16th. Because 0 will start from 14th, 15th. So your first day will start and complete on 15th, 16th. 15th, 16th. So it is 47 hours. 15. First day will always be more than 24 hours, less than 48 hours. More than 24 hours, less than. Then second day, 16th, 17th. Third day, 17th, 18th March. If I waited for 4 minutes, my validity would increase for 1 day in this example. From 16th, 17th March, now my validity gets extended to 17th, 18th March. 17th, 18th of March. Clear? Clear? So this validity, first how to calculate days, we have discussed. Then what about the time? What about the time? This also we have discussed. Can you extend the validity of EOA bill in exceptional cases? Yes, you can extend, but it should be exceptional case. Either commission should notify the goods or exception situation within 8 hours of expiry. Within 8 hours of expiry. Maybe there is a breakdown of vehicle, or there is a strike in the city, or lockdown. We have experienced even lockdown. So these are all exceptional cases where validity can be extended. Validity can be extended. Are we guys clear with this understanding? Right. So this is all about validity, and please understand validity starts from filling part B of EOA bill form and not part A. Part A will generate only unique number. Part A will have the main document details, invoice details, bill of supply details, delivery challan details, bill of entry details. Part B will contain vehicle details. Part B will contain. So only when you fill part B, validity will start. Validity will start. Only part B generates EOA bill number. Part A doesn't generate EOA bill number. Part A generates unique number. Part A generates unique number. So this validity was an important area. Exemption, no. This is no. Blocking. What happens if you are, there's a concept of blocking 134E. 134, yesterday's question was, not at all expected question. Least expected question. So I'm not taking that. Yesterday's question was 138C. 138C. Detailed inspection and all. So I'm not touching that. Not important. Yes, once in a while you'll get C category questions. And I've explained you that though it is a C category question, were we able to complete entire 50 marks? Going with only 5-star and 3-star, we were able to complete entire 50 marks. We went only with 5-star category and 3-star category. A part and B part. We never saw C part. So we were in that question paper, we were able to complete entire 50 marks because there's an optional question. We could easily leave that. So that was actually done. Now blocking of e-bill is when you are non-filer of return. When you are a non-filer of return, or there is a suspension of registration, your e-bill will be blocked. Sir, what is non-filer of return here? Non-filer of return here always stands at 2222. If you are a composition taxable person, you have not filed CMP 08 for 2 quarters. Payment form. It's not a yearly return. It's a quarterly payment. CMP 08 for 2 quarters. CMP 08 for 2 quarters. If you are non-resident taxable person, not filed GSTR 5 for 2 months. Composition, CMP 08 for 2 quarters. NRTP, GSTR 5 for 2 months. Because monthly. It is monthly return. What about regular taxable person and casual taxable person? They file 1 and 3B. Not filed GSTR 1 or GSTR 3B for 2 consecutive months or 2 consecutive quarters. Whether it is months or quarters, 2 consecutive months or 2 consecutive quarters. Everywhere it is 222. Right? Everywhere. So if you are a composition taxable person, you have not filed the payment form CMP 08 for 2 quarters. NRTP, not filed the main return GSTR 5 for 2 months. CTP, RTP, CTP, not filed GSTR 1 or GSTR 3B for 2 consecutive months or 2 consecutive quarters, as the case may be, depending on whether you are under MRMP or QRMP scheme. Clear? So if at all this happens, your EOA bill will be blocked, or your registration is suspended. Your registration is, it is not cancelled. Between starting of cancellation proceedings and ending of cancellation proceedings, your registration may be suspended. Your registration is suspended. We are not discussing cancelled. Your registration is, in these 2 cases, non-filing of returns, number is 2. Number is, and suspension of registration, your EOA bill will be blocked. When your EOA bill is blocked, not for your inward supplies, not for your, it is blocked only for your outward supplies. Supposing DK is a defaulter. DK has not filed his returns for the number 2. Everywhere it is 222. or suspension of registration. When he is purchasing, whether the supplier of DK can generate e-way bill? Yes. Outward e-way bill, or if supplier is unregistered, DK can generate inward e-way bill. DK can generate. So that is not a problem. But when he is making sales, he can have his purchases. When he is making sales, he will not be in a position to generate. When he is not in a position to generate outward e-way bill, he will take action. He will file his returns. He will file his, because he is not able to do his business. He'll file his returns, or he'll go to the officer and ask to revoke the suspension. Give explanation. Please don't suspend my registration. Revoke my suspension. Revoke my suspension. Are we guys clear with this entire understanding? Are we guys clear with this entire understanding? So this is your 138E blocking of e-way bill. Blocking is only of outward e-way bill, not of inward e-way bill. Only of outward e-way bill. Only of outward e-way bill. Two cases, non-filing of returns, remember number 2, and suspension of registration. Suspension of registration. Are we guys clear with this entire understanding? Are we guys clear with this entire understanding? Now, if you see the important areas of this chapter, we have completed important areas. If you see the important areas of this chapter, there are other parts of this chapter, yes, we are not touching that, but important areas, yes, we have completed. And just to give you a taste of this particular movement, I said through thumb rule, right? It's Coimbatore to Salem. It is intrastate supply or interstate supply? But it is going via Palghat. For e-way bill, will you treat it as C an intrastate or interstate? No, it is interstate movement. Though it is an intrastate supply, the movement is interstate, so I will be checking 50,000. Coimbatore to Coimbatore SEZ. It is intrastate supply or interstate supply? Coimbatore to Coimbatore SEZ. Tax will be IGST. But for movement it is intra. Though supply is interstate, SEZ means IGST. For movement, it is within Tamil Nadu. So it is intra. So I'll go with state limit. State limit for Tamil Nadu is 1 lakh. So I'll go with state limit 1 lakh. There, I'll go with interstate limit. What is the interstate limit? 50,000. Intrastate limit depends on state to state. So we know about Tamil Nadu. It depends on state to state. So we are not worried about that limit. Do not remember 1 lakh. But interstate limit is, so for first example, you will be worried about the limit 50,000. The second example, you will go with state limit. You will go with, as it is in Tamil Nadu state limit is, I said second thumb rule. In this chapter, what is relevant? Supply is relevant or movement is relevant? Supply is relevant or movement is relevant? You focus on supply or you focus on movement. The focus is on movement. The focus is entirely on movement. Please do not forget that. Are you guys clear with our entire discussion? Right, so that is all about discussion about your e-way bill till now.